market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both. We made it. Woo, woo, woo.
Well, we got a lot to look forward to this weekend. I mean, it's going to be freezing. So I don't know if we've made it, if we could like proclaim that as being a win already.
Like, I'm not leaving my house.
Yeah. I don't know. I went to the grocery store yesterday to pick up supplies for this weekend's soup, because I'm a big soup guy now. Apparently that's my thing.
You've been labeled.
Yeah, I've been labeled the soup guy.
That's how you've been sorted in the elder millennial house of hobbies.
Oh God.
You get pickleball. You get pickleball.
Soup,
you get birds. You get World War II, or you get soup.
That's a pretty sad bucket to be in. That's not the best one.
Well, I chose cross training, so yeah.
That's a good one. That's a good one. But this store was slammed. The grocery store
was it negative 8 degrees? I mean, that's why, right?
Yeah, I mean, it's like they're preparing for the next COVID. I thought everybody was going to go get toilet paper.
Some lady on TikTok was in Texas, and she zoomed out the line to get into H-E-B, the grocery store in Texas. It was like over half a mile long just to get into the parking lot of the H-E-B.
Don't you think we overdo this every time?
No, because they're like, forget your Waffle House index. What has people scared? Ted Cruz got on a plane, and so people are making TikToks. They're like, we finna die. But check the Waffle Houses, people. What is your Waffle House doing? The Waffle House always knows.
Well, nat gas is actually down for the first time ever, and by the first time I mean the first time in like the last week or so. It's down 2% this morning. So, buy the rumor, fade the news.
Gotta buy those dips. I don't know.
Mm-hmm.
So, what kind of soup are you gonna make, Nikki?
French onion. We're going wild. Yeah, it's been going all night. It's in the crock pot right now with all the onions, just like.
Because, see, that's what people don't. It takes forever to caramelize onions. People are like, 5-10 minutes. No, it takes forever.
Yeah. So I've had it in there just low and slow all overnight. And it's just, I mean, the smell in here is just, it's incredible.
What kind of cheese
I love onions. I love caramelized onions. And like, that's the best. It's perfect.
It's going to be so good. Going to throw some like little beef chunks in there, get it up. Let it go for the next 6 hours and just get all happy in there. It's going to be amazing.
I wish you had told me. Chris bought me for like, I don't know if it was for Christmas. No, it had to be before Christmas because I've been getting them for like months. Like every month I get like a box from Italy, with like Italian delicacies and stuff like that.
Another subscription that you have that just dings you for about what? What do you think? That's probably an expensive one. It got to be like $99 a month.
It's the gifts. These are the gifts that people give me. It started like with your sister when she gave me my my Spotify Christmas that I pay for each month for her too. But it's those kind of gifts. They're the ones I keep giving. But anyway, I got like a container of pre.
Are you okay?
yeah. Onions that are like browned or
okay
in a jar or something. I would have given them to you. Could have put
that would have been nice. Mm-hmm.
You could have had
that story could have been an email.
Yeah. What else you got in there? You got any like the cookies and stuff like that?
Yeah, some biscottis. I don't know. The last one I got was some pasta, some biscottis.
So is this actually from Italy or is this like Italy?
Oh no, like a person in Ohio who just goes
in
Italy. Yeah, no, it comes from Italy. Yeah.
Are you paying tariffs on that?
Probably now.
Customs? I mean, yeah.
Maybe I'm in at the pre-subscription price.
Maybe they have just like a warehouse in Jersey that they're just pulling stuff from.
Could be. Jersey, actually, I used to poo-poo Jersey all the time. Jersey over the years since I left New York, which is in the late 80s, has really upped its game. It could be some of the best food in the country, outshining Brooklyn and New York.
Wow.
Yeah, could be.
I did not have that on my bingo card.
I know, me either. Yeah.
Any particular place in Jersey that you're singling out as like the number one culinary experience in America right now?
No, but like anytime.
Is it in Weehawken?
No, but anytime like I try to talk to my friends from New York and stuff like that, they're all going to Jersey for stuff. I don't know why, but that's what they say.
To dump a body.
Yeah. Staten Island's still a shithole. That's okay though.
No.
It's nice. It's nice to live there and stuff, but it's just an old garbage dump, that they put houses on. But Jersey, you're all right.
Well, Bat, how are your winter lockdown preparations? What is going on?
They got preempted by 8 16-year-olds coming over last night.
Wow.
Yeah.
Yeah, that's a real good way to just blast through all your rations.
Yeah.
I mean, after they all like go outside and smoke a couple joints, they probably come in and eat all the food.
No outside, no outside. Listen, my house, the way it's set up, is phenomenal in the summertime. It's horrible in the wintertime. I really don't have a quintessential basement. It's more like a
den.
Yeah.
Rec room.
Watch TV and stuff like that. Be great when they're like 18, 19, or 20 if they ever want to come back, that kind of thing. But at 16, they need a hidden like basement where they go downstairs, they shut the door, and they hang and have a good time, kind of thing.
Yeah.
Unfortunately, not set up for that now. So anyway, the day before he had all his friends over, I said to him, I go, listen. No more. Let's done. I'm done with this. Okay, you and a friend, you and two friends. That's it. We're done. Yeah. Okay, Dad. Yeah. Okay, Dad. Not 24 hours after I had that conversation with him in the car, he's like, "Can I have it was 6 friends over, and it ended up being 8 friends over. And I caved. I even went so far.
You are too soft, man.
Oh,
I'm gonna call you Stay Puffed because you stay soft.
Well, they're off from school today. Well, it's like a make-believe day at school. You know what I mean? Like they have what is it? They have
they do it Zoom? They do like virtual
Zoom day where they can sign on anytime they want. It'll count as a real day kind of thing. You know what I mean?
Oh wow!
Yeah.
So
that's why China's beating us.
Yeah, that's true.
That's exactly why China's beating us. 100%. So I said to him, here's what I'll do. I go, don't come over. I'll give you guys $200. You guys go bowling or something like that.
That's good. That's smart. Okay.
Right? I figured that's good. They had 3 cars. Like, there was three kids with cars. They go, all right, maybe we'll leave after we hang out for a while, which defeats the purpose. I'll be out the $200. They never left anyway, so I kept my money. But I'd be out the $200. Plus, my house would be destroyed. Plus, I got to listen to them,
giggle
banging on the music, banging on the TV. It was just. I sat there with a bottle of wine with my wife, and I looked at her, and she looked at me, and like we tried to read the captions on the CC of the show that we were watching. Because you couldn't hear anything. It was horrible. On top of last night's midnight, the night before midnight thing. So I went to bed at 10 o'clock. I left my wife down there to deal with them. So.
Oh my God.
I know.
The financing of the bowling, that's a pretty good deal.
But that's what they're saying about like young Gen Z, Gen Alpha. Like they don't go out. They're not going out to bars. The ones that are old enough, they're not socializing. They'd rather just sit on their phones and well,
these are 16-year-olds. If you could give them a bar that they can go to, because
I mean like socializing in general. I didn't mean bars, but just going outside.
So there were a couple of girls down there too. So it was a mixed party. One of the few that he's starting to have, and he texted me, and I said to him first. I texted him, why so many people? He's like, Dad, I don't want to use the word that he used, but he's like, Dad, I'm trying to get over. Okay. You know what I mean? Like, so I said, okay. So then about an hour or two later, like 9:30, he's like, like, what time do you want everybody to leave? Because I said, it's not really a school night. You still have to, sign in kind of thing. You don't really have to pay attention or do anything, but you got to sign in and then do your work anytime before Monday. You know what I mean? So, you got to get the homework done. So these kids are going to be all, you'll have a fake picture of them. They'll be like this.
I wish I could insert that right now.
But they won't be moving. So I said to him, I said, make it an early night. So when he asked me, I said, how about 11? He goes, wow, I thought you would say a lot earlier than that, because 11 really means like midnight by the time everybody gets out and, oh, let me help you clean up, really do kind of thing. But I'll be sleeping, which I was. So he goes, I thought you'd say a lot earlier. And I told him, well, I'm trying to help you get over. You know what I mean? I'm trying to be supportive. So they were out late last night. That's my night, Vanetta. I'm sorry.
Wow.
It's you do you, man. Like it's all good. Like,
yeah, you're gonna have problems in the summer. The
summertime is great because I just kicked them outside. We have a pool.
Oh, I know, but you're gonna be
cabana.
You're like, oh yeah, it's easy. I just put them outside. You're about to have 30, little kids running around. There's gonna be them making out in the corner. It's gonna be, you're gonna have a lot of trouble. Booze, vapes. It's gonna be just
Bins.
Yeah, it's gonna be an interesting summer for you, I feel like.
Oh, it's gonna be amazing. I'm gonna sit outside, smoke a cigar, and just look at my security cameras and watch everybody having fun. Creepy guy.
Yeah, be careful.
I hear you. It's the sauna that's gonna be a problem. That's like a hidden room.
That's your blind spot.
That's my blind spot.
Damn.
Blind spot. Yeah. And they know it's like being in the yard at a prison. They know the blind spots. Sorry, Vanetta.
How was your night, Vanetta?
Nice to me. Like, I'm just chilling, dude. I'm just vibing, man. It's Friday.
Yeah, I hear you.
I'm good. We can keep talking about your teenage son as long as we want.
No. Oh, that's good.
Yep. What about you, Vanetta? Go ahead.
I went out last night, so yeah.
No shit, get out of here.
Yeah.
January 22nd. No, come on.
Yeah, with I went out with coworkers, with the marketing team. We went out last night. I did not stay super late, but it was fun. I was social. It was the marketing team and Clink.
Clink's a yes man.
He loves to party, and so he's like, yeah, I'll come out with y'all.
Yeah, I love it.
So he tells fun stories, so it's always good to just gather around.
Says I went out for a party with Clink. He is the life.
I went out with the marketing team. So
good.
It was fun, but it was very cold. That's the hard thing about Chicago is because we walked from the office, and it was a good 5-6 blocks. And, when you're going there all together, you're excited. But then when you have to walk back home, it's very cold.
Yes. Who does the marketing team have pictures of? Pete or something like that? Because you guys get budgets to go out, have fun.
No, we did not have a credit card. It was BYOB. It was.
Oh man, I'm not buying that.
Okay. But you're just jealous, man.
Of course I am.
But you left early, so you could have come out with us. Everyone was invited.
Yeah. I had to clean my fishbowl. I would have for sure.
I guess so. But we have a great show for you today. A lot of good stuff headed your way on this fantastic Friday. We hope you are warm and safe wherever you are, and that you hopefully do not have to travel. That was the funny thing on the radio this morning. They're like, "Yeah, the expressways are clear."
Yeah, that's true. You can need
nobody. Yeah, nobody was driving in today. So But we have a great show for you today on this fantastic Friday. At the top, let's see. Well, we're skipping that today, so we're gonna get into fast market today at around 8:40. Still no Jamal. So just
Jamal's hangover must be raging, man. I can't believe it since the game on Monday. Crazy.
Are we sure he didn't get trafficked? Like, are we?
Oh, that's true. That's good. That could be.
Like, does someone have eyes on it? Like, is he in the state of Illinois?
We got like a Find My Friend on him or something.
Yeah.
Can we ping him?
Yeah. Just get his Life 360, his share mine.
Which that Find My Phone and stuff is awesome, by the way.
Thanks, Boomer.
Yeah.
Well, if you ever want to know where your kids are.
Yeah.
No, that's good.
Know. Even when they're in their 30s, it's good to know.
What's good? Well, we got fast market today. So that's where viewers submit their trade ideas to the bat. Been quite the week for whippiness. So hopefully there were a few diamonds in the rough when it came to trades. But our viewer submitted trades, that's going to pop off at around 8:40. Then 9 o'clock, we have a market measures for you today. Overnight moves as zero DTE signals. I believe that's part of our zero DTE series. What's that about, Nikki?
It's a good one. So we're bucketing the overnight moves as like our kind of condition for the 0-day trade. So we're looking at, we call it flat. So it'll be inside a 0.2% move, and then kind of a small up or down move, which is 0.2 to 0.5% in either direction. And then over a 0.5% move as like our big overnight moves. And we're seeing how 0-day iron condors perform the following day. So if you have a big up move, on Monday, how does the Tuesday iron condor perform? Or if it's a flat day overnight, how does that iron condor perform? So it's a pretty cool look, something different based on the previous day.
Interesting. Yeah. But then, because sometimes we don't look at that, we call that gambler's fallacy, because it's like, oh, if there's been 4 reds, then I got to bet on black.
Yes.
God, I wish that worked.
Yes.
Right? But then we also have live from the trade desk today. We got Quentin in the house. Hopefully he's able to work from home today, but I think he has to go into the office. But Quentin gonna talk about the trending tickers going on at the Tasty trade desk. But in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Leading story. Top story. Jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's January the 23rd, and it feels like January. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Just in a series of just escalating hilarity, the Greenland Prime Minister said he doesn't know what's in the framework that President Trump announced at Davos. He said any such deal must be made by Greenland and Denmark, and he said they must respect Greenland's red lines. But basically, he was just like the Danish version of, what you talking about, Willis? But what would be your summation of thoughts for this crazy madcap week?
I mean, right now they're in a need to know basis, and they don't need to know, I guess, is where we are. I mean, that's what it sounds like. That was
Greenland doesn't need to know?
Yeah, Greenland doesn't need to know. They don't need to know.
Yeah, I don't know how much sway they have in the discussion. I think
Denmark, but yeah.
Denmark and the EU.
NATO, yes.
NATO, yes. I mean, I think that's kind of the more
Well, I don't know how much they cared. They sent 6 representatives there before this whole thing started to protect Greenland, and so I don't know. Yeah, it's a whole weird thing, man.
What are your thoughts on volatility for the week? Like, where do we go from there?
Volatility is telling you nothing. I mean, I didn't think it would get under 19. It went under 18 yesterday. 48 hours after, or 24 hours after. I didn't think it would get under 19. It went under 18. These are huge moves in volatility to the downside, the complete opposite of every headline that you would read, in my opinion, at least.
All right, cancel crash.
Now we might be, listen, we may have gone too far too fast at this moment. So you might get a little breather here, maybe a little sideways action.
Into the weekend, too. Maybe a little risk off into the weekend,
Yeah.
Well, how about this? The U.S. dollar is poised for its biggest weekly drop in a year.
Nikki, go get some coffee. He doesn't want to hear this. He's
but the shifting geopolitical landscape has weighed on sentiment about the greenbacks this week. Also, we're getting close to a decision from the Bank of Japan. But let's just talk about currencies and how we finish the week.
The dollar has been an atrocious long to be in, and I am in it in a variety of ways. It is not good. I mean, it's been a straight down move for the better part of like the last year, and you could probably attribute some of the moves in the metals, some of the moves in equities to kind of this dollar weakness across the board. The denominator for everything is getting less valuable, so everything gets more expensive. That's essentially what the market is right now. It feels like.
That's correct. And the euro and the pound are both higher this morning. Yeah. I shudder to look at what the Japanese yen is doing, but I will. Ooh, it's actually up a tick or two. It actually had a decent volatility move too. Had a wide range between the high and the low, probably 2 times the norm, but it's basically unchanged this morning.
Yeah, my long USD is probably is a bad position, but it's not nearly as bad as my short Aussie dollar position, which has done nothing but go up every single day. And I'm short Aussie dollar against the US dollar, against the Japanese yen. I'm going to have to talk to Glenn.
Well, the news came out this morning.
You're going to have a conversation with him?
Yeah.
The news came out this morning. The Bank of Japan is keeping its key policy rate steady at 0.75% as widely expected. So the Bank of Japan retained their hawkish inflation forecasts today. So if that helps. Natural gas has spiked 75% in 3 days as Arctic cold grips the U.S. Natty gas futures closed slightly higher yesterday, and that caps a 75% surge for 3 days, seeing the highest natural gas prices since 2022. More than 175 million people across the country will face snow, rain, sleet, and ice.
I mean, isn't the natural gas like already in the pipelines? I mean, like I have natural gas I use on my stove. I use it on my generator if it has to go on.
You're asking
full of gas, yes.
Yes, you are very gassy. The question is like when does this increase in price actually go into the production that's coming out of the stove that you have, right? I mean,
Uber's got nothing on nat gas with these surge pricing. They know how to do it.
Yeah, I saw a projection for New York. It was like 3 to 16 inches, and everybody's like, "Oh, great!" Thanks for that range. There could be just about anything.
Yeah.
But on a serious note, with natty gas, got a lot of emails about trying to get shorted. How do you do a short position here? Do you just sell a call spread? Do you do like a calendar or diagonal spread? You got to keep in mind that with futures, each of the contracts traded a different price. So if you're looking at diagonal spreads or calendar spreads, they trade at vastly different prices. I mean, you're talking about the front contract, which is the G contract, 4 days to go. This is the one that's expiring in 4 days.
Yeah.
The front contract, that's the tradable contract, is February. But if you're messing around with options positions there, you have about $1.50 between the spread between the prices. And so there's you just got to be careful if you're doing anything calendarized here. They call it the Widowmaker for a reason.
Well, you don't want to go calendarized here at all, in my opinion.
No.
You may get let's say you did a put calendar and you wanted it to go lower. I'm just picking a direction here because we bought a put spread in the February options, but we didn't calendarize it. We did it all in the same month, which is where I would suggest everybody look first before they do anything. But when you calendarize something, you can get the directional move you want and lose money. because the back month doesn't go in the same direction that the front month goes. You got to stay in the month. And I would stay in February 24 options with 32 days right now. That's the place to be if you're doing anything. And you can look at us. I mean, we wouldn't even go naked or both sides, even with a great Ivy rank now over 100 at 111, which means it's never been higher. Us too just did a put spread, an at the money put spread at that. So I think that's the way to play it. Big tick notional size too. So
yes.
I go to UNG if you want to do something calendarized or you want to get a lot smaller. It's 1/10 the size of NG. NG is for the 7-figure accounts, in my opinion.
Here's something funny. Defiance ETFs and Futurum Equities have jointly launched a new ETF aimed at providing exposure to stocks that they believe are of the greatest interest to individual investors. May I present to you the Defiance Retail Kings ETF, RKNG, Pop Off King. It will be an actively managed portfolio of between 30 to 50 stocks that the team believes will appeal to self-directed retail investors who are interested in tapping into high growth, high Momo investment opportunities. Retail investors have steered more than $13 billion into U.S. stocks recently. What do you think of Retail Kings?
We've tried to do this before. They had that meme ETF.
Is this a joke? It's not going to work.
I mean, the biggest problem is these aren't active. There's a rebalance time of some of them are monthly or quarterly. I mean, you can't trade the stuff that's moving on a day-to-day basis via these. It's just, I don't know.
I don't know if you can look it up. I don't know if it's trading right now. RKNG.
I don't see it out yet.
Okay,
so.
maybe not.
It's not out yet.
Not out yet. Okay, great, perfect.
But the meme ETF, they tried to do this. It's just a way to get, a nice high fee here. You call it actively managed.
Right.
You charge a 1% fee.
Right.
But you call me a king.
yeah, exactly. And you try and stick around for a couple of years and just kind of skim the top of the inflows here. So I don't think I'll be trading it.
Yeah, I don't think any retail will be, but we'll see.
Capital One, the bank, is acquiring payment startup Brex for $5.15 billion. Keep in mind, Brex was previously valued at $12.3 billion, so that's more than a 50% haircut there. But it's the latest splashy deal in the fintech space. Brex helps, I think, do equity financing for startups. It's I don't know. But anyway, they're making the deal. So COF is Capital One, and they bought Brex for $5 billion.
Good on them. I don't know.
Yeah.
Down $10 here. They had earnings after the close yesterday. So
yes.
I've never heard of this.
They're a startup that makes loans to other startups via their credit cards. So
Okay.
In other bank news, I have a lot of bank news today. Bank of America is considering a new line of credit cards with a 10% interest rate. Citigroup is also weighing new cards with a 10% rate, but they are looking at considering options to offer new credit cards with interest rates capped at 10% to satisfy President Trump's demands. Not sure if Bank of America or Citi are doing anything.
I looked at Bank of America. It's $52 and change, basically unchanged. So nothing on this.
Okay.
Hasn't again. I'm thinking about doing a lot of things too.
I got short some JPM yesterday.
And that's my next story. So President Trump is suing JP Morgan for $5 billion. He's alleging the big bank closed his accounts for political reasons surrounding the January 6th skirmish. I don't know. So he's suing JP Morgan Chase and CEO Jamie Dimon for $5 billion because JP Morgan stopped providing banking services to him and his businesses for political reasons. The banking said that they did not do that, but banks do have regulatory guidelines that they have to follow when it comes to customers and their funds. But Jamie Dimon has the opportunity to pull the most mega Uno reverse here. He's like, you know who else's banking records I have? Maybe your buddy, Jeffrey Epstein. I'm just saying.
Ooh.
Diamond's got all the files. He's got all the records. He's like, you want discovery? You want to know why we did what we did? I'm going to show you. I'm going to show everybody.
Yeah, but then that would put him under the microscope because
I'm just saying you're being sued for $5 billion. You do what you got to do.
Yeah, true. But let's back up here for a second. I mean, and JP Morgan, by the way, 303 and change. Maybe it looks like it's down $1 at 302 and change this morning. It's come down from 360 down to almost 300 where it sits right now. You know, these banks, they got it pretty good. Like, you know, they've been lawyered up for years. Like if this had a lot of merit to it, it would have had a lot more impact on the stock, in my opinion.
Sure.
I don't think Jamie Dimon or JP Morgan is worried about this. This will be a settled out of court. You watch. This will be a settled out of court.
For sure.
I wouldn't even settle at all. I'd be like, I'm not scared.
I know, but they've been lawyered up for a long time. Banks, you can't. They make fake accounts. You can't touch them. They're untouchable.
Well, this is interesting. The FDIC announced yesterday they had approved deposit insurance applications from Ford and General Motors, clearing the way for the auto manufacturers to establish industrial banks and to begin providing financial services. So yes, the Bank of GM. What?
I mean, the financing, that's probably what they want. I mean, financing is like the most profitable part of the car business.
Always that's the arm that makes the money. It's like it's like an annuity, right? Like you make a couple of dollars on the car, that's almost a fixed price. Like
it is fixed.
Out to $1,000. Sometimes it's $1,200, sometimes it's $950, but it's $1,000 on average, just to throw out a number. But that recurring dinging with the bank, that's like the annuity that just keeps paying and paying and paying.
So traditional lenders have argued against these industrial loan charters because they're saying it allows companies to improperly engage in banking without oversight. Look, I'm not saying that I am buying an RV, but maybe I've made some calls. But when I say like, hey, I have cash, they're like, we don't want cash. They're like, we want you to finance because we make more money if you, and they're like, we will lower the price if you finance. I was like,
so they don't, there's no fee for paying it early.
No, I know that. I know. So get the but it's like, it'll ding your credit for like a little bit because it's a hard.
Oh, come on. That's all bullshit.
Yeah, credit score is crap.
My credit score is 830. Thank you.
That's great. It doesn't matter if it's 830 or 750 or 740 or 730. It's all the same.
The only way it matters if it's under 600 or under 700, whatever the number is, because then they ding you for a larger.
I know, but the whole thing is just a scam because you're told you should pay cash for everything, and then you don't get rewarded if you want to pay cash for something.
Every car I ever bought, I always take out a loan. I usually take out a loan for like $10,000 or something like that, so that they do all the paperwork. They do all the changing of the license plates. They do everything. It gets sent to you.
You want to feel like a princess.
Yes, I want to feel like what it's like to be a princess.
He just doesn't like going to the DMV. I don't blame him.
I don't blame him for that.
Yeah. It's so good. It's so good. My buddy told me about that years ago. He goes, just take out a loan for 10 or 20 grand. They'll be really happy. And then you just pay it off as soon as you get your license plates. You're all done. It's beautiful.
Yeah. We had a crypto IPO yesterday. BitGo, BTGO, hit a $2.59 billion valuation. Their stock opened up almost 25% higher. Investors snapped up shares in 2026's first crypto IPO. The stock opened at $22.43 a share, way above that $18 price.
It closed it at $18.70 though. Yeah.
Okay, and we're back.
And we're back.
Yeah.
I don't know if this one's this is a really badly timed IPO.
Yeah.
I mean,
Bitcoin and these cryptocurrencies have lost their oomph.
Yes, no juice in this story.
Yeah.
In their story, in the crypto story right now.
Right.
What about like Coinbase? Can you check on them?
Coinbase, taking a look at Bitcoin. Bitcoin's down small, very, very small. I'm going to imagine Coinbase is probably around unchanged, 223.80, 223. Yeah,
basically unchanged.
Basically unchanged. Yeah, basically.
Yeah, but it's at lows, and Bitcoin got above 90K in the overnight trading, and it's now a couple dollars below, but it has looked horrible.
Yeah, it has had nothing to it, right?
Yeah.
Absolutely nothing to the upside. No velocity.
Earnings from last night, Intel reported fourth quarter earnings that beat Wall Street expectations. Hey, get it, girl. Revenue came in at $13.7 billion versus $13.4, but they did offer soft guidance, and in that sense, just everyone scurrying for the exits. Stock down around 13%, as well as some concerns about chip production. What did you do in the no-tell, motel Intel?
Yeah, I mean, the stock was down pretty much the whole overnight session into after the close.
Right, it closed at like 54 and change. It was trading around 51 to 50, somewhere in that range. Yeah.
Yeah, I don't know if I don't think earnings really mattered here. I just think there was so much upside kind of speculation here. We looked at call skew there during the last call yesterday. We also talked about it during the morning session, but everything was kind of being traded on the upside. And I think unless it's kind of a buy the rumor, sell the news type thing. The 10, 15%, that's like 3 days of price action. You take a lot of that volatility off the table. You kind of vaporize the short-term call buyers. I mean, that's kind of, it seems like a buy the rumor, sell the news.
Well, I had the perfect position on, obviously too early when I put the position on. I was on the 50. Let me take a look. I'm so sorry because I thought
you didn't have the intestinal fortitude. It's okay.
That's what the story comes out to be. I had the 50, 55, 1 by 3. So I was long 150, short 3 55s. Nice wide call spread to be long one time, short 2 extra units. But with the stock at 55, you're sitting with short delta there. You had on a position that started with about 25 delta, went to 100 delta. So I sold the 50 put, which gives me the 50 straddle one time, basically. The 50 55 straddle one time with the stock at 55. So that's a short delta position, and 2 short calls with 1 long call spread. So net short delta. But at 47, now I'm a little bit more neutral, right? I mean, on that move. So hopefully it'll be a volatility play. Volatility will contract, and I'll be golden.
Sweet.
Look to take off the loser into a winner this morning. Hopefully.
I hope so.
Me too, Adam.
Micron's business is so hot that its profits.
How hot is it?
It could quadruple in just 2 years. That's according to one analyst. A massive imbalance in memory supply and demand could directly benefit Micron through at least 2027. That's according to a William Blair analyst. And of course, Micron, one of the stocks that is added to the Retail Kings ETF. But what are you doing at Micron?
I mean, you got to love that that's, one of the stocks that's gone from, $80 last year to $400.
It's $400. Can you believe that? It really is.
That's crazy.
Yeah.
And that's the level that it's going into this ETF at.
Exactly. Yes, exactly.
Yeah.
These have been, it's been hard to trade them. I've been putting on upside call ratio spreads. And a lot of the time I'm tested within 4 to 6 hours. If I put it on,
say minutes.
yeah, a couple minutes. I mean, because these things move like $30, $40 at a time. But we'll see. Getting a little market weakness today. Hopefully these pull back a little bit.
Yeah,
They've
been crazy.
The big news coming out late last night is TikTok has said it officially formed a joint venture that will keep the video sharing app operating in the U.S. So ByteDance was subject to a national security law, but everything has been resolved. TikTok CEO will be the director of the newly formed venture. It's also going to run with input from Oracle, Silver Lake, some Saudi Emirates. But ByteDance will retain around 19.9% of the new venture, but Silver Lake, Oracle, and MGX are the managing investors. We will license the algorithm from China. No word yet on how or if any of the platform's content will change.
What do you think about this?
I mean, I'm not the biggest TikTok guy, but it was bound to happen. This wasn't going to go away. So I mean, it's good, I guess. I don't know.
But follow tastylive and Tasty Trade and Tasty Crypto. We're all on TikTok, so
It'll be beautiful.
Yeah. But this does affect Meta. What is Meta doing this morning?
Yeah, Meta had a run yesterday. Finally, right? I mean,
it was
Meta,
up like 6 or 7% yesterday.
Yeah. And Meta this morning is sitting at 642, down about $5. Sounds like a lot, but you got to remember it was around, I don't know, $600 24 hours ago. It closed at 647. So a little breather here with even the S&P down 13 and Nasdaq down 66.
And obviously, like in a best case scenario, Meta wants TikTok to go away.
Sure.
Yeah.
So, but now this is final. Everything's compliant. So no more uncertainty there. In other tech news, OpenAI chair Brett Taylor says AI is probably in a bubble, but he expects a correction in the coming years. He serves as the chairman of OpenAI's board. What are your thoughts as we are, almost through the first month of 2026 about AI bubbliness?
The same bubble we had a year ago and 2 years ago and 5 years ago and 10 years ago, same bubble.
Yeah, they've been talking about this since the bubble quadrupled, right?
Yeah. I like the probably, that's a good hedge. So if it continues for another 5 years, you could say, well, I said probably. I didn't say we were in a bubble.
Right.
Probably a bubble.
Yeah, that's true.
Yeah, I mean, if you think it's a bubble, do it. Trade it, short it, sell it, whatever. Get out, I don't know.
Alibaba is planning an IPO for its AI chip-making unit, T-Head. That's according to new reports. Alibaba's U.S.-listed shares did rise after the report. At first step, Baba plans to restructure the unit as a business partly owned by employees before exploring the IPO. What are you doing in Baba?
Baba's hanging out at 175 and change. Baba's had a nice little rally with a lot of Chinese stocks the last week or so. Baba's gone from around 150 to 175, down $2 this morning. So,
yeah, we're short both these, Baba and Baidu.
Yeah.
Okay.
Yeah.
Short delta, not like straight up short. Not like it's probably a bubble short.
Right.
We actually are kind of probably a bubble short.
That's right. Baidu, on the other hand, is going to take away some of your profits from Baba. Baidu's up $2.
Oh.
Ooh.
So you got a little bit of a mixed bag there.
Hey, Bat, I have something for you the next time you have a house full of 16-year-old kids. Google is now rolling out free SAT practice tests. All you have to do is type the prompt into Gemini saying, I want to take a practice SAT test, and then you get a free exam, and then Gemini, using AI, analyzes the results. It highlights strengths, identifies areas that need further review, and it offers detailed explanations for any correct answers. You don't have to pay a fancy tutor or a fancy learning center. Just get the kids all around. Let's do practice SATs.
I love it. That's the next party we're going to have. See,
Yeah.
That's amazing. That this will help with all the. I saw a headline tweet from some university that said basically that Gen Z was coming to college and couldn't read. So
Sure. No, I believe that.
This will hopefully help them.
So how many times did you take the SAT, Nikki?
I didn't take the SAT. We had the ACT.
Oh, okay. Nice.
I think I did it twice.
Yeah, I took the SAT twice. I think took the ACT.
Yeah.
I took the PSAT.
SAT is for the West Coast schools, I think. ACT.
No, SAT. I use the SAT to get into Indiana University. SAT
Really?
is nationwide. Yeah.
Well, I know it's everywhere, but ACT
Yeah.
is Midwest.
Yeah.
Oh.
I guess it depends. Yeah, I don't know. I mean, you're older than me, so I don't know.
That's right. That's right. Back in my day. You didn't need that one.
Bat, did you take the SATs?
Sure.
Yeah, to get into John Jay College of Criminal Justice. Come on, you got to be on the highest end of the district.
Boy leader of Arista and Archon here, and of all my friends, the only one to graduate high school. That's correct.
Oh, okay.
Yeah, everybody else got their GED or whatever it's called. Yeah.
What is Google's stock doing?
Google 330 and change, looks unchanged, stratospheric up where no man has gone before. Hasn't really had a downtick.
All right. Tesla stock popped yesterday after Elon Musk tweeted what seemed to be a video of a robo-taxi in Austin with no human safety driver. Tesla says they're offering passengers robo-taxi rides without a human safety driver in the front seat. The stock seems to pop up small on that news. I don't know if it held it. Also, Musk promised Tesla robots by the end of 2027.
Yeah, it went from not just small, decent sized move up to about almost 450. 449 is where it closed. It was up about what is that? About $12 or something like that.
Okay, yeah, I saw. I was like, why is it moving? And then I looked it up, and I was like,
it was back at 450. It's been kind of chopping 20 points on either direction of 450. Yeah. So,
IV rank has been low, so it's been keeping us out of premium selling trade. So probably more of a directional trade in the past. We'll see what volatility does today. Now that's made a little bit of a pop. I doubt it's going to move that much, but we'll see.
Western Digital stock surged into record high territory after getting a flurry of price target hikes from at least 5 analysts in just the past week. The gains add to a huge run for the hard disk drive maker that was also a top performer in the S&P last year. 5 analysts increased their price targets on the tech firm in recent days. They are set to report earnings January 29th.
I mean, these have just gone parabolic. And SanDisk was a spinoff from Western Digital. So, Western Digital or SanDisk has gone from 50 to 500 over the last year. Western Digital has gone from 20 to 200. So you got, or 240.
250, basically, 240.
Yeah, 250. So you got a 10x on a 10x. I mean, that's just unbelievable.
This is a venture capitalist or the Carl Icahns of the world dream play. I mean, they buy a stock. I know nobody bought the stock here, but then they break up the parts. The parts are worth more than the sum of the whole, and it's just it's a home run. This would have been somebody's greatest home run.
I mean, I'm in my home office right now, and I have a SanDisk here.
Yeah,
I have another SanDisk here because I'm a hobby photographer, and I have a hard disk drive over here somewhere. I have like another flash drive, and I mean, shit's getting expensive.
Yeah.
I'm hoarding it. What a time to be alive. Good for you.
Yeah. Who needs silver when you have hard drives?
I guess I should hoard my hard drives, I guess. Yeah. Spirit Airlines is in deal talks with investment firm Castle Lake as the struggling carrier seeks a path forward. They are looking for a sugar daddy, and they filed Chapter 11 protection back in August. And they are in talks with the alternative investment firm for a potential takeover as they look for a path out of bankruptcy. So
maybe Elon will buy that. He can combine Spirit and Ryanair and just make the like most budget airline, the internationally budget airline. Perfect.
I mean, didn't they go down? I mean, this was blocked, I think, by the prior administration. I don't know. I mean, like,
I think that was just a merger. This would not be a merger. This
right. As somebody, I mean, so now venture capitalists are going to come in, and I'd love to see what they're going to pay. Now, if they're going to pay significantly more, then it was a great, not a great play. It was a great play for the investors of Spirit and the bondholders of Spirit and everything like that. If they're going to pay significantly less, then it was a horrible decision. So let's see here. Let's see what goes on here. Let's see how it plays out. It's going to be very interesting.
I think United Airlines reported their earnings this week, and I think American Airlines Love set to report their earnings next week. So
American Airlines,
UAL too, United.
Yeah, I said United. Yeah.
AAL is the 27th before the market.
Okay, my bad. But yes, United already reported.
One of those places.
But also look at the airlines, though, today, because they could be massively impacted by this winter storm. So already flights have been canceled. Like, you can't de-ice a plane if it's negative 32 degrees outside. Like, chemicals can only do so much. So airlines may be moving today because just this storm is so big. So
they're moving sideways right now. I just looked at AAL, UAL, Love. They're all basically sideways. But I did look at the temperature also, and it's down another degree to -9 here in Chicago.
Hey, Nikki, I have something for you. Insomnia Cookies is hosting date nights this February. The bakery chain is offering pairs to Insomnia Rewards members. They're offering the ability to dine in at bakeries by making a reservation. You can make a reservation for Thursday, February 12th or Friday, February 13th between the hours of 8 p.m. and 12 a.m. They're also offering a date night package, a fixed price assortment of their most indulgent cookies, 3 dipping sauces, and some milk for $30.
Nikki, will the newly formed We be doing?
I was going to say that, this sounds amazing. It sounds really nice. I'm sure, it's quite delicious. But I don't know if this is of standard high enough for such an occurrence as Valentine's Day.
Okay. Look at you. You were elevating your day. What'd you say?
You're doing more? I mean, she held up.
Yes.
Doing more
reservations there. I mean, you got to be, gifts.
I'm so proud of you.
Yes. Oh, thank you.
He's a romantic like his father. He knows. I mean, why screw up a short thing? I mean, that's the night of performance. I mean, like,
we're gonna
better than going to a play or movie or anything else like that. I mean, that's the night when they shine. Why screw that up?
Pivot out of this. Hey, giggity, Family Guy's Drunken Clam is coming up in a real life bar pop-up here in Chicago. Fans of the popular animated series can visit familiar settings and enjoy a Quahog-inspired menu at Peter Griffin's favorite local hangout through April 19th. The experience starts as $18 and includes a cocktail or mocktail, giggity. You can buy tickets in advance online, walk-ins based on availability.
Where is this? Do we know where this is at?
Let me hold on. It's
on Milwaukee. That
rolling. Hold on.
I don't know.
It's in Westtown. So.
Oh, really?
1601 West Grand Avenue.
Oh, so it's right by us. Right by the office.
Yeah,
it's right by the office.
So we should go.
Yeah, let's do it.
Get the marketing credit card.
Yeah, there we go. Yeah, we'll do our next happy hour there.
Giggity.
The Drunken Clam is a great name.
That's funny.
Yeah.
Finally today for my viral video of the day, it's Friday, so I like to do something I like to call a trader taste test. And it's been a while in the start of this new year, so I was like, first of all, let us bring back a woman eating food in her car. And also, this is the deal that could get you through this massive winter storm. I'm surprised at how well priced this deal is, and I'm surprised at what you get. Check this out.
Some of y'all come really hard for them, but $7.99 for this is not bad. So it's 2 slices of cheese, 2 slices of pepperoni, 2 slices of pepperoni and jalapeno, and 2 slices of Italian sausage with bacon, which I'm pretty sure I've never had that combination before. So I'm going to do the cheese first.
This is the creator's favorite. I don't know.
Definitely should have got a well-done cook on the crust, but otherwise, yum. Pepperoni. Look at all that seasoning on there. Hot. Very hot. Pepperoni jalapeno. We're getting spicy now.
I mean, this is going to be if not already
Jalapenos
done.
has got to be one of my favorites.
Sasha and Rob are all over this.
Italian sausage and bacon, they loaded that up. I like that combination, but I feel like I would need to add some veggies to it, maybe like olives, mushrooms, maybe some peppers and onions. I don't know, something. But out of all of them, pepperoni jalapeno for sure. Little Caesars just came out with this fantastic 4-in-1 pizza.
That's awesome.
That's a Sasha and Rob are my sister and brother-in-law will be there if they haven't already gone.
He's from Indiana. This is correct.
Yeah, but this is right up their alley. I remember when Sasha got the bacon wrapped. I forget what they called it, but it was like a pan pizza that the crust was wrapped in bacon, and like when they like baked it, it was all crispy on the outside, and then it was like stuffed with bacon. It was just a bacon extravaganza. I remember that one was a classic from Little Caesars.
I got to give Little Caesars a little bit of props here, not for this pizza itself, but for their pizza itself. Cheap as can be,
hot and ready.
Hot and ready. Like when you want a pizza, you walk in, you get one kind of thing. But you cannot let it get cold or reheat it or anything. You got to eat it when you're in that mood right then and there. Usually, you're trying to soak up the
$5. $5.
Yeah, you just need to eat that.
It is of all the garbage pizzas. It is garbage pizza. It's probably the best of the garbage pizza, in my opinion. I have a 16-year-old, so we're there from time to time. But man, even them will say sometimes, "No, please, not Little Caesars. No." So Little Caesars.
I hope everyone stays safe this weekend. Make good choices. What's coming up next, Bats?
We're going to take a quick 90-second break. We're going to come back. We got Confirm and Send. We're going to talk about the market near its lows. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&Ps last night were up as much as they are down right now. Even the S&Ps are down around 17. You can see the low is about 2 handles lower than where we are right now. All night last night, they were actually higher. After Intel came out with their numbers and their earnings, Intel flirting with 48 at 47.75, a little bit outside the expected move. Nat gas, I'll get to that in a minute. NASDAQ down 88. It too was up all of last night after Intel came out. I was a little bit surprised at that too. I mean, Intel from a weighted perspective is about number 20. Of the 100 Nasdaq of the 100 Nasdaq stocks, the highest, it's weighted 20th. So it does hold a little bit of weight. And then plus looking at all the other chip stocks, I thought maybe it'd have a little bit of I thought we'd open lower. If you told me that Intel was going to be trading at 50 after it closed at 55, that we would be a little bit lower. We're a little bit lower this morning with volatility up small, 22 cents to 18.20. Relatively tight range from 18.30 to just under 18, 17.95. Like I said this morning earlier, I didn't think we were going to get under 19 of volatility at this time going into the weekend, and we're flirting with going under 18. Maybe it'll hold its head up a little bit today. Dow down 230 and the Russell down 10. They're all down, as you see here, around the same percentage, just about a third or a little bit more of a percentage point. Bonds are up 3, back in that 115 range. Get a little bit of a scare. Looked like they were going to go under 114. They've been in between now 115 and 116 forever with that little dip down to 114. So 114 to 116, we're sitting 115. Really just in the middle of its last recent move here. Bitcoin basically unchanged, sitting at just under 90,000, 89,700. Ethereum down 13 cents. $13. It too is wrapped around pretty much unchanged. Oil making a move up 178, trying to keep on to the gains it had. $61 and change. Oil's actually had a little bit of movement to the upside to it. We been leaning a little bit long there. We're pretty much flat or almost out of all of our positions now in oil, right? Do you have an oil position?
No, we're out. We could probably look at that. I mean, we could do it now because the futures trade right now, but we should definitely look at that once we get into the open here.
Sure. Good IV rank of 44. What do you have in mind here for oil? /CL would be the product to trade. Can't trade USO because it's not open yet.
You want to get back into an iron condor? Would you go 25 days out, like stay in the H contract, or you go further?
Yeah, so that's the big question, right? So for me, what I would look to do, usually, if I was trading in equity, I would look at it and say, all right, 25 days. Yeah, it's too short a term, especially for an iron condor. I wanted to have time on my side. Of course, if you did it in a shorter dated, it's going to contract more. But since you're trading a different future on here, and there's only a small difference. I think if you wanted to go with a directional bias, maybe you go into the February options with 25 days. But if you want to go more neutral, maybe it's a March trade here, which says there's really no backwardation, no.
I mean, aren't we supposed to get Venezuelan oil? Aren't we drilled, baby drill? Like, isn't that coming? Come on, what are we doing here?
Yeah, it's coming. I probably won't be around to see it, but it's coming. I mean,
all right. What do you think about just doing the call spread? We'll do it in the February expiry.
Okay, if you want to be directional, then I think you go to February. I agree.
You go like 67, 69. I was gonna say 67, 67. 67.
We have two February 17th options here, right? You got the weeklies.
Yeah, we go into the February 17th, the current contract.
That is correct. That's where I want you to go. Yes. Yeah, I just want to make sure that everybody else playing at home goes into the right one.
Yeah, let's do the 67.69. It's about the 30 delta on the upside, right at the expected move. It looks to be trading around 27-ish which is $270. I mean, it's a 2-point wide. So they have $2,000 in total value. So it's a relatively cheap spread, but you only have 25 days to go till expiration.
Give it a shot. I go in right at mid price, although the natural's 24, 29. You're probably gonna have to move it a penny to get
which
filled.
is $10.
Yes, $10. One tick is what I meant. $10. That's right. It's $10 a tick. You are correct.
Yeah. I'm going to leave it in at 27 cents. We'll see if we get filled on an uptick here. Oil at the high is 61 and change.
Very good. Very good. Let's see what else is going on here. Gold.
Gold and silver, 5,050K. It's, the gold silver ratio is at a 50. I mean, it's unbelievable.
Yeah, about as low as it's been, 49 and change on the gold silver ratio. 5,000 calls in gold. Let me give a slow clap to my man Ilya. I give him a lot of crap sometimes for his crappy micro and macro and mini view of the market.
Vecchio too. Vecchio's been right.
That's what I'm sorry. That's what I meant. Vecchio. I meant Vecchio, not Ilya.
They both have. They've both been.
I know they both have, but I talk more with Chris, or I've done more shows with Chris, and he talked about buying those 5,000 calls when I don't know, gold was 4,200. You can use there's so many better things you can do with your money, but you know what? Kudos to him.
No, he hit that on the head. And shout out to Frankie. Frankie's looking at mansions on the lakefront here in Chicago.
Yeah, he's going to buy Caleb Williams $12 million or $20 million mansion on the lake there that young man picked up, Scoopy. So yes, absolutely. Frankie, Uncle Frankie, I got to call him now so I can get a little bit of those shekels too. Silver. Big move. I know it's been a thorn in your side. You've actually had positive P&L in it. You're probably going to be negative.
Not today.
What's that?
Not today. Not going to be positive today unless we touch 100 and just zip right back down, which I don't know. It could happen.
As foretold, gold 5,000, silver 100, as foretold by nobody with the name Batista. 99.7 and change, up 3.5% compared to gold's 0.5%. Silver continues to be parabolic. You actually said this yesterday, and I found it interesting, probably because you talked to Ilya and the
those are my boys. Those are my friends.
And Chris, yeah. You said that gold and silver being so strong, that something's going on with the market. What does that mean? Because I don't see the correlation. What does that mean to you?
I mean, it's just that you have a non-yielding
asset
that is going absolutely parabolic. It probably tells you that dollars are not a great thing to have. I mean, like that's the whole thing. Inflation of stock prices, inflation of everything is clearly still on the table.
Awesome. Let's continue on. Nat gas. It was lower. I swear to you, it really was. You could see here 341 and change. It was down about 2.25%. It is now caught a bid. I guess everybody woke up and saw the news again that there's a cold advisory in Chicago. They closed schools even. Well, it's up almost 0.029 right now. Big move, almost 1% on top of 25% move, on top of a 15% move, on top of a 5% move. Big move in nat gas. Corn, wheat, and soybeans are all higher too by about 0.5 percentage point. On the Intel watch, INTC, trading at 40, well, just under 48.
Frankie's giving me the, now we're talking about the stops that are at 100. So is that, do we hit the stops and explode to 105, or do we hit the stops and then we're back in 90 within 10 seconds? That's it. Everybody, I saw all these tweets about, the psychological 100 level. Once you get that, it has to go to like 105 because it triggers the algos to buy, because now it's 100 instead of a 2-digit number. Wait
a minute. The algos buy at all-time highs? The algos don't buy at 60, 70, 80, 90.
Well, it's psychological. It's like it's a floor, a 3-digit floor. You have the three-digit number. So now 100 is the floor. And so the algos buy because it's the floor. That's what I've been told by the interwebs.
I have no idea, but I can tell you from past experience. You know, I had this gentleman I work out with, and a young man in his 20s. He got accepted as a fireman in Houston, and he's deciding on whether to go or not. And I told him, you have to go because it's my experience. I had a great experience leaving New York at the same age, a little bit younger, and you burn your boat, and you can. You can become what you have to succeed. If you have any type of drive in you, you have to succeed because there is no other excuse. I mean, you have nothing to do but get better because you know nobody, and you meet a lot of people, and you can meet the right people because you have no baggage with you. So I told him he had to go. I can tell you from my experience, I had a good friend of mine, one of my best friends, when I was much younger. He was older than me, older gentleman. No shenanigans went on. But my buddy Leon would sell options. His thing was when they went over $1 and came back under $1, there was a zero chance of them going back over $1.
Okay.
Right. Well, he's the gentleman who for 15 years made millions, and in 87 lost it all. So there is no such thing as any psychological 100 this bullshit or anything else like that. Trade what's here and now. Don't think you know what's going on or anything else like that.
Well, we're about to get it before the open here because it's
yes, we are. Yes, we are. 99.92 on silver.
Yes. And then when it goes to 99.99, you'll say it's a good deal, right? Because it's a penny below. It's not the three digits.
And you can't see the stops, Frankie. So you can't tell me the amount of stops that are there or not there. So close your pie hole. All right, what else we got? Let's do it.
Confirm and send. Let's do it.
All right, Friday, January 23rd. Can't believe we're in the back end, the downslope of January. Give us our first question, please. Is there any way to track the gold-silver ratio in a watch list? How do you calculate it otherwise?
So in the platform, no. I mean, you could use the pairs trader if you want to set it up. It's a little bit clunky to do it that way. I would say just I mean, there's a million websites that track it. You can find it online. It's pretty easy.
Yeah, you can Google search, gold silver ratio, and you'll get a million ones that pop up.
Yeah. At 100, it's a pretty easy calculation. You could just do this kind of. You don't need a high.
At 105,000, it's 50.
Yeah, it's 50. It's pretty easy.
All you do is 100 into 5,000.
That's actually another good reason for silver to be at 100. You could use that too. You could say, it'll make the gold-silver ratio a little bit easier to calculate for the algo.
That's true. So, for all the new kids who can't read, they probably can't do math, but they can.
Of course not.
1 into 5 is a lot easier. Right.
Yeah, we have some people actually calling in the chat for you as well to take the SAT when Vinny does it. They would like that.
Thank you. Call me.
Yeah.
You got my email address, please. Next question, please. All right, son. What's the January effect for stocks for you?
Well, for this January, it's just been a chop fest. But I mean, I think mostly the January effect applies to obviously January is a big expiration for Leap position, so it's a big rebalancing. I mean, you can parlay it into the Santa Claus rally. I don't know the data behind it, but
I can give it to you. I mean, it typically, and you're not going to like what you hear because it kind of happened. January effect is seasonal, which is something I don't typically believe in, but we have other people on the network that do. It really pertains mostly to small cap stocks, the Russell type stocks, and it's usually higher. So it's the strongest, and the Russell has been the strongest so far in January. So they talk about reinvestments and bonuses that came in January, and people put that money to work. But anyway, a strong January is positive for the year. Now, in the market itself, The Russell's been strong, but the rest of the market, I guess, at all-time highs in December and basically at all-time highs in January, we have chopped around sideways. So do with it what you might.
Yeah. All right.
Next one, please.
Is there a pattern to how markets perform in a midterm year? I think this is a Vecchio stat. It's a good one. This is a good one for Vecchio. I think he has mentioned that midterm election years are good years for the stock market because you have all the kind of, chirping about all the stuff, like you got Trump talking about cutting interest rates. You have him talking about cutting interest rates on credit cards. It's all like kind of like you're trying to appease the people here. It sounds all, like.
Well, you know what? I think it's a little bit of a mixed bag of tricks on direction. I think typically there's allegedly more volatility, but me, I look at a 45-day time frame. So like, and that's the thing with statistics. You can look a lot. So that's why I like to keep it consistent, like we do. We look at a year time frame or a 45-day time frame, and then give you each one of those. You can look at midterms. When do midterms start? Do they start 3 months before the midterm? Do they start they start 6 months before the midterm? I mean, I know there was one young lady who wants to be a mayor, and allegedly it doesn't start until 2028. So, I mean, when do midterms start? So, I don't know. It usually chops around, usually a little bit more volatility. That's the old way of thinking. I think you got to look at what's happening right now and just go from there. I don't think there's any tell that you can do here.
We got people saying the punishment for the hosts for the SPX Guess the Market should be taking the SAT for the furthest away guess.
Oh my God, that's awesome. That is awesome.
That would be good.
I love those kind of bets.
Yeah.
Yep.
Next one, please.
Yes, please.
I understand you don't trade off the news, but others clearly do. Do you think news can help if you aren't a premium seller and more of a directional trader?
Yeah, they're going to help because the stock is going to have a directional move. Let's just take Intel because that's the last one. It moved outside the expected move. Now, 68% of the time or more, they do not do that. But you can get paid a lot more if you got the direction right. So you're bearish, you did your technical analysis, you looked at what you think the news is going to be, and you went bearish. Let's make you right in Intel. Intel's down more than what it was expected. You're going to make more money than you would expect on your directional call. Can you benefit from not knowing what the news is going to be, but the news event is going to come out? Well, the only way you can look at that is high implied volatility, but I don't know how the news itself helps you do that. What about you, son?
I think it's a hard one because I think it's cherry picked, right? So we've talked about the Venezuela stuff as like, all signs point to lower oil.
Yeah.
We just basically acquired a bunch of oil. And if that's getting put into the market, you would think oil prices would go down. Oil is at, a high relative to where we were right before that event. That one didn't work. Right. And then there's some news that, you look at like the move in silver or the move in SanDisk and Micron, where it does work to an extreme amount. So it's really, really hard. You have the taco stuff, like, everybody thought the world was ending because we were going to invade Greenland and then it's over the next day. Like there's so many examples that go in both directions. I'm sure the news tradable directionally is probably a 50-50 if you take the whole aggregate of everything that comes out all day long.
Right.
It's really cherry picked. Like, if you hit it, you squawk about it and, you're a genius. And if it goes the other way, it's, the market is wrong on this.
Sure.
It's just a tough one to kind of.
Well said. Does premium erode over the weekend since the market's closed? How does that work? Does the premium erode on Friday, Monday, or both?
So there's no there's no free money glitch for the days that the market is closed. At least there's nothing you can play for in advance of that. Everybody knows, the market was going to be closed for MLK on Monday. Like that's a known event. And so that's priced into everything. There's, the weekend coming up this weekend is priced in. The question becomes whether risk is priced through that time frame. So, a lot of times we'll say they take out the weekend. Into the close, you'll see like volatility contract or expand, or maybe it sits there and does nothing. That's an option too, and that's just a way to kind of intuitively kind of put a context to the weekend risk. But from a trader's perspective, it's not like selling options Friday right at the close gives you a guaranteed 2 days of decay. It's priced. That's priced.
You might actually get expansion on Friday depending on what the market does.
Yeah, sure.
So everything is subject to change. So unfortunately, it will happen. You don't know when it's going to happen. It might actually happen on Thursday. Like, they may start with, volatility contraction for the weekend on a Thursday, depending on what the market's doing. So if you tell me what the market's going to do at the end of the week, I can tell you what volatility and options are going to do too over the weekend. So nobody can do that, unfortunately. So there you go. Next one, please.
Sometimes I notice my P&L gets very wonky overnight. Why is that? Why does that happen?
Because now we're on Tasty Trade at the platform that we use. The numbers update dynamically as markets are moving. So I think that's what you're seeing. Plus, they get wide too. So a lot of times, especially if you have futures options positions, you'll get some really funky marks there because futures options, although they may trade, they don't trade very fluidly, meaning they're not very liquid. So those markets get wide. Yeah,
this is a function of liquidity. Yeah. In the overnight session, bid-ask spreads widen out. All P&L for options is marked to the mark price, which is the mid price between the bid and the ask spread. So, things get funky into the close in equity options, especially stuff that isn't liquid. You probably don't have this issue in an Apple or a Tesla, but in the fringe stocks, you'll see stuff widen out into the close. And then with futures, again, those are trading, but a lot of them, I have a wheat position that moves $200 every night. And that's just because the spreads widen out. If you're trading like a silver or something like that, those will widen out as well. It's just a function of wide bid-ask spreads.
That's correct. Next question, please. Is there a seasonality to implied volatility that's IV? For example, does IV stay relatively dormant in the winter? Oh, it's like hibernating.
Oh,
for commodities like corn, but then pick up as we near planting season. Now I know, son, you're more of a city kid, but you know what they're talking about here, right?
Yes, I know what wheat is and corn.
I mean, your vegetables come in styrofoam. But you're okay with this?
Yes, I'm okay with this. I guess there is seasonality. Like natty gas, seasonally gets more expensive in the winter. That's just not that's just a function of the weather and the usage.
Right.
But that's all like priced in. There's no surprise that December is going to be colder than July. Like that's just the weather. So it's priced in. The question is it priced in enough? Is it too cheap? Is it too expensive? That's kind of the hindsight trade. Like, right now you're saying, well, we didn't price in, a colder weekend, or the implied volatility of it is what it is. For equities, there's all sorts of like
also a known, right? Like earnings, like planting season is going to come. We know that every option trader who's making options knows that that's coming, knows what the usual is. Everything's a known, and that's why we take advantage of what's the unknown. Like when volatility expands, that means something wasn't right, or something's something's not right. That's not the way of saying it. Something happened that moved something or did something that made it go outside its normal range. And now all of a sudden, the math models, which are right 70% of the time, are wrong for that 35% of the time. And volatility is expanding. And that's what we look to take advantage of. So it's looking for the change in something, not what's going to happen because it's known. Let's do one more, and then we'll get to the opening bell. You want to?
Yeah, let's do it.
Oh, last one. Perfect timing. Tasty follows a methodology of
methodology.
And thank you.
Mythology is like Zeus.
And the goddess, do you know who the goddess of wheat is?
I do not. Do you?
Cirrus.
Oh, wow. Okay.
Yeah, that's because that was the name of the bar that we would go to in the Board of Trade. And then
I was going to say, you didn't know that just from your extensive knowledge
of Greek mythology.
Yes. Okay.
And trading often. Is there ever a time where you would trade big? If so, what might be a reason to do that? You're trading big in silver right now.
Yeah. So sometimes you get greedy and you're a little pig in duty and you're getting too big, and that's where I'm at right now. But sure, I mean, listen, you can do whatever you want. There's like, if you're willing to take the risk and you're comfortable with the risk, do you, boo? Like, don't let me tell you that you shouldn't do what you think.
Yes, but you've never like at a poker table, you may have gone all in with the money that you had sitting in front of you on what you thought was a good pot play, or right, or you have a small pot and it's a big pot. You got to risk it, that kind of thing, because you're going to die 1,000 cuts and be out of the game.
Yeah,
but this isn't poker, right? So you may trade bigger, but you're not going to go all in on your account. It's not big like that. You may go from, maybe you're used to having $1,000 of risk, and now you have $1,500 or $2,000 worth of risk. But you're not going to go from $1,000 risk to $100,000 worth of risk.
No, that's a good point.
So it's big, but big relative. Let's take a quick 90-second, because you're a greedy SOB pig, as you said.
Yes.
Let's take a quick 90-second break and come back, because you see something that you don't see. So we're going to take a 90-second break and come back with more Tasty Live after this. That's right, the opening bell, the moment we've been waiting for. We're back in 90 seconds with Tasty Live.
And you guys are out.
Beautiful, man.
Thank you.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell imminent here in less than a minute. Great timing. Even the S&Ps are down 9 right now. NASDAQ is down 47. Russell's down 9, and the Dow is down 218. Much to do about nothing. The Dow is the weakest of the group, down 218 or so. Intel INTC is trading under 47. It's actually given up another dollar since we've been on the show. Everything else is pretty much right where it was, but you know, we got to give you the gold watch sitting right at 49.79 and change after going over 5,006 and change. And silver has not hit that triple digit yet, but it's trying so mightily, about 20 cents off of its highs.
Could you imagine if it doesn't get it? If it doesn't get it, the invisible hand, the forces, I was talking to Julia and she's like, yeah, the banks are shorting this. I'm like, Julia, you have 2 PhDs and you think JP Morgan is selling silver futures? Come on.
They don't care.
They don't care. This doesn't matter.
It doesn't matter.
It doesn't matter. No.
Poor misguided child.
I know.
A lot smarter than me, so maybe she's right.
Yeah.
Let's take a look at what's going on with the market here. It's much to do about nothing with volatility up about 20 cents, 18.17. That?
That was a wheat put spread. I don't know. Did we do that? I think that was a fast market, or what's your assumption from a week or two ago? We sold just a cheapy put spread that was the out of the money put spread. It was like what, $200, I think is what we sold for.
Yeah.
Or $300, took $100 out of it. It just, I don't know. It removes a line item from my portfolio page, which is quite extensive.
And that's not a bad thing to do, right? I mean, it's not a bad thing to do. Intel down $7.30 or so. My spread that I had on closed at around $7.50. It's trading at around $5.80, which makes me just about even. Those puts that I sold at $2.70 are $4.80. So that's where it cost me the money. If I did nothing, I would have been up around $400 or $500. Instead, I'm about even on the overall spread. I've got a little bit of longish delta here with the stock under 47. Need it back over 50, then it becomes a home run.
Yeah.
Let's take a look at. We got all the losses back if you want to look at it that way. Unfortunately, with the small adjustment of 30-ish delta that cost me my winnings on.
Yeah, you stink. You got no intestinal fortitude.
Zero.
It's all right. I still love you.
I know. Let's see if we get a little bit more volatility contraction. We'll have some there too. Let's see what's going on. Here with the rest of the market. On the downside, you've got Goldman Sachs down 21.5. You've got Lilly down 14. SanDisk, your friend, down 15. AVGO, which caught a little bit of a rally yesterday, didn't really maintain it, is down around 9. AppLovin down around 9. Intel, there's my little friend, down $7.80. Oracle down $5. MU, Vanetta talked about, down almost $5. Coin now down $4 and change, with Bitcoin really not moving, down $175. Tesla down $4, giving back its profits from yesterday. BABA down 3. JP Morgan, I know you put a little bit of short delta on there, down around 3. Let's go to the upside here. AMD up 8. TSM up around 5. Meta continues its rally from yesterday, up 6. Nvidia up 3.5. Adobe and Amazon up 3 and 2. Microsoft, look at you big horsey, up $2. That's about the third day in a row that Microsoft has gone sideways finally to a little bit higher. I got a little bit of long delta in Microsoft too.
Yeah, Meta and Microsoft finally waking up here.
Meta woke up. Microsoft is just rolling over. I mean,
yeah.
Slumber.
Well, you do have the Russell. I closed out of some of my Russell position. I have one left here. I mean, I don't think I'm profitable on this net, but I've scalped it pretty good. I sold some higher yesterday and scalped it into kind of the sell-off that we had in the middle of the day. I lightened up a little bit here, but it is interesting to see the Russell, being the weakest of the group today.
Right.
That's kind of my vibe into next week because you have all the big name stocks earnings, your Microsoft, Apple, Meta, Amazon, and they really haven't moved or done anything for the last couple months. So I feel like if we're gonna blast off higher, you got to have those start to catch up here, and I think it's going to come out of Russell and hopefully the metals as well because I'm short there, and those are ripping my face off.
Perfect. I totally agree with you. Totally agree with you.
So I'm hoping that happens. I'm also working a couple orders. The gravitational pull of SanDisk. I'm trying to close that. I did another ratio spread on the upside, which is not good. I feel like that chair in the studio has invaded me a little bit. Like it's kind of like it's taken over a piece of me. So
yes.
So I have that working. I'm also trying to close this Reddit Iron Condor. I think we did this last week for a fast market or what's your assumption, something like that. It's moved. Those markets stink, and it's moved like it's marking at $100 or $150 profit, but it doesn't.
Reddit markets are quite wide, almost untradeable. I mean, unfortunately, such a great name had great movement to it. You could do so much with it, but unfortunately, the markets there just don't cooperate. Meaning that the bid ask is just not tight enough. To do anything. Anything jumping out at the screen here besides the gold, silver. I guess you can throw nat gas in there now, up a full 1% after being down 2.5% last night going into this morning. Is there anything that pops up here? When I look on my list here, it looks like Ethereum is one of the biggest movers to the downside, and oil is your biggest mover to the upside. Oil up $1.70 and change.
Yeah, I guess you're getting a tiny bit of a bid in volatility. I mean, this pullback is going into the weekend, like volatility is not gonna move. So let me give you a little hint on how sometimes, and again, I don't know when it happens or how it can happen, but I'll just read the numbers for you. A lot of times people see /VX because I love to key on it. As a suggestion on what's going on with the future market, meaning for the rest of the day. And you got volatility up almost 1% and the market basically doing nothing, right? I mean, even the S&P is down 12 ticks or 12 handles. It's an eighth of a percentage point. So you might say to yourself, volatility is actually upticking a little bit here with the market doing absolutely nothing. Maybe we're going to have a little bit of downward movement. Well, going into a Friday, what option pricings will do is they'll price the options instead of moving volatility because they really don't know what's going to happen in the future. They'll trade on Saturday afternoon numbers, meaning they'll change their programs to not represent pricing at Friday at 8:37 Central Standard Time. They'll do it as Saturday, 8:37 Central Time. And you'll say to yourself, well, how can they do that? We don't trade on Saturdays. Well, their programs can program in what day today is. So they don't move volatility. They keep volatility because it's on or near its lows. They keep volatility the same, but they just forward date their pricing ever so slightly so that their offers are a lot more aggressive than their bids on a lot of these, or their bids are a lot more aggressive than their offers to show what's going on with the market. Now, if you get a move in volatility of 30, 40 cents,
then you could say to yourself that, yeah, you've got some movement to the upside on volatility and some downside pressure. I think we've, as just a kind of a view here, I think we've got into this E-mini S&P range here. We're back really to that 69.50-ish area, which we used to hang out at 68.50. Now we're like 69.50. Or if you look at
yeah, but we've been chopping between that for 3 months now.
Agree. SPX sitting at 69. I was going to make the analogy. We've been, 50 points higher. We've been 50 points lower. And this is the middle of the range. So maybe we get some movement off this number, but I don't think it happens today.
Yeah, I don't think so either.
Yeah. What else you got for me? Anything else good?
I'm not getting filled on any of my stuff. It stinks. I mean, it's kind of a nothing day.
Yeah.
Like I can move some of these orders, but I've put them in at, they're super wide markets, like the SanDisk position. I put in a $2 debit. I sold it at $3. I'm trying to take $100 out of it and move on. JP Morgan, kind of the same thing. I guess that one I can probably move a little bit more.
Yeah.
But you got a little bit of a move involved, but it's not like a big move involved.
You're right. You have a little bit of movement involved, but not a big movement.
It's not enough to get filled on stuff off the mid price.
Right. This is my position in Intel that I have on right now. I'm long the 50 one time, short the 50 put one time that I sold at around $2.70 yesterday, closed at around $2.10. The stock is down $7.50, and I'm short 3 of the 55 calls. I have this whole basket of positions on at around right here, $5.30-ish, $5.35-ish. So this big move down of $7 made the spread basically even. All right, what do you do now?
I think you close the call ratio, and you sit there as a cover call, and then you still got vol.
You'd have it 1 by 3. You'd have one short 50 put, long short 3 55 calls. That's the way you would sit. Your 50.
Well, no. I would close the call ratio part. You just take your money and run on that one, and then you
go ahead.
And then you sit there with the 50 strike put, and you look at it like a cover call. It's got like what, $1.50 to $1.80 ish of extrinsic value there. You're what, $1 off of break even from that put?
No. I'm break even on the whole spread right now. Actually, I'm up 30 cents. At $5, I'm up 30 cents on it. I was down about $3 on it. I took it off. And if you want to put on another position in Intel, you put on another position in Intel. That's the way I look at it. Now the IV rank went from 70-ish to 35-ish. It's probably going to continue to contract. As a matter of fact, these 50 puts opened at around $5 and change, and they're trading around $4.60 with the stock basically unchanged from the opening. Just to show people how fast sometimes, when do you close something? When do you do it? Well, I thought that we had a larger move than was expected. Volatility was probably a little bit more expanded going after earnings. So I waited on the trade and now take it off. You want to put on another trade?
Speaking of fast, I fastly put on new short puts there. So I sold the 45 strike puts at 290 or 285.
You see, I love that better. Like, and if you're talking about something like you want to take on more risk, if you like to, that's where I would put on, if you're a one lot trader, but you have the buying power to do 2, maybe I do 2 contracts there. You know what I'm saying? Like, that's how I ramp up my thing. We get an exponential move to the downside like that. You got a little bit of volatility hanging in there. That's the way I do it. So,
and we just got filled on the oil call spread too.
Nice, at your price of 27, which is great.
Yep.
Very good. I'll put those through there.
Beautiful.
All right, beautiful. Good job out of you. I mean, you want to take a quick 90-second break and we can get the fast market? You basically have an unchanged market. We'll take a look at what our viewers have decided to do right after this. You want to do that?
Yeah, that sounds perfect. I need the trade ideas here.
Me too. Let's take a quick 90-second break. We'll come back. We got more of Tasty Live coming at you right now with Fast Market, your trades. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with Fast Market. Around 27. Russell down 16. The Dow is the weakest of the group, down almost 300. Volatility hasn't moved, up 17 cents. Bonds haven't moved, up 2 ticks. Bitcoin with a little bit of a slide of $300 or $400, down 500 and change. Ethereum on a percentage basis down more, down $35. Would be a little over a 1% move. Oil caught a little bit more of a bid. That's how you got filled on your call spread at your price that you put in. Gold is up $37, just off of its highs. New highs, as Vanetta would say, of $5,006. Silver trading 99.7 and change. Futures haven't gotten over 100 yet, 99.93. Nat gas unchanged after being up 1%, down 2.5%. Is now unchanged. The rest of the market, let's take a look at what's going on. On the upside, AMD up around 9 or so, TSM up around 5, Microsoft up 3 and change. On the downside, SanDisk down 23 and change, AppLovin down 11 or so, Lilly and AVGO down almost 10, Intel down 770. That's all I got.
We're still on silver 100 watch. I know the futures contracts in like March and April, they're already above 100. I know we got that, but we're talking the front contract. We're still on watch.
Yeah. We're not gonna quote the future that's 125 days away. Let's take a look.
Same thing with gold. Gold's well above 5,000 further out.
Yeah, let's see what the end. How many contracts have traded? 2,228 contracts have traded out in the May. That's actually a relatively good amount. Normally, I would think that's less than half of that. But you've got 70,000 in the front month. That's the one that we're talking about.
Yes.
All right, my friend. Let's move on with the show.
Let's do it. Let's do fast market. Get some trade ideas.
Let's get it. Dun, dun, dun. Okay, go ahead. Ooh, DraftKings, DKNG. You used to trade this all the time.
I have a position on here. I'm long stock and short an at the money put at the 30 strike here. Let's see what Mike in NYC is looking at. Neutral to slightly bullish. Okay, I think the long-term $30 support holds. Willing to try Jade Lizard. Okay.
Good IV rank of 48. Earnings coming in February.
Yeah, I'm in this. I could probably, I don't know, the stock's like on its butt. I'm in this, Mike, so I'm going to call this a win. I mean, I have about 140-ish delta net via 100 shares of stock and then the at the money put, 40-ish delta put. So I'm with you on this. I want to see that 30 mark be the support, but I already have this on, so I'm gonna pass on this. Okay. I like it though. I mean, 48 IV rank. It's a low price stock. This would have been a good one for Johnny trades yesterday when we were looking for. This is kind of the spot that you want to be in for a smaller sized account. $30, $40 stock. This Intel's another good one that we trade a lot in the Johnny portfolio. So I like the pick. I already have it though.
All right, let's get to the next one, please.
Oh no. SLV. I know, Bats. You're loaded up on silver and gold already, but this is the short setup. Guaranteed winner. Slightly bearish. 85 iron fly with 5-point wide wings. Small risk play. It's funny because 85 seems like a millennium ago. It was just about 24 hours ago that we were trading at 85 or around that.
Do you know how many friends I've lost with guaranteed wins in my lifetime? It's too many to name. When you've got a guaranteed winner, I'm going to try to save the younger boys and girls. The older boys and girls, they know.
Keep it to yourself?
Man, oh man, keep it to yourself. It's the only way it's going to win. I know I'd love to share the wealth. I mean, look at what we do here every day. I try to share little nuggets that pop up in my brain every day. I mean, I do the best that I can with the limited knowledge that I have. But when you got a guaranteed winner, keep it to yourself because it will never work if you tell one person.
Yeah, and
you'll lose them as a friend, and you don't want to do that.
Yeah,
the friend over money.
The worst question is always like, what stocks do you like right here? Like what you got a good pick for me? Cause that's always, you have there's no upside in it for you. If the stock goes up, they don't really like talk about it or give you the props. And if the stock goes down, you'll never end. You can't hear the end of it. So
it's the worst feeling in the world.
I agree with you. Silver, I'm locked and loaded. I have the futures. I have these put butterflies. I think that's another way. I mean, an iron fly in itself is basically a butterfly. So if you're looking at this sort of setup, a put butterfly as wide as possible, somewhere in February, or even if you want to go to March, those are interesting trades that are pretty cheap to trade for. A little bit of a lower price. You get a little bit of a buffer there with the short vol, those out of the money puts decaying, kind of help buffer you if this continues higher. But I'm here. I've got this. I've got this all over the place.
Yeah, it's probably one of your biggest positions
for sure.
Contract size and strategy size. I mean, you have risk. You don't have unlimited risk.
Now you got some big risk.
But you have some big risk, and you already have it in the futures. So you're really not in SIL, but in the futures. M2K, you just covered, I think, some futures you sold from a few days ago, correct?
Yeah, I'm out now. I have no Russell position. If we bounce, I'll hate trade this again and short them into higher prices.
Got it. How'd you do on those futures? Are they basically a scratch?
Pretty much. I mean, I've been scalping in and out of these. Negligible.
Wasn't worth the aggravation.
It wasn't worth the aggravation. No, definitely not.
Got it. Next one, please. We're over.
I know. I don't like it. Bob. All right.
Good swing. He wants to be neutral here. 190 highs and 150 support before earnings. So he's doing a $10 wide iron condor. Now here, let me Chad. I love what you're doing here because you came up with your support. You came up with your resistance. The stock is around $170, right in the middle of your two numbers, and you decided for your size account, whatever the case may be, that a defined risk trade is the thing to do, and you went with an iron condor. It's the perfect strategy for what you think is going to happen. So the makeup is good. Now let me look at the IV rank of 24. Good, not great. Works there too. Then the next thing that you got to do is think about earnings. They're coming February 14th. You got to make that decision that you want to be into earnings. Seems like you don't mind. You didn't say if you're March or Feb. What are you going to do here, March?
No, it says Feb.
Oh, it says Feb. I'm sorry.
I did it. I did it at 260.
Very good. Earnings
you're kind of selling a cheapy call spread.
Because of the time, yes.
Well, it's about a 1 standard deviation on the upside, whereas your puts are a 25-ish delta. So you're really selling most of the juice you're selling about $1.50, 60, 70 in the put spread, and then about $1 in the call spread. So it's a cheaper call spread. You're leaning a little long here. I'm fine with this. I also have a leftover March put from a put diagonal that I'm basically a scratch on here. So I'm kind of neutral here. Net, I have a slightly long delta in February with some positive gamma out in March. Short delta, positive gamma in March.
Very good. If you right click on that, I will get that.
Yes.
To our viewers. Yes. Our first win.
That's okay. I mean, you can't win them all.
Oh, I get you. Beautiful.
We're trying our best. This is about as good as you can expect from a team of bats.
This is true. Next one, please. What are we looking at? Netflix.
All right.
Netflix. The market hasn't really moved. I'm not Netflix. The overall market, even the S&P is down 9.
Okay, so they're thinking June at the money call. So you're doing a poor man's cover call here, selling the February 30 delta call for a poor man's cover call, roll the short call every month. I like this. I have in the money puts here. So I am basically a cover call in February right now. So I have this position on, but I can add to this.
Okie dokie. Did you
June is far out.
Yeah,
but I'm okay with that. If your time frame is like a couple months, I think this sets up really well. I mean, you have a $7 debit here. You're buying more than the width of the spread, so you technically have some risk here. But if you're getting up to like the 90 strike, which is what I'm looking to sell here, you'll be rolling this out in time. You could roll it out and up. You've got some flexibility here. I think this is probably an interesting way in a Johnny-sized account. If you're like, you know what, I want to get a heavy delta or heavier delta position. I don't have a ton of capital. Netflix is a big name stock. I love the stock. I love the product, whatever. This would be a good setup for that sort of trade. So I'm going to do it. We're going to get in here. I'm going to try it like
second. You're going to try to do it, yeah.
We'll see where we get filled. I mean, these, one of the things that you'll have to deal with the June expiration is that the liquidity is certainly not as good as February.
The markets are a little bit wider. Yeah, the disseminated markets are wider. So the mid price is less indicative of where you're going to get filled.
Yeah. Netflix, another one, like if you are looking at trading leaps. I see some people talking about this in the chat. That's another interesting spot to be in. Like a 40 delta call or something. It gives you a high upside if you're bullish on the stock.
Yeah, that said, you went in at 7:15.
I got filled at 7:12.
You got filled at 7:12. The mid price is around 7:10 to or so. So I mean, you're talking about pennies here.
Yeah.
Yeah.
So I'm in. I pushed that one, so you should see that.
Beautiful.
All right, so we're 2 for 4. That's 50%. We're working our way up.
Yeah, for sure. I like it. What's our next one?
SPX.
Oh, we didn't do an SPX trade, so let's take a look at this.
Yeah, let's do this.
What do you think with volatility basically unchanged, up 17 cents here? What do you think about doing a trade? Usually around 9 o'clock, we would put those on from our research. We've done them anywhere between 8:30 and 9:30.
Yeah, I like this. I'm going to try and do a $10 wide right around the 20 delta. I'm not going to do it 20 points wide. I'm just going to do this 10 points wide. Oh, I wanted $3. Come on. There we go.
$3 credit on a $10 wide spread here. $10 iron condor, 68.75, 65, 930, 940 trade. When you look at this as a standalone trade, it's about a 60% pop here at this present moment.
And that's how the math works out, my friend. You sell the 20 delta on either side, and you go 10 points wide, 15 points wide, 20 points wide. It's all going to be within 60 to 70% probability. 1/3 the width.
But I want to show everybody subtly how you reduced risk there. Normally we do them $20 wide, as Marcus pointed out. You went $10 wide.
Yeah,
and I kind of agree with you.
Yeah. Into the weekend.
Going to move a lot slower. That's all.
Yeah, and we'll put an order in to close it for I don't know. What are you thinking? $50?
Yeah, exactly. 250 or something like that.
Yeah, so I'll put that in as well here, just the opposite order. And we'll put this in at 250.
A little bit of a rally here in the NASDAQ, up 24. Even the S&P's unchanged. Russell down 18. That's your weakest of the group, with the Dow, which was the weakest of the group, down 240 or so. So you got a little bit of a NASDAQ rally. Let's see what's moving in the NASDAQ to the upside. I guess you have AMD.
Meta, some of the chip names. Yeah, AMD.
Microsoft up 6, Meta up 8 again, AMD up around 9, MU up around 5. MU, if you remember just a moment ago, was 390, kind of where it opened, is now 403.
All right, we're 3 for 5 now. 60%.
Better.
We're climbing. This is improvement right now.
Oh, 100% improvement.
All right, CRM. I actually do think all these software companies have really been taken out to the woodshed. CRM, ServiceNow, Snowflake, Datadog, all these ones that have, they have high volatility, but they've been taken out to the woodshed with all this AI stuff. So I like this. Owen wants to gamble here. So with an at-the-money call spread, 20 points wide, you're looking at February. So you're setting up a 50-50 shot here. I like that. I might even look at selling some. What do these puts trade at? Let's see. Yeah. Okay. I could do the call spread.
Oh, can you?
Yeah. I figured you'd have more juice in the puts than $2.
Yeah.
I mean, 10 points out of the money is, only a couple bucks. I don't know.
Yeah. Not bad.
What do you think about? I'm going to do this $10 wide, do a little bit less risk, but follow along here. I'm thinking 225, 235. Stocks trading just below 230. So this is $5 in the money on the long call, $5 out of the money on the short call. It should trade. That was my Reddit trade.
Oh, that's Reddit.
Nice.
650. What is Reddit doing for you to get filled on that? RDDT.
Must be rallying a little bit because I have a little bit of long delta there.
You're right.
I'll give you that when I.
No, it's up 12 cents. The stock was down around $5 or so, $4 or $5 on its lows. Another stock that's rallied into this move here.
All right, I'm in at 490 on that CRM trade. So it's a 50-50 shot, no management here. Do we have, is earnings coming up? What day is earnings? February 25th. So it's actually before the earnings. So you won't get that, binary event to bail you out.
Right.
So we'll see. I like it. It's at lows. You're certainly getting long delta at the lows here.
Yep.
4 for 6. We're getting better.
4 for 6. That's right. We're an overperformer now. Actually,
66%.
That's right.
We're right there. One standard deviation.
Rivian.
All right. What are we looking at here? Last time to grab it at near 15. Well, we grabbed it at near 19. The last time we did a Rivian trade, we did a covered call here. So we got that. We're at higher. Okay, so you're looking at the 17.5 covered call. I am going to follow along, but I'm going to do just a short put. I'm going to sell the 16 strike put. I'm already long the stock, so I have the covered call type position. I'm going to add this as a little bit less directional. It's an at the money put, the 16 strike. I'm looking at February. You got earnings coming up here. I'll dollar cost average into this one if we go lower.
Yeah, you're gonna have to do that by default, right?
Yes.
Rivian $16 got up to around 20 and change. Again, it was a $13 stock, back into the middle of its range here at 16. So Scott in Denver, you're selling some puts here, basically right there, right?
Yep.
So it is a long delta trade.
Yes, I'm with you. I got filled at $1.21 for the 16 strike puts.
You did.
So I'm in. I got you.
Let's do it.
Cool.
Next one, please. Shop.
Ooh, I have not traded Shop in a while. This is another one like Micron. I feel like every time I trade this, I lose money. It's just one of those stocks that's in my pain trade bucket. But Chris in Baltimore looking at Jade Lizard in February, betting we get at least a small bounce before earnings. Ivy rank at 27, not high, not low. So I don't hate that. Let's see. You're looking at the 125, so a little bit directional here. 125. So the $3 wide call spread is kind of a cheapie for me. I guess you're right at the money. So you'll probably trade for about half the width. How about doing the 125, 145, 150?
Sure.
So you're selling that call spread for about $2. Definitely leans you long. You're long about 20 deltas. So you're selling about 10 deltas in that call spread, 8 to 10 deltas.
Right.
You got enough credit to cover the width of the spread on the upside, so you have no risk to the upside, assuming you get filled above $5. Your break-even point is, just below 120, which is right around where the expected move is.
Right.
I kind of like this.
Okay.
The only problem is you got about 80-cent wide bid-ask spreads. So this will be an interesting one to see where I get filled at.
Right.
I'm going to start high here, and with volatility contracting, nobody's going to be chasing your order here.
Even the S&P's up $1.50, Nasdaq up 53. Cancel crash.
Oh, no fill at 640. All right, I got filled at 630, which is about 10 cents off the mid price, just to give everybody a gauge of where you might get filled here.
Got it. Subject to change if the market moves too, right? I mean, that's
yeah. You want a down move, so you've got about 20 long deltas. So a little bit of a down move, you might get filled on that above mid price trade.
That's correct. Next one, please.
DoorDash.
Oof.
I've not traded this either.
Oof.
Trading at 210, kind of on the lower end. The chart looks a lot like Meta.
Yeah, it does, doesn't it?
It looks like a carbon copy of Meta. I don't know why that would be correlated. I guess. I mean, you don't really, I guess you do get food advertisements on like an Instagram or something like that. I don't know.
I don't know either.
So, Max looking at a neutral iron condor. You're looking at the 85-75 put spread and the 240-250 call spread, low risk between the short-term resistance and support. There we go.
What do you think there?
I wonder if they're looking at February or March. I would say this is probably March, just because the February options, the one, I guess, no. You're right at the expected move, 20 delta.
Okay.
Yeah, I kind of like this. Again, this one, kind of it looks kind of like our shop / Reddit positions where these bid-ask spreads are like, 80, 90 cents wide on each of these. When you have 4 legs in there, the 175 strike put is 170 bid at a 335 ask. So you're almost $2 wide on that spread. Yeah, you got your bid-ask spread from the natural to the spread here is 46-cent credit to a 640 ask.
Yeah, this is not.
You can't do this one.
Right.
Unfortunately.
Yeah.
Sorry, Max. Thank you for putting this on my radar. I have not traded this in a while, so
Well, you haven't traded in a while because of those markets. When you look at them, I mean, I don't think they're going to change soon.
No. So. I'm going to have to pass on this one.
Yeah. Next one, please. Doc U.
Ooh.
Doc U.
The creator's favorite. What is this doing? It had a nice run to 100, and now it's back to 50. What are we thinking here?
It had a nice run to 100 when? A year and a half ago?
Yeah, a year ago.
All right, a year ago. Yeah, now his stock is sitting at 58. Just like always, he's a little bit early.
So this trade, you're looking at the 50 put, 70 call. So what do they call this? The risk reversal or a synthetic stock position? I mean, you got about 40 deltas here. You're selling the put basically to finance buying the call.
Yeah, or stupid, right? I mean,
stupid
is long delta, and he's selling the strangle. Sorry, selling the 70 call. Yeah, no, this is not a risk reversal.
Oh, it's a bullish strangle.
Just a bullish strangle, right?
Okay.
I thought he was buying the call. I apologize when you said risk reversal. What about doing like the 55 put and the 70 call? Okay, you're just moving a little bit more longish delta. I don't hate it. It's been up the last 3 days, but like you said, it's been gotten killed.
Yeah,
it is.
I mean,
death.
It's like if you want to lean long. You
got to have 30 to 50 deltas, right? I mean, you would think.
The 50-70 is skewed to the upside because there is call skew here. So you have more price room to the upside, but it doesn't have any delta to it. It's not like you're long delta on that trade. Moving to the 55 strike, it nets you, 10, 12 delta. So you're kind of long delta. I mean, you have a little bit of long delta. This is another one. The markets are not great here. So you got to watch your pricing here, but I like it. I haven't traded DocuSign since probably the pandemic.
Yeah, at least, yeah.
Didn't it get up to like 300 at one point? I mean, I know Zoom was in that bucket.
DocuSign? Yeah, great memory. But you got to go back to 2021.
Yeah, COVID. That was COVID.
Yeah, COVID. Yeah. It was before time.
Zoom and DocuSign and Peloton. I mean, remember Peloton was like the next, Mag 7 basically, because we were all going to be locked in for the rest of our life.
Yes.
All right, I got filled 410. I did the 55-70 strangle, slightly bullish lean, delta wise. I like it.
Very good. We did pretty good here. I mean, we started out weak, but we did 7 out of 10. That's a great little percentage. With the E-mini S&P basically unchanged, doing nothing. NASDAQ caught a little bit of a bid up 43. Russell back down 27. That's your big mover, 1% move to the downside of the Russell. And the Dow down 300. That's your second biggest mover to the downside. With the E-mini S&Ps unchanged and NASDAQ up, you got a little bit of a tug of war going on here with volatility up 7 cents, signaling actually nothing. Oil up $1.72 near its highs. Gold.
Oh, we got the 100 mark on silver.
We did. We just got it. We just got it right now. Where were you? Where was the 100 hats here in silver? We're talking about the front month contract trading 118 as the high. It's 100 and oscillating between around
118 cents. 118.
I love it. The team is on fire today. Good job out of them. All right, my friend, you got your 100 print. You got your gold 5,000 print.
I'm waiting for Frankie to tell me whether there's more stops or buy limits, or if the algos got turned on, which algo. Did JP Morgan short some more here?
Who algo? Where the hell did algo?
Yeah.
We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure because nobody can see anything. Remember that. We're making it. We'll be back in 90 seconds. It's the Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter retweets. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. You're so totally boring. My card's on the table. Hash mark. Facebook is disabled.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nicky, we are back, son. And before we get to this market measure, I have a public service announcement to make, and I'm gonna Well, not a public service announcement to make. I guess I'm going to ask for your help. Here, I'm going to give it to you. Microsoft, for my option trades today, I looked at the stock, want to get a little bit bullish. One of the Mag 7 that hasn't participated, didn't originally go my way a couple of days after making the trade. I did a 1-by-2 put ratio spread. So I bought one of the 435 puts, which now have a 23 delta.
Excuse me, while you were talking, that ding you heard was me closing out of the Meta puts that I sold at like $6. I just closed them for $4. But go on, yes.
Good $2 profit for you. I'm half as good as you. I bought the 435 puts one time, sold 2 of the 420 puts. Did it for $1.06 credits, trading at $1.05. I'm not asking you what, nice, good job. I don't want you patting me on the back. I just want to know, from your professional point of view, should I buy the put $15 below?
Sure.
Nah,
you take the money and run. I'm
taking my money and running. That's what I'm doing. I mean, that's what I want to do anyway.
Yeah, I think you do it. I'm going to ask your opinion on this one too, because I have a call diagonal spread in Meta. I'm long the 650 in March, short the 675 in February. Do I take the money and run on this one and wait until earnings, which is the middle of next week, to put something else on? Because I'm going to lean long into earnings.
Yeah, I got to say that you close it going into earnings. No earnings, I have a different answer.
All right. This one's going to be a home run.
You closed your Meta. Wow.
So I bought it at 13 and sold it at 21.
Yeah, I mean, what do you that's a home run trade. I mean, why try to make it? It's like when you have a losing trade and instead of, time is running out or earnings are coming and you don't like the risk that you have on, put on a higher, like you did in Intel. Why try to make something out of the trade you have? You can open up another trade with different strikes that have a higher probability of success. You got a home run in here. I think you got to close it.
Yeah, I agree.
The M's are very good to us. Microsoft, Meta, beautiful.
Beautiful. I love it.
Even the S&P is down 7.
Crashing.
Even the S&P is down 6.
Silver below 100. It's over.
Must have been more stop sell orders.
Yes, definitely.
Frankie, what's the matter with you? I mean, come on. Take the win and don't make come on, really. That's all. Let's go with our market measure. Come on.
Let's do it. Oh, this is a good one. Sponsored by the SIBO. Overnight moves as 0 DT signals. What do you think? Because I know you haven't looked at these. Maybe you have. But what do you think SPX trades the next day? So basically what we're looking at here, the study is going to be looking at, does the overnight action influence anything with 0 day the next day? So do you think, like, if you have a big move in the overnight session, do you think that's a better or worse time to do a 0 day the next day?
Well, premium is going to be higher the next day would be my answer. So for me, it would be a better time to do it, but that's subjective, right? The premium's higher for a reason.
Do you think that applies to both big up moves and big down moves, or just one or the other?
Wow, that's a great question. I'm going to say it's pretty much synonymous, if that's the right term. It's the same with both up and down.
Interesting. Okay.
Because I haven't seen this, so I don't.
Yeah. I think I think this will be interesting for you.
Okay.
So let's do it. Let's get to the first slide here. Market measure sponsored by the SIBO. 0 day to expiration, our 0 day options have surged in popularity. They represent over 40% of SPX option volume. So this is as liquid as it gets. With so much activity, you got a lot of people trading these 0 days. This is kind of a further discussion that we've covered on zero-day options. So overnight gaps capture international markets, news flows. You got all the earnings that happen after the close. There's a lot of action that happens in the overnight session, and we have people wondering if that's indicative of what happens the next day in the zero-day trade. So we're going to examine whether overnight SPX moves can improve strategy performance by filtering out disadvantageous days. So we're going to kind of bucket these, and this will be more outlined in the next slide here. We're going to bucket these into specific overnight moves. So we're using 3 years of data here, zero-day options in SPX. We collect that data every 10 minutes. We're going to be looking at zero-day trades placed at 9 a.m., which is right around when we traded our Iron Condor here, which is has that moved at all? Probably not. It's probably being tested a little bit on the upside, but it probably hasn't moved all that much. Damn, Russell too. Russell right there. Russell's down 25 here. NASDAQ rallied. I mean, we
even the S&P's rallied. NASDAQ rallied up almost 100 now.
So the setup here, we're looking at short strikes at either the 40 or 20 delta. So we're giving you two sets of data here. Mm-hmm. Long strikes, we're doing $10, $20, and $30. And then we're closing them at 20% of the max profit. This is really in line with what we tend to do. We tend to go around the 20 delta for the shorts. Sometimes we're doing $10 wide, $15 wide, $20 wide, but this is really our entry here. Obviously, if you're trading smaller, you can make these $5 wide. It's all your own risk tolerance here.
Yeah.
But we're gonna filter the results by the size and direction of the overnight move the day prior, right? So we're calling a large move over 0.5% in either direction. This is a pretty good mark because 0.5% to 1% is what 18 VIX kind of represents on a day-to-day move. So you're talking about like beyond that kind of move as being a sort of more than volatility projects. Then we're talking about a small move being 0.2% to 0.5%, that kind of like middle range. And then we're calling flat a 0.2 in either direction, right? And we're going to bucket these in both directions.
Okay.
Up and down. So, for today's move, I think when we were down 10 points, that would be considered an inside. That's a flat move.
Right.
20 or 30 points relative to where SPX is now is probably in that, kind of small move range. And then 50-ish points in either direction is going to be your big move, large move here in this bucket.
Yep.
And that will change if you're watching this in the future, because we're going to archive this. The SPX is probably going to be higher, so these will be bigger numbers.
Sure.
So the first slide here, we're looking at the short delta or the short options at the 40 delta. We're looking at $10 wide wings. So this is kind of like your more conservative one. These are going to trade around probably 50% of the width. So it's going to trade around $4 or $5. You can see here that your small moves overnight are the best here, but you're also seeing a higher profit potential on those large up moves overnight. And I think what you're kind of seeing here, and you have to take the context of the market, which is the last 3 years. We've had a lot of big up moves and then kind of chop for the full day, right? So you get up. You're up 40 or 50 handles, and you don't really move off that mark. And I think that's why you're seeing the big difference between the large down day and the large up day. The large up day, you're getting that realized volatility in the overnight session, and then nothing is happening throughout the day. That's kind of been what has been the MO for this data set, which is only 3 years. That's all the data that exists.
Right.
So I think that's kind of an interesting point here is that, the big down moves, the big moves to the downside / all the stuff in kind of the inside is all pretty much in line here. I mean, obviously, if you get kind of a flat overnight or a small down move, you're getting a little bit of an added vol component here that is probably juicing some of the returns there. But it's really that the big moves up, you've had basically a chop fest after that.
Right.
Is what this is kind of telling you, especially when you're looking at data where the delta, the position is inside the expected move. Like this trade is inside the expected move on both sides of this because you're selling the 40 delta options.
So go ahead.
The next slide here, this is also pretty interesting because you're now widening out the wings another 10 points. You're really not getting paid for that. So it's pretty much the same. I mean, your win rates get a little bit bigger. You're managing these quicker, but you're managing for a higher profit potential because these are really meaty trades. This 20 delta wide or the $20 wide is still going to trade around half the width or close to it. So, you're looking at going from a $5 risk or a $5 reward, $5 risk with the 10-point wide to a $10 credit and a $10 risk. So you're kind of just doubling up almost. And you can see here, your returns are basically the same because you have that bigger outlier risk here. Your probabilities are the same. You see this kind of small up move being the worst time for that. I think a lot of that has to do with just the small up move kind of grinding higher. The big up move being a great time because you have that big move and it's kind of that's it for the day. And then kind of like inconclusive on the big move to the downside. Like those are kind of 50-50. A lot of times you're getting more realized volatility that comes into play. Sometimes you're not getting that realized volatility, and that's why those numbers are kind of flat. So it really tells you if you're doing these close to at the money spreads, 0-day trades, it's best to do them when like it's a small down / flat day or a big up day. Those are like your best. Those are the best times based on the last 3 years.
That's interesting. I mean, it's interesting.
Yeah.
What do you think about that? Was it something that you thought was going to come out this way?
I didn't think the big up day would be as good as it is.
Yeah.
It's felt like the big up days have continued to be face rippers, right? You open up 40 and by the end of the day, you're up 80. That's kind of how it's felt. But I think now that I'm thinking back on it, there have been a lot of 40-point up moves, and then we just do nothing up for most of the day. And because you're managing these quick for 20%, it makes sense that, for that first 2 hours, you don't really go anywhere. You're probably getting that exit and missing the end of day 20-point ramp. You're missing that extended tail that I feel like is in my memory.
That's correct. Good job.
So the next slide here. So this is, did we do the 30 points? Yeah. So here's our 30-point wide. Again, you're increasing the P&L, but you're adding a lot more risk, which is why the P&L increase is not getting as big as you would expect. It's not like, consecutively moving up in the same amount. It's basically the same average P&L across 10, 20, and 30 delta or $30 wide spreads. And that's because now you're getting into synthetic straddle or kind of more of a straddle position versus a defined risk trade here. But again, your best point has been these big moves up, which is kind of a surprise, but it makes sense with the management aspect here.
Very good. Very good.
So now getting on to the 20 delta short option, $10 wide wings. Across the board, you have positive P&L, which tells you that managing these quickly is probably the overall best thing to do with these sort of trades is just manage them quickly, get out, take your money and run. But again, it's interesting to see those large up moves have been the best time. Other than that, it's been that kind of flat move. And then here you kind of get, because you're going further out of the money, that pop and vol that you typically see with the large down move pays you in this situation because you're moving further out on the distribution and you are managing these quickly. You're not getting the continued outlier move isn't hurting you as much because you're at a 20 delta rather than the 40 delta for the shorts.
Very good. I'm getting a lot of good feedback already on this, that people are loving this 0-day signal here. So Good job out of you. Good job out of the team.
Yeah. So next one here, we're doing $20 wide. So again, you got to keep in mind that you're adding a lot more risk on these trades specifically. So the rate of change of these P&L wise is going to be even lesser because you have a lot more tail risk. You have a lot more max loss on these as you're going out. The $10 wide move from the 20 delta is only going to net you, 50 cents or $1 more in premium. Whereas with the 40 delta shorts, you're basically doubling your credit. The more $10 you go further out of the money because you're still you're still within the expected move. But again, you're seeing positive P&Ls across the board. But really the best being the no move or the big moves here for the 20 delta. And that's just a function of volatility. It's showing you, that when volatility is expanding or when you're having volatile events, the trades are paying more.
I love it. I mean, this is great research right here.
Yeah, this is one of my favorites.
Mm-hmm.
And then
quickly becoming one of my favorites.
Yes. I mean, and again, 3 years of data, and it's been a pretty bullish market. So these can certainly change. But if you're trading 0 days, you're trading the here and now. You're not trading 10 years ago. So I like this. Yep. So the last one here with 30-point wide wings. I think you're getting too much. You're putting too much risk on here. You'll see across all three of these, the average P&L per trade doesn't really change, and what that's telling you is that you're realizing more losses with the wider wings. They're bigger losses, and they're offsetting the more frequent wins, which is the increase in your win percentage here. So I think really what you're seeing here is the 20 delta. Going 10 or 20 points wide is probably the way to go. Like, you don't have to go wider than that. Right. You're not getting paid to go wider than that.
Yeah, that I think has been the gist for everyone. I think that we've kind of, all the research has been consistent there.
For sure. So a couple takeaways, if that wasn't as good of a takeaway as it gets. That segment was awesome. So over the past few years, there hasn't really been a bad time to sell delta neutral iron condors in the 0 day. They've all been, relatively good. There have been some that have been better or worse than others. It's very hard to kind of pinpoint those on a day-to-day basis. Overall, the small up moves showed the only consistent underperformance. So those kind of choppy up moves, especially just in the environment that we've been in with kind of lower volatility and that kind of upside skew that we've had over the last 3 years, it makes sense that those small up moves have been kind of the worst time to do it of the bunch. The large overnight moves, and we're talking about greater than 0.5% move to the upside, were often followed by strong 0 day profits. And that's especially the case with the 20 delta iron condor short options. And I think that's a function of us kind of chopping around at those, the big move hasn't been a big continuation in the morning session. It's been a choppy couple hours where the early management, the 20% management, has taken you out of these trades that probably would have spanked you at the end of the day. The flat overnight moves, which is plus 0.2%, were followed by good, consistent results across all mechanics. The strike selection, I think it kind of tells you that the less volatile trade is to do the 20 delta. Your 40 delta is going to be a lot of big wins and big losses, whereas your 20 delta is kind of your bread and butter here. But overall, the application of 0 day is pretty flexible. I mean, you can't really, it's hard to kind of not do this every day. I think that's kind of one of the takeaways here. But, whether you're 20 or 40 delta for the shorts, it's not changing a ton overall on your win rates or overall P&L. This is just a good one here. I think it's just shown that this has been just a fantastic period of time to trade this way.
Yes, it has been an awesome piece of research there, and an awesome piece of research going over it. You did an excellent job on it, so good job out of you. Hey, quick question. You sure the president is suing J.P. Morgan? Because that's down $5, but Goldman Sachs is down $25. You sure it wasn't Goldman
It's down
Sachs?
$25 after a $350 rally.
We're going to take a quick 90 seconds.
How will the bankers survive? Will the holiday bonuses get canceled for the employees of the great establishment of Goldman Sachs?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with my man Quentin in the house. We're back in 90 seconds with Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Niggy, we are back, son. And you know what that means? Time for a little more Tasty Live. Before we do, let's take a quick look at the market here. Even the S&Ps are up 7. NASDAQ up 120 and change. Your 0-day SPX trade has oscillated from about a $50 profit, obviously not a $50 profit. You almost... to about a $50 loss. You're sitting at about a $30 loss hanging out here. You need a little downtick in the market and you'll be filled for a profit, an uptick, and you're going to have your work cut out for you. You've been talking way too much. Enough out of you.
I wanted to say I closed the JP Morgan trade too.
Tasty Trade World Headquarters, your friend of mine. Q, what's up, brother?
Fellas, how's it going? Good to be back.
Where the hell you been?
I was visiting my family in New York, had a very nice and restful trip. All is well.
Restful is not how I would describe a hangout with Mark the Trainer.
No, he's in Florida, so no hangout with Mark the Trainer. So that's why I was restful. Exactly.
I was going to say, because he's a ball of energy, that one.
He is. Yeah, for sure. Yeah.
He certainly is a ball of energy. But I'm glad you got to see your. So you got to see your mom?
Yeah, got to see my mom, my grandmother, my cousin and his family.
Awesome.
Hanging out on the island. It was all good.
Awesome. Where? So Long Island? Where on the island are you from?
So, well, I'm from Manhattan. I'm from the Upper West Side, but my grandmother.
I know. As soon as I said it, that you were going to go with the "I'm from Manhattan" BS. I'm from Brooklyn. But I spent a year out in Long Island, too. So I'm just curious where you were in Long Island.
Yeah, I was in Northport. If you know where that is. It's like where Huntington is, but on the North Shore.
Oh, wow. So she's the one with the money.
Yeah. Shout out to my
was...
grandfather in the fur business. Way back in the day.
Got it. I was where your workers lived in like Selden, Long Island. Yeah.
Okay, so you were with the help. I gotcha.
Yeah. I got the whole picture now.
I don't think the Batistas were ever fur traders.
Yeah.
That wasn't the trading. Well, maybe a couple stolen furs, but
we had furs.
Yeah, did we?
They just had other people's names in them.
No.
We had furs. What's up, Q? Well, welcome home, my friend. You came to the polar frost, -9 degrees out there.
It was so cold on my walk this morning. Like I was bundled up too, wearing pants over my pants, face mask and everything, but my eyelids were cold. I need sunglasses or something. Like the skiing visors, but I can't be wearing that just walking outside. But it was really bad this morning, and I don't think it's really letting up the rest of the week, like into next week, really.
Do they at least have a good lunch for you guys, for the people who brave the cold?
Yes, they do. We've got Gigi's chicken sandwiches.
Oh, man.
Yeah.
That's one of my favorites.
Yeah, really good. Really good.
Yeah, I actually hear that. I have not got out there to have it yet. But they're capitalizing on the chicken Caesar wrap craze that's going on. I hear they have a great one. Phenomenon, yes. I hear they have a great one.
Wait, have you guys seen this?
Really good.
There's this whole protein phenomenon in every snack. There's protein this, protein that. I am very for it, obviously. More ways to get my protein in. But I think I don't want to say it's gotten to be a little much, because I don't think it could ever be too much, because I'm happy about it. But I feel like it's kind of crazy. I'm really surprised by there's protein pretzels, protein cereal, protein popcorn, protein everything now. Protein drinks at Starbucks.
It's marketing, boo. It's marketing.
Yeah, it's a new fad. Come on.
Whoa, I'm with it. I love it.
Yeah.
It's so funny because now I'm really going to date myself. I'm going to lose both of you. But there was a Woody Allen movie. I forget what it was called. It wasn't Everything You Were Afraid to Ask About Sex, but it was something else. Maybe it was, shoot, I can't remember. But anyway, he dies and comes back in time. He gets frozen or whatever and comes back in time. And when he left originally, everybody was, anti-steak and potatoes. You can't eat steak and potatoes. There's too much fat, too much red meat. You're going to die. You're going to get a heart attack. And when he comes back, that's all they're eating is steak and potatoes because it's completely changed. And he can't understand what's happening here. It's just marketing, man. Everything in moderation is what you need.
Yeah, for sure.
Anyway, give me some moderation with your top 20 list.
Yes.
All right, let's take a look here. Top 20 symbols going through the system and their IVR. Let's get that pulled up here. All right. At number 1, I've got Intel, 31. Number 2, SLV, 81. Number 3, Tesla, 7. AMD, 40. Meta, 33. GLD, 73. NVIDIA, 14. Netflix, 16. Micron, 58. Broadcom, 36. Microsoft, 37. Amazon, 35. Apple, 21. iBit, 22. Palantir, 23. Oracle, 49. SNDK, 75. SoFi, 14. MSTR, 24. And TQQQ all the way down at number 20 with a 19% IVR.
And you didn't miss a beat. You did that like you didn't take any time off.
I was watching like Marty do it. I was watching Bill do it. I'm like, man, I don't know how the viewers feel, but I was like, they are going so slow. They're saying percent after the IVR.
Oh, no.
I don't know if people like top to bottom or bottom to top, like how people like to go, whether it's like 1 to 20 or 20 to 1. I don't know what the people want there. I like 1 to 20 because we usually see the same names like in the top 5 and then, let the more interesting ones go later on. But yeah, I was watching them. I'm like, oh my God, I need to skip through half of this because they're just saying the things I see on the screen.
You think you got job security here?
Yeah.
Good for you. I like the confidence. I love the confidence. Actually, that's amazing.
Yeah, I had to do it for one of the days. We had a little kerfuffle, and I had to do it. And I was like, I don't know this. I listen to it every single day, and I can't do it myself. So you're irreplaceable, Quentin.
Yeah, everybody's replaceable.
You're the only one.
But you're irreplaceable.
You're the only one.
No, everyone's replaceable and no high fives. All right, fellas.
Of course. I would like a high five on the JP Morgan trade, but that was okay.
Hey, good job out of you.
Yeah, thank you.
It was interesting that gold is 6th on your list and silver 2nd on your list, but it's not that interesting when you take a look at what the markets are. Silver's got, 10-cent wide markets, and you've got gold with 30, 40, 50-cent wide markets. The public is in the right spot. If you're looking for liquidity and better markets, silver right now is a lot better than gold. SLV versus GLD is what I'm talking about. And silver and gold are both hanging out at 105,000, son. Did you think?
As foretold by Frankie, I must give him his high five. I hear you, Frankie. I got you, brother.
You're a young buck, Q. Are you in silver or gold?
Not really. No, I don't really trade the metals like that. That's not really my style, but shout out to my cousin Benny. All he was talking about all weekend was silver. Should I buy more silver coins and stuff like that? I'm like, all right, we need to get you in something with a little bit more liquidity rather than the silver coins and the gold bars. There's more.
Introduce Benny to silver and gold futures. Nothing like losing a Christmas present or Hanukkah present than introducing them to gold and silver futures. That's what you should do.
Exactly. Yeah, there's a lot more efficient markets out there, a lot more liquidity. You don't need to go to a store or have to. You don't need to go through all that stuff.
And you get leverage.
And you get the proper pricing.
Yeah,
you definitely get the proper pricing, which is really good. The leverage is a double-edged sword, so be careful.
Sure, but you can get smaller now with the micros and the mini futures. I mean, you can get as small as you like SLV. I mean, you can get as small as you like there. That used to be a problem with futures. They were way too big for retail. Meaning, original E-mini S&P is 10 times the size of a mini. Now it's 5 times the size because they cut it, and macro is 1/10. So. There plenty of size can be appropriate, but man, doing the coins, that's horrible. I mean, you get ripped off on a way in, you get ripped off on a way out. Yeah. The only way you can be saved is if pricing goes to 100, figuratively speaking.
Or if you needed to barter for food.
Although I did buy a gold bracelet, 4 rope chain gold bracelet. I know you know what I'm talking about, Q. I know my son knows what he's talking about because he's seen it. when gold was around $500 or $600 an ounce. I gave it to my daughter. I think I'm going to have to take that back now.
Seriously.
Yeah.
If she hasn't sold it already, Nick. Q, thank you so much for coming back. You saved us and you saved the market. It looked like we were getting a little bit of movement to the downside. We do have that in the Russell, down 26, down almost 1%. NASDAQ, Dow down 230, down about 0.5%. And on the other side, you got the NASDAQ up 0.5%, and the even the S&P is up about 0.1%, $12 and $152. The big news is silver at 100, sitting right there just now, and gold at 5,000. My friends, I'm going to take a quick 90-second break. Does that sound good to you?
Sounds great.
Awesome. Good job out of both of you. Good job, Nikki. Thank you for a great week. We can take a quick 90-second, and thank you for a great day, Q.
Mm-hmm. It's great to have you back, Q. We missed you.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. To the left of me is Jenny Andrews. How you doing, Jenny?
We're busy over here. We're busy over here packing up Logan. He is leaving right after the show to head back to school, his final semester.
I know, final semester of college. I can't believe how fast it goes, right? So
you
have 1 year without a college payment.
For him. For either.
In general.
Yeah. One year without any college tuition.
Yeah.
I guess I didn't really think about that, but
I'm entering into 2 in the same year next year.
That's
I know.
That's tough, but luckily both your kids are so smart they've received lots of academic scholarships.
Oh yeah. There you go. That's what we're going with. That's what's gonna make us sleep better at night. Jenny, what's going on this Friday? Anything crazy? Are everybody hunkering down in Chicago?
Well, I mean, what does it say weather is right now? Weather here right now says, actually, I've got it on Michigan City, which says negative 25 degrees.
Is it negative 25 or is it feels like negative 25?
Michigan City feels like negative 25.
Yeah, there you go.
Right here feels like negative 18.
Oof, yikes.
So I went out. I thought the animals would just stay in, but I had this one little skinny squirrel coming to my door and I felt so bad for him. So I went out to bring him some food and my hand stuck to the outside door handle.
No.
Yeah.
You're like what is it called where they stick their tongue to the pole? A Christmas Story.
In the Christmas Story, yes, my hand stuck to the outside door handle.
Wow.
Mm-hmm. It was a little wet. I was doing something in the kitchen, and the squirrel was at the window, and I'm like, I better throw this poor guy some food. And
so your hand was wet. You were
a little damp.
You were the kid from A Christmas Story. That's funny. That's funny.
So what about you? What have you got going on for the cold weekend?
Honestly, I don't plan on leaving my house, but I'm sure I'm going to. I'm just being a curmudgeon, but I might go golfing this afternoon. We'll see.
Indoor golfing.
Oh, indoor, yeah, for sure, indoor. Do you know that Cog Hill's open though? So Cog Hill, for those of you who are not from around the area, Cog Hill's a very famous golf course around here, Dubs Dread. They used to have the open. My son works there. They pride themselves on the driving range only being closed one day of the year. It's Christmas Day.
Christmas Day. Yeah. I can't imagine anyone would go there today, but
it's heated. But
it's outdoor. It's outdoor with the heating lamps over.
Yeah, I mean, like I said, it's heated, and I use that loosely. Like it's heated. You know what I mean?
I know everything's kind of canceled. Not necessarily canceled, but everyone's working remote, and kids are doing e-learning and everything. Everyone's in, but I'm actually going out. The cold doesn't bother me. I went to my tonal class last night. I mean, not that the cold doesn't bother me because I don't like it, but I went to my tonal class last night. Everyone else canceled. There were supposed to be six people were supposed to be in that class, and there were 2.
Can you please say it? The cold never bothered me anyway.
And then today I'm going out. I'm going out after the show, and everyone else who was stockpiling groceries to never leave their house, I didn't buy anything.
So you need to be Elsa you're wearing blue. I need you to give me the hand motions.
I was out without gloves, feeding the squirrels.
Feeding the squirrels, hand got stuck to the outside. Look at you.
I sometimes feel like the colder it gets, the less you feel it. I don't know. I don't know, but I'm going out. I'll meet you at the golf course, at the driving range if you want to.
I'll see you at Cog Hill, the outdoor driving range. Too funny. All right, hey, you know what we said we'd do first up today, Jenny? Can we address the Palantir, because I lost my platform yesterday right before we were doing it. Let's go to Palantir, and then we got a weekly recap from Kai, and we are taking live tweets with the hashtag LIZJNY.
Yes. Okay. Let's go on the platform, please. Into the platform, and here I've got Palantir. Palantir pulled up. We put on a calendar. Someone asked us about our Palantir calendar. We paid $643 for this calendar.
Yep.
And 38 days ago.
38 days ago. It seems like an eternity. But this is set up as an earnings setup calendar, and you can see it's actually set up. I know this sounds crazy. It's set up pretty well right now.
Yeah. I mean, it's $30 away from our, $20 away from our strike. It's not ideal, but
no, but there is still premium to be sold in the short. So we're going to close our short because there's nothing left in it but 17 cents. And we can just go to the trade page so we can walk everybody through this.
So
if you close out, there you go. So we're in the 7-day, earnings are in the following 14-day. That's why there's so much premium. We can stick strike to strike, or we can wait until right before earnings.
So I'll say a benefit of going so far out to Feb, and I think at the time we didn't even have 38 days ago, didn't have all these weeklies, but a benefit to having so much time is the ability to roll in the earnings cycle, and that's the reason we've got so much premium to roll to. If this was a regular earnings setup calendar and our long was in the 14-day, there'd be nothing we could do. But the fact that we can get rid of this 190 in the 7-day and go through earnings and sell the 190, we can get another 250.
I mean, it's pretty good. So the only choice we have here, and once again, this is a very easy decision. You would just press that button. But because we do a live show, we talk through things. So that's why sometimes it's a little bit slower of a process. Now this, we spent $6. We're getting $2.50. This is a bullish trade in for earnings. I'm fine with it. You could also just buy back your short and wait until earnings.
Yeah, if you think that Palantir is going to keep running up, if Palantir stays right here or goes down, you're probably better off doing it now. But if Palantir keeps running up, we'd get more for that roll. We can't predict the future, so I say we just roll it now.
I say we do it. We've been ignoring this for 38 days, and I appreciate
it. If we paid $640 for it and we get $250 for the roll, then we've got like $400 in risk in this Palantir.
Yes, and that's our earnings trade. We may layer something on it. It's a defined risk trade, but it's a
look at Microsoft up $16.
I know Microsoft and Meta are what's keeping this market up.
Crazy.
So let's look at our Microsoft position. What do we have?
Hang on, let me finish. I'll just finish the Palantir roll, $250 for the roll, and then we're left with the 190 calendar. What do we want to happen? Palantir to go up on earnings, hang out around 190, and we'll still have that 28-day, which should have a decent amount of premium in it.
Right. I mean, yeah, we'll have that. Perfect. We're filled. The other thing, too, is even if it goes up, we still have another roll built in to go to the 21.
Yeah, we can roll. But if it gets too far away from a calendar, you need it somewhat close.
Yeah,
if it's too far away from the strike, then we could be out. But we've got less at risk now that we collected some money for that roll.
Yeah, for sure.
Okay. You want to look at Microsoft?
I do.
And then this is interesting. It seems like, Microsoft is up so much, but we know it's been kind of beaten down because we had the 475, 465 put spread, which is still in the money, even with this big up move in Microsoft. So today's helping, but we put this on. This is another one. Look at this, 24 days ago.
Yeah, and we've been sitting on it. So this still has 28. How many days does it have left? 28 days. Yeah.
28 days. 28 days, but Microsoft earnings are next week.
Oh. Well, I would leave. Let's see if there's a little bit of follow through on this. We're not going to hold this for a loss. No, can you type in Meta too? I want to see if Meta is how high that is, because I know this is what's getting the market up. 2%. Has Meta been beaten down like Microsoft, or is this trajectory straight up? Yeah.
No, it's similar. It's similar. Now, like roaring back.
Yeah, that looks very similar.
Intel was down on earnings. Intel down on earnings, but we took our we put on, and I could pop out the side here. Activity in Intel. We did that new trade, the ratio Super Bowl. We put that on.
We took $200 out of it
on the 20th. So on what was that? Tuesday, Wednesday?
And we took it off 2 days later. Yeah.
Yeah, and took it off. And we decided to just do nothing on earnings and wait. And so do you want to take a look at putting that on or something else on?
I feel like not a 30 rank in Intel. I don't mind putting it back. I don't mind putting it back on. Let's just put it back on. Not different strikes. When we say put it back on, it's going to be different strikes.
Right, because you could see here at this one, it was the 50-70 call spread, so $2,000 in profit potential, and the 37 put. Yep. Now it looks a lot more appealing because that was Jan.
Yep.
Now we'd have the 45, and let's walk through these mechanics. Buying at the money call.
And sell one for 50% of the value, which are in an ironic turn of events, Jenny. Not that this matters. I've been playing with it. It's almost as if you're buying the at the money. So 45, 47 doesn't matter either way here, but 45 is the at the monies. It's almost expected move to expected move. And then when you look to it really always works out that way. And then even the put is to the expected move.
So and here it's interesting. The first one we had on was a $20 right call spread. This one's a $20 right call spread. Yep. It's just shifted by $5.
Yep.
And now we have to cover that $550.
You're going to the 31.
So you could do, depending on what you want to collect. I know Bob likes to collect a credit. Here's a small credit at the 32 level or a bigger credit at the 35 level. But I've been putting these on with just a smaller credit.
I've been trying to put it for a credit, but not a debit at all. Like whatever the smallest credit is where I like to land.
So this isn't bad. $2,000 profit potential. 2 short puts at 32. $1,100 in buying power.
Yeah, do it.
So I'm going to ship this. Now, Bob on Fire, I want to thank you because I will, with my stock, get too wrapped up in it. Buying puts to protect it, selling call spreads to pay for it, putting on a zero, ratcheting it up, like driving myself crazy. So today, Bob, or yesterday, I sold all of my Oklo stock, which I didn't think I would do, and just replaced it with these. Because take a look at how
Oklo's pretty good. We don't have an Oklo position in, do we?
No. And take a look at how good it is here.
I think it sets up sometimes it doesn't.
Well, here it sets up. I did the 9170. 9170. Okay. Yeah.
$30. That's whoa. That's $80.
$8,000. $8,000 in profit potential.
Yep.
$80 wide. And I sold the 50 puts. Yeah. So I took in a dollar credit, 9170, $8,000 in profit potential, getting long 200 shares at 50. I replaced all of my stock with this. The problem is then you have to double down. So like, let's say you have 500 shares of stock and you want to change that to this. Well, then your risk is getting long 1,000 shares of stock. So you're doubling your stock position, but at a much lower price.
Much lower price.
So I replaced it all. And now I never have to fool with it.
Look at you growing up.
And I know this uses $3,600, but your max profit is $8,000.
No, but you also had the stock. The stock holds up a lot of capital too.
Oh yeah. So
I mean, if you're comparing apples to apples, we're not going to press this in this account because it's too much for this account. But as far as that goes, you're replacing stock, and the stock in Oklo was expensive.
Right. It wasn't like a huge buying power savings. It wasn't like, oh, this is saving so much buying.
No, you're not trying for buying power. You're trying to save your stress level.
Yeah. So $3,600 for each one of these versus $4,400 for each 100 shares of stock. I mean, it wasn't that much of a difference in buying power. It just was. Now I don't have to fool with it because I felt like I was giving up too much money trying to protect it.
Yeah, now you're not. And you don't like getting it at 50. It's at 88 right now. So that's something like you had the stock, you didn't want to lose it. It's just for people just joining us, Oklo is a stock that our brother recommended that she wanted to always have in her account. So you're going to treat that differently too.
No, I got rid of all my stock. I used to not want to get rid of it.
That's a big portion of your account. I know how much you have in there, and I know you got rid of all your stock, but you want Oklo you want to be able to see it on your sheets.
Yeah, I want to see it on my sheets. Now it's there till January.
That's there till, there you go.
But like, I wouldn't do that with my Intel because, like some stocks, and a lot of people have this problem, right? A lot of people have this problem where if some stocks, they've made too much money on their stock, they don't want to close it. They just want to keep that stock going. They don't want to close the stock. Oklo, I didn't have that problem anymore because even though I started buying it at 10, I had sold so many ratio spreads to the downside against my stock. I had to keep buying more, that my cost basis in there now is like right where it's trading. My stock's barely a winner.
Really?
Yeah.
Oh, that's crazy. Okay, so do you want to take tweets or do you want to go into Kai's study or the market measures weekend?
Let's go to Twitter and then we can go to market measures later. We got filled on that Intel, so if you want to push that out.
I'm doing that as we speak. Activity. Okay.
We talked about, we were on Wealth 365 yesterday. We talked about a lot of things, but we talked about the SPX put spreads. Anyone who sold put spreads at 9 a.m.
You're out.
Yeah, you're out.
You're out.
Twitter. Oh, Fabio. Hello, ladies. Your SI is going to expire very soon. Would you consider to close the trade or let it expire? Do you have any other trade idea? Have a great weekend.
The markets are too wide. I think we just let it go. I know that sounds bad. We can have this can be open for discussion if you would like, Jenny Andrews. But the markets are so wide in there, it keeps marking. And word of warning, Frank the Great has been warning us about how illiquid those markets are. It's so deep in the money. I think we just let it go.
I kind of think so too. I've had some working orders in for mine to save myself a little bit of money, but nothing's filling. Those markets are wide. I don't know. I think we just let one exercise and one assign and just they're gone. Yesterday Liz, you won't like this, but I wanted to make so we're going to lose like $800 back in there. And I wanted to make my $800 back. So I put on a new silver trade trying to make my $800 back.
I say good luck to you.
So, and Eric's talking about the same thing. Happy Friday. Silver shorts are killing me.
Silver up again. It's up again today, isn't it?
Yeah. And then chicken dinner, RSB win. What RSB win finally?
Oh, yeah. It's Bob's trade. Ratio Super Bowl.
Oh, yeah. Finally fully closed in VLO. Nice.
Good job.
So do you want to see how I'm going to make my $800 back in silver?
I don't. I don't, because we're not pressing the button in this.
All right. Anyway, Fabio asked if there are any trade ideas.
He didn't say in silver.
I'll let you know. I'll let you know when I make my $800 back in silver. It's gonna take 3 months.
Oh, okay. It could take. That's a possibility. I don't think it's gonna come down. I think it's gonna hit 100 before. It's gonna hit 100 before it goes down.
But I will say, tell me what happened. I was last night just, looking at charts just for fun. So in 2011, I'm just curious of what, and if you're on Twitter and you're smarter than us, because you all are, what happened? Am I in 2011?
You're in 14.
Moving. So silver had a massive run. Where am I now? Come on. I need to get to 2011. 2009. Here we go. Okay. So silver had this massive run.
Yeah.
And then what happened? Like, what happened that it had this massive run and had that very, very fast fall?
No idea.
Like, you see how it took silver 2 years to have this run up, and then boom, in a week. So I don't know what happened, but something must have.
I have no idea.
If you're out there and put it on Twitter and put the hashtag LIZJNY.
Somebody will tell us. I feel like Frank's.
I mean, this was everywhere. This was silver. This was gold. This was all the metals that took 2 years running up, and in a week, boom. I'm ready for it. I am ready for it.
You've got to go to Twitter and go top down.
All right, hang on. Who needs bread? I have everything I need. What?
Honey.
Oh, because I didn't go to the store.
He's got that glass holds one full bottle, and that's how Jenny drinks her wine.
Maggie, I'm on my Mexico diet. I'm on my Mexico diet yesterday.
You've been on a Mexico diet for 3 hours, so I think because I know what you ate with your son the other day.
Oh, for his birthday. The Mexico diet was off on my son's birthday.
Yeah, that's what I'm saying. You've been on Mexico diet for 3 hours. I say at lunch today, this is your glass of wine.
Yeah, right. Yeah. No, I'm on my Mexico diet, and I'm actually doing. Yesterday, Liz, a cup of Greek yogurt for breakfast, 4 egg whites for lunch.
Oh, God, that sounds awful.
And 2 meatballs for dinner.
2 meatballs. Oh, good God. Okay, go underneath, too. Mikey's got another one.
Yeah, that was me, except it was my hand on the door. With the squirrel food in one hand and my hand on the door.
It's hilarious. Oh. That's a great movie.
And here comes the great Gatsby. Is this book written for tasty trade mechanics? Do you guys know?
I do not know.
With a cherry on top. Who wrote this?
I have no idea.
With the cherry on top and easy to use step by step. I have no idea.
No idea. So I'm going to assume it has nothing to do with Tasty, but somebody might have watched us for years and made a book. I have no idea.
Yeah, you know what? And this is an interesting story because Liz and I are not smart enough to catch on. One year, the same person emailed us every day, every other day, these detailed questions where we'd be like, oh my gosh, we're writing such a long, detailed explanation to this person. I'm not going to name any names. And then a year later, the book came out and it was all of our emails.
I know.
Literally all of our emailed answers to them. And they put it into a book.
And they put it into a book. That's correct.
I'll be expecting my royalties.
We do have a lot of people that manage money that ask us questions, which I think is pretty interesting.
Yeah, and we're happy to answer questions, but then don't make a book and put your name on it.
Okay, so Theta Busters, do you have any? Can you discuss any good trades on copper? Which underlying would you use? I'm in COPX, but they don't. It's hard to trade options in COPX, but I've been in it for a long time. Like I said, I'm a metal bull, and it's been very good to me.
Yeah, of course it has.
But all metals. I'm in palladium and I'm in COPX. But this one, I believe it's set, like it's hard to trade the options in it.
And people are still getting in. I told you my in-laws called me the other day and said, "Oh, do you think we should buy gold in our portfolio?"
Yeah. A lot of people are. And you listen to other networks and people are buying it. I mean, I just listened, like I said, I listened this morning and they said silver's going to hit 100 before it goes down.
Well, didn't it almost hit it?
No, it was like 95, I think.
Yeah, here it is.
Oh, it hit 100.
Yeah, it's there.
Today.
It did today.
Well, they said it yesterday, so congratulations on your wealth, whoever said that. So we have the 100 call in silver, Jenny.
No, but it's SLV isn't.
Oh, check SLV, yeah.
It didn't hit 100. SLV is like 90. It's not the same.
Okay.
Yeah, it's not the same.
Okay.
It's not quite the same because we have the 100 call and it's still $10 out of the money.
Okay.
But yeah, this is part of my making my $800 back. See how juicy those 100 calls are now?
Yeah, I see them.
I sold some yesterday.
You've been short metals since 60. You've been short SLV since 63.
Yeah. No, 80. I could look at my strikes.
Well, take a look at our SI strikes because we were out of the money in our short SI.
73. It was 73.
73, fine.
Yeah, I guess 73 in SI when I started my SI, but then I didn't move into SLV till after that was well deep in the money. So I would say my SI was deep in the money before I switched to SLV.
Yeah. Okay, so let's do you want to do Kai's study or do you want to go back to Twitter?
Sure. Well, let's make sure we get to everybody. And we had Eric with his trade. Earnings as far as today goes, nothing. This is next week. So next week we've got some big ones.
Yeah, it's
Meta, Tesla, IBM. We haven't looked at that in a while.
We haven't looked at IBM in a while.
What other big ones are next week? SoFi. Do we have something in SoFi?
I don't think so.
No, we don't. Which SoFi is one of those that really had quite a rally, but pulled back a little because it was in the 30s, 25, 26.
Yeah, 13 rank. I don't mind being in SoFi. It's a low price product. 9 million shares have traded.
Yeah, well, we'll wait till earnings. So no earnings to do today. Yeah, let's jump into Kai's study. Ready?
Yeah, I'm ready.
Ready for it's a real brain buster, Liz.
Is it? I can't wait to see it. I have not looked at this yet.
Okay. All right.
We thank Kai for bringing this to us. This is literally just the weekly summary of all the market measures that have been done.
And there are only two. There's only two here. So
wait, how many days a week do they do market measures then?
So there's market measures today. That's the brand new SPX study that they're getting from Jacob. That's not included in this.
Why isn't last week's included? Oh, because it's this week's?
That's not included in this either. Yeah. So I think we're getting Monday and Wednesday, or I don't know. There are only two in here. Just left. Okay. So we just like to know if we don't watch them all day, every day, what are we missing? Are we missing anything, any valuable information? So we just want basically the first slide and the last slide. We want to know what the study is and what the takeaways are.
And because guess what? Everything's archived. And if somebody looks at this and said, and there's been times where we're going to need to look a little bit more into this because I don't understand this takeaway. Jenny seems to believe that is not going to be the case for these.
Not for this one.
I haven't seen it. So let's go forward. So there's only two. So you're right. We're not getting the market measures of the 0DTs.
No. Okay. Relationships between assets and their IV. Okay. So yeah. I'll ask you now, and I'm 100% sure you're going to get this right.
Hit me.
If the market goes down, does SPY IV go up?
Yes.
If the market goes up, does SPY IV go up?
No.
You're correct. And if the metals go up, what happens to their IV?
IV goes up. Metals.
Ding, 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 ding. Liz, you are passing with flying colors.
So yes, this is an interesting anytime, and it's true of your any type of commodity, for lack of a better term. So your silvers, your golds, your oils, your natural gases. That we say this on. I said it a million times if I've said it once. The pendulum swings in both directions for IV.
Well, we're going to see. Maybe you've got a couple surprises, but you're going to see it all right here. Okay. So here, implied volatility reflects how sensitive an options price is to changes in the underlying asset, capturing the market's expectations of future uncertainty.
Right? As price moves, implied volatility can respond asymmetrically or disproportionately, revealing how traders adjust risk perceptions in real time.
How do different asset IVs respond to changes in the underlying price? So we're going to see it right here. Here we go. This is taking a look at SPY, Qs, IWM, gold, bonds, and oil. So we've got both here and looking at what happens when the underlying goes down.
Okay, so I'm just trying to get my bearings on this. So this is saying the underlying, the first column is if it goes down 1%. The second column is if it goes down 2%.
Right.
The implied volatility. So and then the percentage of the implied volatility. So if SPY goes down 2%, the IVR goes up 12%. Implied volatility goes up 12%, right? Am I looking at that correctly? So if SPY goes down 2%, implied volatility goes up 12%. Yeah, this is exactly what we should have seen. TLT is the one that I guess I should know.
It's going up. This is when the underlying goes down. So
yeah, I mean,
at some point, if bonds get so low where you're like, they usually don't go lower than this. I don't know that we'd see, but yeah, I mean, here it is. Here's the research. It does go up.
So here's what I'm gonna be, because I don't know that I could have answered this question. If in TLT, what happens when TLT goes up? Does the implied volatility get sucked out of it? That I don't know. I'm on beta. I'm on pins and needles here.
I don't even know if we get the answer to the upside. All right. Note that SPY had the largest sensitivity to its IV and USO had the lowest. So it's not that much in oil. It's compared to like the market.
Okay.
Well, and gold didn't really matter, unchanged until we got a bigger move.
Yeah.
Oh, here we do have it when the underlying goes up. Here we go. When it goes up.
Good. Gold's the only asset that has strong positive relationship between price and IV. But you'll notice even USO doesn't go down that much.
It doesn't go up. It doesn't go up.
Yeah. Bond and oil IV did not change when the price went up.
Yeah.
Okay, so TLT does that. The implied volatility of TLT doesn't change that much, right?
So here's my question: If bond and oil if bond and oil IV doesn't change when it goes down or up, then how does it ever change? It changes with like worldly events, when there's stuff going on in oil, when there's news in oil, like that's what affects the IV more than the move.
Yeah, I agree with you. So it is true. So that's pretty interesting. Okay, so then so my questions were answered in TLT, so thank you very much. All the rest of this, don't you think you've been trading for so long that all derivative traders know this relationship?
Right. Yeah, for the most part. I mean, what I will say is you see how much gold IV, and you can say silver too, gold and silver, they can put them all in there, the metals, how it goes up, when the underlying goes up 1%, it goes up 5%. When the underlying goes up 2%, it goes up 11%. So the rally we've had, I don't fault people for selling premium, selling calls. I don't fault people for doing that in these metals, because what do we always preach at Tasty Trade? Follow the IV, chase the IV. And gold and silver have gotten their such high IV because they keep going up, and their IV keeps going up and up and up and up. And that's why it's hard not to be a premium seller and look at those calls and not sell them, because there's so much premium in there.
I get it. And we follow it. And you'll notice the implied volatility, it goes in waves, right? For the longest time, we weren't doing anything in SLV because there was no implied volatility and it was such a low price. Now it's at a price point and the implied volatility is there. So you're right. As premium sellers, you do chase it, and it is enticing to get it. But I also think I don't want it to be the end all be all. We chase implied volatility, and I know Jenny is selling. I'm sure she's selling naked calls in SLV. But the problem is you're small. I like that you said
yeah.
I'm trying to get my $800 back. You're not like, okay, implied volatility in silver is this, flow total loaded.
No, I'm small. Like I'm not in SLV, I'm in SLV. And let's say I sell 100 call in SLV for $4. So I take $400. And SLV breaks 100 and it's trading 104. Well, I've got 100 short shares, and at some point I might call uncle. Like if it keeps going up and going up, maybe I'll say, you know what? If it goes $20 past my sale price, maybe I'll buy back and take that $2,000 loss. Like,
okay, here's what I'm going to tell you right now. And as you're talking, I really like this. Okay, so do you know how we talk about selling puts is easier for us in SPY? Because as it goes down, if it goes down, your implied volatility is higher. It's easier for you to defend because there's more premium in that option. You can roll it, you can do something with it. When it goes up, it's really hard to defend calls in SPY because the implied volatility gets sucked out of it. There's nothing you can do to defend it. It's the exact opposite in silver. So if it goes to 100, your SLV, if SLV goes to 100, that means if it goes up 1%, your implied volatility is going to be a lot higher.
Then it's gone up another 10%.
Yes, then you have a lot more premium to defend it. So that is
It's easier to roll when you can get that's why I'm going shorter term. Like I'm not going far out, I'm going shorter term, so I'll have the ability to roll if I need to.
Yes. So from that perspective, when you're talking implied volatility in silver, that is one great thing about it. It's up high, but if it goes up higher, the implied volatility will get higher, which makes defense easier.
Funny.
Yeah.
So, all right. Takeaway. Since 2022, gold was the only asset that had a clear positive relationship with changes in its underlying price.
I would put silver in there too.
You could say silver there too. It wasn't on the chart.
You could say metals. You could say metals. Okay. We saw a lower sensitivity between big price moves and spikes in IV if IV was already high to begin with. Okay.
This makes the case that selling premium in higher IV underlyings could be safer than in low IV underlyings.
For the same percentage price move, selling premium in crude oil will not go against you as much as a similar trade in SPY.
Okay. Because you're going to get that boost in IV and SPY, much higher boost.
Yeah.
Okay. All right. That was the first market measures, which. Yeah, probably a good review.
Good review. Yeah, good. Good discussion points.
Next, volatility, strike distance, and break even. What the data shows. So this was interesting. Honestly, this is very interesting.
Okay, so the volatility. So we talk about this all the time. We talk about this all the time because when your implied volatility is high, your strike price should be farther, meaning delta wise. So if we're gonna say the 30 delta in a high implied volatility, a 30 delta is a 30 delta is the 30 delta. We're not advocating that those are different. It's just going to be a different strike if the implied volatility is high.
So when volatility, when you look at a cycle of options, and if you're looking at February or March, you've got the brown bar. We refer to the brown bar, and that's the range, the expected move for that period of time. But if volatility increases, that range increases.
The brown bar gets bigger, yeah.
Brown bar gets bigger. So you've got a much wider expected range for that stock when the volatility is higher. So volatility and strike distance, my guess is when volatility goes up, the strike distance increases.
And your break evens, because that's what they're going to do. When the implied volatility is higher, your break evens are farther.
Yep. So
I'm just kidding. And we're done.
Strike distance is the distance between the strike price and the underlying price.
Okay. And the break-even ratio, on the other hand, aids in calculating the price movement required for your option position to break even, taking into account the strike price and the option premium. I'm just going to give an example. Say you sell the 100 call for $3. That means your break-even is 90. Put. You sell the 97 put for $3. That means your break-even is 97. If you sell the 100 put for $3, your break-even is 97. Right? Did I say that right?
Yeah. The third time's a charm.
I said call first. I was trying to do the downside.
You said call, then you said 97 put, then you got the 100. Yeah. You sell that one.
Third time's a charm.
You sell the 100 put for $3, your break even's 97. You sell the 100 call for $3, your break even's 103.
Great. There you go.
Okay, now the question arises, does a change in implied volatility affect the strike distance and break even ratio? Yes, because if those options are going to be more expensive. So vol's higher, that 100 put's not going to be $3, it'll be $4 or $5. So yeah, it changes your break-even ratio, and it definitely changes the strike distance.
So my question in this study is you have to go apples to apples. You either have to compare the strike or the delta, right? So once again, I like how you said that. You said if implied volatility were higher, that 100 strike, you have to compare those two, right?
I think all this is saying is like yes and yes. Like when vol's higher, your strike's further. When vol's higher, the ratios, the break-even ratio is different. Like I think it's just yes and yes. Options more expensive, strikes are further. The 30 delta that might have been the 100 strike might have been the 30 delta. Now it's the 110 strike that's 30 delta.
Yeah, it could be the 110 strike. So I'm hold on one second. I'm actually apprehensive I just want to play with you for a second to go see if we can do the next one. So I don't know the answer to this. So let's say implied volatility is a 20 versus implied volatility is a 40. And we're looking at the 100 strike, not the 100 strike. We're looking at the 30 delta. Mm-hmm. Would the premium be the same in the 30 delta, just the strike would be different? So do you know what I mean? So say it's the 100 put and we're collecting $3 at 20% implied volatility. If I'm going to the 30 delta with a higher implied volatility, maybe I'm selling the 95 put, but it's still $3.
Yeah, I don't know. Well, I guess then that's that break even ratio. So let's see what they have to what Kai has to say.
I really don't know that, right?
How much that changes. I know your strike's changing. How much is the premium collected changing?
Yeah, right.
And here we go. Rising IV fundamentally changes your positioning, your strike distance. And this is what's shocking, like the percent. Look, strike distances widen 76% from $15 to $26 out of the money to maintain target deltas.
Okay, right.
Giving sellers more cushion while collecting significantly higher premium. So your strikes are changing and the premium's changing.
So you're going from 15 to 26 and it's going from 186 to 307, right?
Yeah.
Yeah.
Yeah. So that's why, again, with high vol, you've got your break even so much further. You're collecting more. That's why high vol is nice when we have it. That's why we get bored when we don't have high vol.
Well, you get paid to take the risk. So that's a common phrase that you hear in investing. You get paid to take the risk, right? And when implied volatility is high, the implied volatility is saying this is priced to move. We don't know which direction it's going to move. No one knows which direction it's going to move. But high implied volatility says that this asset, whatever it be, is priced to move.
Mm-hmm.
And so you get paid to take that risk.
Right. Okay, so then what break-even dynamics shift differently by option type. Call ratios remain relatively stable, 0.7x to 0.6x, while put ratios surge dramatically.
Whoa, look at that.
9.7x, so that is dramatic. As premium grows relative to strike value, this means high IV puts require larger price moves to threaten your position. So high IV puts you're gonna get so far away, but in gold and silver now, that's what you're seeing.
Well, I'm gonna argue this is all SPY.
This is all SPY, yeah, because it's looking at down. Right, I agree, but that's why, like, it's it's the opposite in things like the metals, where that's why you're getting so far to the upside with those options.
Right, and you're getting so much premium. You flip the cards over with gold and metals right now.
All right, what's the bottom line, Liz?
Here's the bottom line, Jenny. High IV offers more premium and wider strike placement, but demands understanding how break-even math changes across volatility requirements. Trade accordingly.
Yes. Good. Excellent. And that is the end.
So, they do almost all the studies are done in SPY, right? Because it's the liquid, it's things of that nature. So I'm glad they pepper in the fields of gold and silver, beat to their own drum.
Yeah, so that was good. So that was 2 of the market measures this past week. Today, the boys did one on, and it was a good one. I liked it. I actually liked it. Liz didn't see it, so we're going to bring it to the floor on Tuesday. And we'll
did not see it.
So since you missed it, Liz, I'll bring it to the floor.
Well, I appreciate you, Jenny. Thank you very much.
It'll be my own market measure recap for you.
Yes, and you're just going to recap it for me. It's going to be wonderful. Can you do me a favor and go back into Twitter? Because and go top down. We've got Dwayne, Ron
Sure.
B.
Did we get to everyone from today?
We did. So you got to go top down now.
Oh, here, your Great Gatsby wrote. Is this book? Oh, that was.
I was like, did you take a mind eraser shot?
No, because this was 15 hours ago. So I think he sent it yesterday and then again today. Yeah, and then it came in again today.
Okay.
Happy Friday. Our cat zebra. Hashtag drone.
I don't know
Ron V, welcome. I think you're a new tweeter.
I don't know what's going on, but I want in. Go to RCAT.
Okay, RCAT, and then we'll get to Dwayne.
Perfect.
All right, hold on one second.
So you're saying zebra. I'm assuming you're bullish. I'm assuming call zebra.
Hashtag drones, he said. Oh, Red Cat Holdings or something. Or whoa, look at this.
Wow. Okay.
Okay.
So only on the heels of this, Ron, we've got a 57 IV rank, which means there's a lot of implied volatility here.
Yeah, but this zebra is cheap. So the zebra is actually pretty cheap. If I'm selling now, just talking about deltas and stuff, when you have call skew, it's kind of crazy. When you have call skew, we know like 50 deltas are at the money. But when there's a lot of call skew and I say buy the 50 delta, you're like, oh, geez, it's the 18 and we're trading 1687. Why is this the 50 delta? It's because of so much call skew here. But we're still going to go to at the money.
Yes.
So we are selling one and you're getting $2 extrinsic value. So all we need to do is find $1 extrinsic value. I mean,
it's not bad. It's going to be about $4. The whole
the 70 delta says the 15. Then you're giving up a little. But honestly, this is not too expensive. In my mind, not too expensive of a zebra for something that's gotten from 6 to 16.
It's not bad. It's $4.
$4. Then you participate on the up move 1 for 1 to the upside.
You continue the ride with it for $4. And then if it goes from 16 to 20, you make $4. It's not bad. Now, would you take advantage of the premium here?
I don't.
Ron, I like it. Hashtag drones. This is awesome. I might actually do a big lizard here with Jenny.
I don't want to cap my upside. I don't want to get my upside, but I do want to look and see. Sometimes these, I just want to look, and I know it's been just a discussion this week. I'm just curious how far you could get on the put. Like if you said.
These work very well in call skewed environments.
Right, and now the strikes don't go any higher.
No, but just do the 30, do 1730.
And then your put's at 7.
There you go.
I mean, I know this is a small debit. It's tricky because your strikes are 7 and then you jump to 10.
Well, I would just pull your call in by 1 strike and you're going to take in a credit on the top side. Yeah.
But then it goes in by $3.
Oh, I see what you're saying. Pay 50 cents for it. We were about to pay $4 for something and our break even is where it is.
Yeah, pay 50 cents for this. Then if we get in at 7. Otherwise, we got $1,500 profit potential.
And
I'll pull it in. I won't pay for it. 1732.
Yeah, I mean, we've got
$500.
Yeah, you can make $1,500 by using 5. I like this. No, Ron, there's nothing wrong with zebra either. So I like it.
The zebra you'll be making. Oh no!
Oh, so you couldn't even put the zebra in.
Oh, boo! So what? All right. If someone really wants to trade this, I think you call the trade desk. I think when it says it's set to closing only, it's like to protect people because the markets are so wide.
Yeah, you can call. It is to protect you because the markets are so wide. Yeah, but I do believe the zebra would be the same thing. Just pop it in. See, like go to the zebra again because I think it's gonna say the same thing. It's not as if it was just the leaps. Do you know what I mean?
Right. 411.
Whatever. I mean, just pop it in so we can see it. Yeah.
Ooh.
Yeah. It's all of it. You can call Ron. I would make a phone call if I were
going to stop people from buying the stock.
No, it doesn't.
You could see I could buy a share of stock. And I'm just going to buy one just because.
Doesn't stop you.
Doesn't stop you from buying the stock, but it's kind of like there is a protection if markets are very wide, I think. I don't know. Again, call the trade desk if you need some help. Should we buy one share of RCAT?
Heck yeah, we want to be in it with Ron.
Well, we'll just that way we'll keep an eye on it.
Perfect.
We have 9 minutes left.
Well, we do have to go to Dwayne, and then Great Gatsby comes in again.
Okay, Dwayne, good to see you. Samsung has indeed made a major breakthrough by using silver in its next-gen all-solid-state batteries. This technology, developed by Samsung SDI, is widely considered the holy grail for the EV industry. The core innovation is
silver, is my guess.
Silver, yeah. So silver's gone wild. It's being used also.
Was that today? Was that today's news? Is that why it's up today?
I don't know.
I'm looking right now.
Thank you, Dwayne, for the info.
Yeah, we do appreciate that. Thank you. I don't know. I can't tell.
And then here, the Great Gatsby. And I know it's Gatsby, but I'm just going to always call him the Great Gatsby. This is the author. I believe it's on the Tasty Mechanics. I read somewhere it's for traders who watch Tasty, but when it's time to place a trade, they don't fully understand the rules.
Oh, I get it. Yeah. And that's okay. I mean,
yeah. Got it. Thank you. And Ashvin, I was in Montana the day Jenny said, today's the day I start shorting the metals. So he knows when it was. When was it?
When was it?
I was in Montana. Well, I mean, we know it was SI was trading 70. And we sold the 73 and a quarter. So SI was trading 70. So you must have been in Montana over Christmas break, right around holidays, New Year's Day. I think he was celebrating New Year's in Montana.
So look at this. That is just the January move from 70 to 100.
Yeah, right. And we can see the day right here. It was 31 days ago. So I ended December.
Yeah.
Yeah.
Yeah, because it was trading 70.
Yeah, it was right around 70. I remember thinking like I've got $3 in room.
Yeah.
Yeah.
Crazy.
But I know. I mean, honestly, we're lucky that we haven't been there are a lot of people who've really been taken down by silver.
There have been. I mean, it took a chunk out of our account, but it's not too bad.
I know.
We're defined risk. But hey, you live and learn. You live and learn and live to trade another day.
Here's what I learned. Always listen to Liz.
I don't think that I'm right or wrong in this situation.
So in school,
do you know what I mean? Everybody can have differing opinions, and I have lots of losses on my books. It's just silver it's tricky for me because I'm so ingrained by my father, like buy silver, buy metals, hold them. Like that's what I was taught as a kid. And I don't have huge wins in these because I have small positions. Do you know what I mean?
Yeah. But Liz, LTL. So there's a saying at my daughter's school, LTL, when the teacher has a question, kids will just yell out LTL, which means listen to Lily. They all just turn to her. But I'll bring LTL to our show, LTL, listen to Liz.
I appreciate that.
LTL.
That's pretty funny. I like it.
LTL, listen to Liz.
It is
all right. Now, did we get to everybody? I think so. Yeah. We did. I think so. Oh, Bob on fire. Microsoft, $816 on a ratio Super Bowl in less than a day.
Yes. This has been wonderful for me, Bob. My AMD came off in a day. It was awesome. I got I'm a fan. I'm a super fan.
Yeah. Awesome, Bob. Nice trade.
Yeah, I'm a super fan, and I do like it. I do kind of like, but you know what I like about what you and I do, Jenny? Bob's amazing. He brings the trade to us, and we can kind of tweak it to our own liking, right? So it's a wonderful trade idea. He's in December 18th. I've done some that are in January. I've done some with that where I'm taking in not as much credit as he is. We kind of tweak it, but I do like it a lot.
So it's funny, Bob, because I weren't on it, but we did an hour presentation on Wealth 365 yesterday. We talked about a handful of things, but we did bring up your trade. We gave you credit, and we talked about this trade. And people,
you might have some extra Twitter followers today.
yeah, you may have gotten extra Twitter followers. The chat was going nuts. And we had some really funny questions in the chat, and wasn't one of them is Bob's whole portfolio?
No. So I was laughing. So the chat, they're all over the place, right? So not a lot of them are complex option traders. So, Bob's very versed in what he's doing, right? So we gave Bob credit. So we kept referencing Bob. And then one of the chats in all caps said, does Bob own any stock? And I was like, yes, Bob does own stock. And I know that for a fact because I've had many conversations with him. He's got a lot of stock in the account. But that's just it. You do lots of different things. It's not as if in anyone's account, it shouldn't be, this is it. It's not just an RSB or bust.
But everyone in the Wealth 365 presentation was very intrigued by Bob's trade. And again, probably we mentioned at Options Barbecue, Bob may have gotten more followers.
You might have gotten more followers. We'll see.
All right, 10:52, Liz. Almost the end of the week for us.
Jenny, I'm very excited because it's the end of the week for us. Then you and I are only going to be at work. I mean, we're at home on Monday. Tuesday and Wednesday we're at the SIBO. And then you and I are leaving on a jet plane for our extravaganza.
I know, but I don't know if you've looked at weather lately. It's not looking as good.
Oh, I thought it was still going to be warm down there.
Well, this cold front's not helping.
Really taking.
I don't know if this cold front's going to hit Mexico next Thursday, but it's not what it used to. It doesn't look like what it used to look like.
Yesterday, you told me it was going to be 82. Yesterday,
maybe Mandy said that.
Oh,
if I'm gonna go into Cancun the day we get in. Low of 63, high of 74.
Hey,
that's kind of what it looks like.
74 is going to feel like
we got low of 50, high of 72.
What? I need to rethink my outfits.
This is a major problem. If it's going to be low 70s, it's totally going to change our outfits.
So that dinner on the beach, we're all going to be in jackets.
I hope Amazon delivers quickly.
Yeah, no kidding.
In this cold weather, I know.
Yeah.
Spoon's only up 8. Spoon's only up 8. We've had a little fall. We'll see.
Okay, but hold on. Just because we talked about this also yesterday on our wealth with our presentation, we talked about the SPX 0DTE, and once again, the 9 o'clock, the pops between 9 and 10 o'clock are when you get out. So even if SPOOs go down on the day, we're out of our SPX.
If you're just selling a put spread, if you're just doing the one side.
Mm-hmm. Yeah.
Okay, everybody out there, have a wonderful weekend. Stay warm. Don't try to grab a ice cold handle with wet hands.
And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show. We will see you on Monday.
Good Monday, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm designer, they wanna buy me, baby, I'm too pricey. Yeah, I'm cherry, I'm nice things, I'm ice cream, I'm melting. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see. I'm on the runway, telling them, tell me something. Said I love it, I'm working, I'm perfect, and you know I know I'm worth it. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see. See. Turn it up.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And we welcome you back with open arms. I know your Canes did not pull through. It was a very sad first half in general. I was like, what is this game? And then it was just touchdown after touchdown after touchdown. So that was fun, at least.
Man, I don't even know where to begin. As you know, of course, everybody knows that I was in Miami. As you can hear, I don't sound that great. Listen, the crazy part about it started on the way down there. I was on the plane, and I was starting to feel like I was coughing a little bit, which nobody wants to hear anybody cough on the plane. And so I was kind of like, I was like one nose clearing my throat, trying to like keep, and I'm like, shit, am I getting sick? No way. I'm going to Miami. There's no way I'm getting sick. I was getting sick. And of course, 3 days I'm down there, I powered through it. Each day it got worse. Matter of fact, the day I was watching the championship game, my buddy's house I grew up with, oh my God, I was so sick, dude. Like, it was ridiculous. But I'm still hanging there, still having drinks, still trying to have a good time and all that. Like you said, tough game, tough weekend, sports weekend overall, obviously, with the Bears losing that game. I did go to a cool-ass Bears bar in Miami, though, not going to lie. Ted's Hideaway, for those who don't know, if you've never been there, never been down there, go there to watch a Bears game. It's legit. I actually talked to two of the dudes who started the spot when I was walking in there. They were cool as hell. Loved it. Great spot. But tough one there. And then both games, similar situations. You had the ball driving the field with the game on the line. It was yours to win, and just didn't happen. So congrats to the Hoosiers. I got to say, they were down there in full. They were all over the place. I was staying on the beach, the South Beach, for those who don't know. And they were all over the place. All over the place. Like, seriously, like red everywhere, dude. Like, they were all over the place. So, congrats to them. I know two of our people in the office have been going nuts, I'm sure. I'm sure there's probably other Hoosier fans that have showed up in the office. Like, yeah, I went there. And I'm sure they showed up out of the blue. I'm sure this happened. Yeah, I'm sure of it. All of a sudden, there's like all these Hoosier fans. That's how it goes. But yeah, man, came back and was even more sick than I was in Miami, which sucked, as you know. And so the last couple of days, I sounded worse than I sound now. So I'm actually feeling better, believe it or not. Things are good. But yeah, it was a tough weekend. Tough of sports. We'll move on to the next.
Yeah, tough indeed. But yeah, the Bears bars actually go pretty hard. I went to a Bears bar in Boston, and they were so decked out. They even changed the lights. Like, the overhead lights at the bar were orange and blue. And they're like, yeah, we just have transplants from all over the country that now live in Boston. And they just like rent out the second floor of this bar every Bears game. And they get like catered food and whatnot. And I'm like, this is amazing. So yeah, if you find
what was crazy about that one,
bar, it's legit.
What was crazy about that one was not only was it a Bears bar, considering the weekend it was, most of the Bears fans that were there were Hoosier fans. So that's what was crazy too. Like, we're all in there, we're cheering for the Bears, but clearly the very next day we're like cheering against each other. That was wild. That was kind of wild, honestly, for us to have this solidarity moment over the Bears. But like, they're all rocking their, Hoosier stuff, and I'm rocking Miami stuff. That was kind of weird.
Yeah, I don't doubt it. But glad you had at least the best time you could have with the sickness. I know planes certainly do not help with the sickness. That's for sure.
Yeah, I know, right? I it was coming. It was like literally not long after I got on. It was like I was starting to cough. It was weird. It's like, where'd this come from? I don't know. Whatever. We're over it. We're moving past it.
Love it. Well, you missed a couple of things. First of all, Natty Gas. Natty Gas has been ripping to the moon. Insane. This is the H contract. The G contract's even crazier if we look at the position that I've got. But yeah, nuts move there. This is sitting at 5 now. Huge price difference between the H and the G. We've got silver that is now at 100. So that's insane. And then gold futures are at 5,000. So we're just blasting off here.
I just it's like the way that it's been going. I guess it's not surprising. You're just kind of surprised that you haven't seen this huge pullback. It's wild. I don't know. Is it talk of like? I know I've heard things about the purchase of Greenland and all these other weird things that are making geopolitical tensions rise more. Clearly, that has a lot to do with it. But holy cow, man! This is a heck of a way to start a year.
Yeah. Absolutely nuts. And it seems like there's no end in sight, which is the crazy thing.
At this point, just keep going. Let's keep going. I mean, you know what I mean?
Yeah.
110, 120, let's keep going in silver. Why not at this point? Why slow it down?
Yeah, I want to actually go back and see what that silver. So we had this call, the calendar spread at 100, the Feb May.
Yeah.
Sold it for twice the amount. Let's just see how much this is trading for now. 640. Yeah, okay. We said that it would probably be like another $100. This is another $200. So if you held it, if you had the cojones to hold it, you're thriving now. But I mean, I would have expected some kind of pullback after this rip higher, and we're just not seeing it.
Sure.
This is nuts.
For sure. I mean, I got to give Chris credit. Chris Vecchio, I got to give him props. He talked me into a gold GC contract spread in April, the 5,000, 5,100. I mean, we put that thing on maybe like a month ago. And I was like, you know what? I'm cool with this because it's April. And like, that's a long time from now. You know, like, I mean, at the time we did, it was 100 plus days. 5,000, 51. I was like, I'm cool with that. You know, we put this, I think we paid like $1,500. Yeah. Cool. You know, it was like a max profit, 8,500. I like that idea. Like, whatever, it's way far out. We'll get the pullback and then we'll pull by higher. There really hasn't been much of a pullback. It's just gone higher. Like, holy cow.
Yeah, it's been absolutely nuts. And, you know, I guess we'll see where this goes. We have a lot of, I think it's most interesting to see if there's any commentary on the cost of these goods to make some of these chips. Because eventually, like, these prices get so high, I think that starts to eat away at profit margin potential. So we'll hear a bunch of earnings reports, I should say, in the next couple of weeks here. Next week, starting off a little slow. If you look at the all earnings watch list, we will have earnings previews today by the end of the day for Boeing and also UNH. So those are the two ones that the two companies that I think will have some heat behind them, some big news behind them, with Boeing and the price of oil, and UNH with all the crazy stuff going on there. But we will see what happens going forward. But yeah, definitely interesting nonetheless. Rest of the market.
It's so funny.
Here.
I've been looking at my portfolio real quick. It's funny. I've been looking at my portfolio all day, looking at all these things. Obviously, mostly focused on gold and silver. It's the first time that I'm noticing on your portfolio, because I have the same thing, that GS is down $30. I didn't even notice that. I didn't even know this is pullback in financials today.
Yeah, and it's quite the timing. The only pullback, and we've got 0 days to go on this long call here. So we'll see what happens. Maybe we get another 20 points and this gains some value back, but not expecting it.
Yeah.
But yeah, rest of the market, just looking at E-minis, NASDAQ, Dow Russell, NASDAQ up a little bit, E-minis up a little bit, Bitcoin up 1,000. So yeah, lots of movement. And,
I was like, wait, dog, what?
We got a cat jumping on me.
Oh, it's a cat. Oh. I thought I heard a bark. Did I hear a bark? Am I imagining? Oh,
no, you're hearing some meows.
Gotcha.
Craziness, but yeah, exactly. That's a new one.
I didn't know you had a cat.
Yeah, two of them actually. Two?
Oh, okay, nice. Yeah, I do as well.
Yeah, they're great. They're very low maintenance, and this one just wants to be held all the time. So it's sometimes it's great, and sometimes it's problematic, as we just saw. But yeah, looking at the rest of the market, it's nothing really moving too much. And then when you look at upside moves, of course, we already hit on them: silver, crude, 1 ounce, 10. All the gold products, all the metals moving to the upside. But silver continues to be the story here.
Yes, sir.
It is a Friday, which means full Q&A session. If you want to join us on the YouTube channel, we're streaming live there. And you can throw in your trade ideas, questions along the right-hand side chat. We do have the big deal promo pinned to the top of the YouTube chat. That is a promo for new accounts. up to 10K match, 4% cash match, and 30 days commission-free trading. If you don't have an account with us yet, check that out. All the details are in that link. You can go to tastytrade.com/big deal. But yeah, why don't we pop over to the YouTube chat? I haven't done anything in this portfolio today. Looks like you've made a couple of moves here.
I have. One was a scout. So did the SPX. Very simple. I mean, I think I did the 69 quarter. Yeah, 69.25, 69 half. Bought it for 275. Sold it for 875. Could have sold it for more, but I kind of waited a little bit to see how it would play out, and then eventually was like, yeah, let me just close this thing because it seems like that kind of day. And I'm glad I did. So yeah, quick $600.
Nice.
And rolled my iBit straddle. I mean, it's not, next week is actually roll week white, but figured I'd just do this one a little bit ahead of time. So rolled that straddle out.
Yeah, let me see. Ooh, I have shares now. Look at that.
In iBit?
In iBit. Yeah. I said this yesterday. I was like, I might get assigned here, but even if I am, it doesn't matter because it's just a covered call position now, which is fine. But yeah, 17 cents left in the 60 strike. At this point, the only thing would be to move this out from Feb to March. But there's only 60 cents there. So I'm just going to wait. I'm going to see if we get a rally. Like, there's no reason to roll now with Bitcoin at 90K, iBit at 50, and only collecting 40 cents to roll out to a 60-day cycle. I'd rather just wait and see if I can roll into a pop, because the closer this gets to expiration and the stronger the pop, if we get it, the more credit I'm going to get for rolling into March. So, and yeah, as we get closer to Feb's expiration, the pop won't matter in terms of the premium added to this option because it's well outside of the expected move. It'll still be trading for like 10 cents, 15 cents. So I'll see what we can do there. But yeah, now I have 100 shares, which is fun.
And you've rolled how many times now? Like, by the way, this is my 6th roll with iBit, and I've collected like $352 in credit so far.
Yeah, this one is 14 rolls, and we are at 31.20 in credit. If we just look at the premium, 31.20 in credit and counting. That was just from like the end of last year. So it went from 500 to $3,000. I assume this year we'll go from $3,000 to maybe 5 if implied volatility stays where it's at. And that would basically be the entire cost basis of 100 shares of stock in iBit in 2 years, which is kind of nuts. But yeah, crazy move in some of these financials. Goldman Sachs, if you did a longer term calendar, this move is probably bringing you into profitability. Considering you could have bought this 900 put for a longer duration, you would have still reduced basis in the weekly cycle. But yeah, crazy timing.
Yeah, the whole space. I noticed Capital One's down. Some of the other financials are down, struggling a little bit. I don't know what that's about. What would really kind of start to make sense to me, again, I know the 10% cap thing is still out there, but it would in a normal world, it would make sense to me that gold and silver are going up and banks are falling down. It's like, oh, the collapse of the banking system or whatever, you know what I mean? But that's not the case. But that would just make sense to me. That would be a really fun arb to play. I mean, I don't think that's the case, but nevertheless, you're seeing a lot of these names down today. I mean, JP Morgan down 2% and change, Capital One down, AXP down. I would imagine it's the fears creeping up again about the credit card cap.
Yeah, and I think to your point, if we were to see a much bigger Bitcoin rally and gold and silver rallying and the financials down, I think that's where you really get the clear picture of some trouble brewing, but still yet to see that in the crypto space, at least for now.
Yeah.
All right. Let's see what we got here in the YouTube chat. Welcome, everybody. Cheers. He is back. Yes, he is. Welcome back, Drew.
What's up, folks? What's up?
Bienvenido a Miami.
That's right. Hey, hey.
God, that song was just on repeat back in the day.
I know. I say a lot of times that song messed Miami up. It turned it into a full-on tourist destination for sure.
Yeah.
But nah, I mean, I love it, man. I mean, now I mostly hang out on the beach. I got a lot of friends who live in North Miami, We go up there and check them out, but I mostly hang out on the beach, man. I kind of act like a tourist when I'm down there now.
I mean, you might as well. If you're there, you might as well be on the beach, in the water.
Exactly.
Getting that saltwater exposure. Can't do it around here.
Exactly. I did almost lose my sunglasses in the water. Real close. It was close, Mikey. I had to go down and cut them.
Ooh, so they came off.
They came off. Yeah, I got hit by a wave. They came off. I was like, oh, God. And then I couldn't lost, and then you have those thoughts like, do I need these? Do I care about? Yeah, I do care about them. And I just dove. I was like looking around, feeling. Didn't get them. Feeling. My brother's like, did you get them? I was like, oh yeah, got them. Yeah, that's right. You know how the sense of accomplishment you feel when you get those? You can't see. It's hard to see down there, man.
Yeah.
Like, yeah, I got them. We're good.
It's like national treasure with some sunglasses. But no, I get it. It
was a little chilly too.
Oh, I saw some people wearing,
like, not complaining, obviously, way colder here, but I mean, it was like the day we went on the water, it was probably like 65, which again, salt water wasn't too bad, but a little chilly. You had to breathe a little bit to get out there. I walked out a good bit, and then I turned around. I was like, wait, I'm kind of far out. I think I need to walk back. Happens.
Yeah, it is. I guess it's funny though, because like I have some family that lives in Florida and Sarasota. And they're probably busting out like the winter jackets and stuff. And it's like 55, 60. It's like, come on.
Yeah.
Come to our negative 30 degrees. I willingly went outside this morning just because I was like, I need to feel what this feels like. And I lasted about 10 seconds. I was like, all right, this is enough.
Well, this is like throw boiling water out type temperature,
Yeah. Which scientifically can be fun for the kids, but still got a bundle. All right, first question I see here. MicroStrategy, long the 170 call in Feb, short the Feb 6, the 190 call for an earnings play. I don't mind it if you're bullish. It's a short-term shot, really, because if MicroStrategy goes down, this Feb option is going to lose a lot of value with such little time left. And by the time you get to February 5th earnings, you're only going to have 15 days left on this long option. So I do like this as like a pre-earnings pump play just because it's 20 points wide and you buy this for $8. So you're well under the width of the spread. So if it does continue to rally with Bitcoin ahead of earnings, you can get out of it for a nice profit. If you wanted to be more conservative, I would bring this February long call from the 170 strike to March 170. You're going to pay a lot more, but you will have a lot more time. You'll have less implied volatility exposure in terms of the crush that is projected here. But yeah, if you're looking to keep cost basis low, I think it's a fair trade for sure.
Mm-hmm. It's been tough being directional in that thing. I still have on a March Super Bowl, and obviously you see what the stock's been doing. It's been tough.
Yeah, it's been very volatile, but still implied volatility rank at 23. You'd expect to see lower IVs, but these are all at 80%. So regardless of IV rank, there's still plenty of premium here if you're trying to trade it.
I mean, at this point, it should essentially have just about the same implied volatility as Bitcoin.
Yeah, truly.
Whatever that may be, you have to assume it's in the 70s and 80s.
Yeah. How do we manage profits in trades such as IRIN, Feb 20, short 32 put, long 45 call, 3 short 65 calls for 18 cents?
What?
Plenty of such setups on the follow page. I assume this is from Nick and Bat. But yeah, if you are in Feb, if you're short the 32 put, which is losing value into this rally, trading for 64 cents, you're long the 45, 65, long the 45 call, and short 3 of the 65s. Boop-a-doop. Bought for 18 cents, current profit 355. I'm not seeing that current profit of 355, but whatever. If you have, maybe you only have 2 of these 65s, that might make a little more sense. If you're selling out of this, it's a $5 credit. Or if you have 1, no, you'd have to have 2. But either way, you have a call ratio on the upside, and you're just adding more premium with extra bullish juice on the downside put that you sold. But yeah, I mean, I would get out of this trade if you're comfortable with that 355 profit. You don't want this thing to keep climbing because you have 3 short calls, if this is correct. You have 3 short calls and only 1 long call to offset it. So you are naked 2 short calls in here. And this thing can move. It has been moving. It's gone all the way up to 80, almost 80 recently. So if you're seeing a nice
assume
profit,
they only have 2 short calls. Because that's 12. I mean, that's right. Wait, what's that long call worth?
The long call in Feb is $1,400.
$1,400.
So yeah, they must have 2 short calls. I think maybe somewhere, but either way, I think you just get out with the upside move. You got the upside move in the perfect spot where you're kind of right in the middle of your profitability range here. If you look at the curve analysis and you look at the Theo expiration, if we just like fast forward this and press time forward, like you're right here. So, like we said, you're going to see some steep risk come into play as you get closer and above 65. So don't mind the close if you're trying to remove some risk here. In your net Amazon positions, why did you choose to deploy a crab over a calendar or diagonal? Well, those were trades from the YouTube chat. So technically it wasn't us. But for just a general reason, if you go with a calendar spread, there's no intrinsic value potential. So like we can just look at this now with new trades. Or let's look at Boeing since I don't have a position in Boeing. So if you were long March, short Feb. So if we look at the same setup, long March, short Feb, if you were to buy a 260 calendar, long March, short Feb, 288 in cost, you have no intrinsic value potential, which means you have risk on both sides. And it's a cheap way to get exposure to this earnings report. If you go to a diagonal spread, like a 260, 270, you're paying twice as much. Your debit goes up to 550. You have intrinsic value potential now. So you have $1,000 of intrinsic value potential to the upside, which eliminates all of your risk to the upside because you're paying $5. This thing can appreciate to $1,000 minimum of intrinsic value, plus any remaining extrinsic value left in your further dated long call at the expiration of your short option. So this is a more expensive, more delta aggressive trade. And then a crab trade is kind of blending the two, I think is a good way to think about it. A crab trade can be seen as a diagonal spread with extra upside risk. It can also be seen as a butterfly where you're pushing your long option further out in time to get out of that implied volatility crush. But either way, if we double this contract and then we define risk at the 280 strike, here's what a crab trade would look like. So it's just a meatier, more expensive calendar spread type feel where you have risk on both sides, but you're reducing cost basis on your long option still. You're paying in between both of the examples we just showed. We showed 280 for the calendar spread, 550 for the diagonal. This is $4. So it's right in between that. And you still have a nice profit potential to the upside and a much wider range to be profitable too. I think that's something to call out. The calendar spread has a more narrow range because you have no intrinsic value potential. Where this, you do have a much wider range to be right. So yeah, I think there's no right or wrong answer. It's just like how big is your account, how much risk you want to take. I did an Intel trade yesterday and I was like, I just don't want the risk if this thing sells off. So I put on a $3 calendar spread, long March, short the 1 day. It is now down. If I would have done a diagonal spread, I would have lost more. I would have had a higher debit up front. Same with the crab trade. So it all comes down to risk and whether you want upside risk or downside risk or just risk on one side. And only you can answer those questions, really.
The other thing I'll say about the crab trade that I've come to like is this is something I'd never deployed until we started working together. And The other thing about it is, essentially when you put on a butterfly, comparing and contrasting crab and butterfly, when you put on a butterfly, I mean, basically those option prices in that expiration are going to move proportionally the same. And so that's why, for the most part, you're not really going to get paid on a butterfly until very close to expiration. And we just know how that works at expiration. Things really move quickly. And for the most part, unless it's just so hard to pinpoint that middle strike, right? Whereas if it actually continues to move up, that, in the case you put out in that exercise you just showed in the 260 call, the one on the further out expiration that you're long, that was actually going to move at a higher pace than the short 2 and the long 1 that you got to the upside in the near term. The further out long call is going to move at a higher pace, and you actually have a chance if the stock keeps moving up. Which again, let's be honest, you're putting this trade on because you want to make money from the stock moving up, and so if the stock continues to move up, the long call that you have in the further out expiration is going to appreciate faster than those other two, and so you actually stand to make just a little bit more, I feel, than you would have in a butterfly. And that's one reason why I like the crabs.
Yeah.
Trade.
Sure. Yeah.
Crabs
yeah.
trade is what I was trying to say.
And that's why I have crabs.
I heard myself out loud. I was like, let me correct that.
Yeah. Your inventory, I think another, I say this a lot, inventorying delta. That's what you're doing when you're doing crab trades, where you're pushing out the long option to a further dated cycle. You're getting out of this near-term implied volatility. You're getting into lower implied volatility, more time-based extrinsic value, which holds on to value longer and drips against you slowly. So whenever we talk about crab trades or diagonals or even calendars, I like the idea of inventorying delta in that direction, because that's really what you're doing. You're inventorying delta with a long option, and then you're reducing cost basis by selling something against it in this super high implied volatility environment here. So we can look at some real examples. If anyone has any earnings trades they want to put on in UNH or Boeing, we can try and throw some stuff on here.
Speaking of crabs, I don't know what they did to get rid of crabs all over South Beach. There used to be crabs everywhere when I was a kid, and there's no crabs now. It's amazing. I don't know if they fumigated them. Is there crab fumigation situations? I don't understand it. It's crazy though.
Yeah, I don't know.
It tells you what tourism can do.
Yeah, the tourists came and the crabs were like, "I'm out. I'm done with this."
Basically, it's probably really happened.
Thoughts on Rams, Seattle, Pats, Denver? How would you trade micro crude? I like it. The trifecta.
Did I see it right that the Pats are favored over Denver?
Yeah, because there's no Bo Nix. Bo Nix broke his foot. No, you missed this.
That's right.
Yeah.
That's right.
Yeah.
You know what? I heard about that after the fact, but I barely saw it. That's right. I did see that. Oh yeah. Well, duh.
Yeah.
Vrabel's got those boys playing, man. You got that coach. I was telling my brother this. That dude sits in the tunnel and daps up everybody on the way back every time. Appreciate you. Do you know what that does to a team? Seriously.
It's great.
So yeah, Pats for sure. And then what's the other? Rams in
Seattle.
Seattle, that's right.
Rams going to
Seattle, right?
Yeah, I think that's going to be a shootout. I think the Pats win.
I got to go with Matt Stafford.
Yeah. Yeah. He just lit him up there. He threw 5 touchdowns, 400 yards last time he went there. So,
is Stafford playing? Is Puka Nacua playing? Is Devontae? Then, yeah.
They're fully healthy.
And that Jared Verse, damn, man, he's a problem, man.
Yeah. One interesting stat, though, with the Pats-Denver game. So, Stidham is the backup quarterback. I listen to a lot of fantasy sports stuff, and one guy actually looked at the Stidham contract and found that when free agency opened, the Denver coach went and signed Stidham immediately to a 2-year $10 million deal. And then they're like, let's keep him under our sleeves here just in case we don't get Bo Nix, who they wanted. They end up getting Bo Nix, but Stidham has been in the system for 3 years, and they just signed him to another 2-year, $12 million contract. And in the preseason, when Bo Nix wasn't playing, Stidham was literally lighting up the other teams, and he was the best quarterback of preseason. So it is possible that the Pats go in there expecting to just destroy, and Stidham just stands up with a couple touchdowns in the first half, like we could have ourselves an actual game on our hands. So I'm excited to see if this backup can carry them through. That would be a cool story, I think.
Be a wild story. Last time I can think that a backup, I'm correct, led a team to a Super Bowl. The last time I remember one off the top of my head is the Giants and Jeff Hostetler, but I don't remember if there's been any other to that.
Well, there was the Eagles quarterback. I think I think he just played the Super Bowl.
He almost doesn't count. No, I guess he does.
Nick Foles.
Yeah, Nick Foles. Yeah.
I think he just played the Super Bowl and he just like stepped in and just like was throwing bombs for touchdowns, which is sick.
Yeah, he was. Yeah.
Yeah, we'll see. It'll be a fun weekend. How would you trade micro crude? Has pretty high IVR, selling liquid puts. So I have this Iron Condor on between the 55 and 65 short strikes with 1 point wide wings. It's working out nicely and it's right in between this range. So I'm just going to hold on to this. But from a micro crude perspective, I think if you wanted to, like, it depends on how you want to play it. If you want to be neutral, you could sell a strangle in here. I'd probably still go to the Feb 17 cycle, 25 days out, to stay in this contract. But yeah, totally possible to sell some premium here. Or you could buy the contract, sell a call against it, go with a call ratio spread. I mean, it looks like there's a decent amount of call skew here. Yeah. The 55 trading for 40 cents, the 65 trading for $1.50. So you have plenty of call skew here, which plays into your hands if, for example, you bought this contract and then you bought, let's say, the 60. Yeah, you could do like a 60-65 call spread, pick up $100 of extrinsic value, and let's see, if we go to curve analysis, you can see here we go. So yeah, curve analysis expiration, you're basically just juicing your long contract from 60 to 65. You're basically doubling your delta exposure to the upside. If you throw this on, you can make $1,000 if you get to 65. And if not, you pick up $100 of extrinsic value to offset some of that risk. So definitely something to consider. You could also just sell a call against it. But right now I'm just trading it neutrally. We're kind of in that, it feels like no man's land, where it's like right in the middle of the range that we've seen recently. It's been chopping around this range. Like I would rather see a sell-off towards 55 before I get long. But that's just me.
Yeah, the CL Iron Condor you mentioned, it just seems to be the way to play a crude. Honestly, for the past year, even when you've had big spikes, eventually it sort of corrects itself. And so until proven otherwise, until we start to get like a silver-like move or something, I'm just going to keep doing the Iron Condor. And like you said, every now and again, I use MCL to sort of make directional plays. So like Mikey said, if it gets down to 55, MCL will be the vehicle in which we use to get the directional situation.
True. I feel like I need some more negative delta. Followed me in the SPX trades, so picks up some downside butterfly. So I put that butterfly on yesterday. I re-entered the butterfly, I should say. This 6,600, 6,700, 6,800 butterfly. I went out to the Feb 27 end of month, and I did that same 100-point wide butterfly. Because on Tuesday, when the markets were selling off, I sold out of this butterfly, and I did that for what, $160 winner? Let's see.
Yeah, it sounds about right. I remember kind of seeing it. I decided to close out I had VXM contracts. I decided to close those. And if we had gone lower, I was just like, let's see what this thing does.
Yeah.
But makes sense.
Yeah. So I sold out of that. And I really like the butterfly, because the butterfly, it wasn't really taking heat. And we talked about this too. Like, we put this on December 23rd and the markets kept ripping higher to new highs. And that butterfly was still only like $100 loser. And then in one day, we finally got the 100-point sell-off. It goes from $100 loser to $155 winner, just like that. So I I really like these cheap butterflies that are really wide. This has a $9,500 max profit if you pin 6,700 at the end of the month. I'm not planning for that, but it's such a cheap way to hold on to some bearish delta. And assuming you've got other bullish positions that give you a profit potential more than $500, you can offset it. So for downside hedges, I really like this because it's really not costly at all relative to like a diagonal spread or other trades. And you get that same upside profit potential if you get the move right and you get closer to expiration. So I'm just going to hang out to the butterfly. I did also on Tuesday into that sell-off, I put on this broken wing butterfly to the upside that we put on the SIBO floor. And I removed the risk by moving the 7150 long call down to the 7140. So now I have this symmetrical butterfly on for an 80-cent credit, which is always nice because when you have the ability to leg into risk-free butterflies, it's just a nice feeling because I have 80 cents of profit potential either way. And then if we get a rally up to 7130, I can make another $1,000 on this trade. But yeah, I think if you wanted to increase more bearish delta, maybe you just do another butterfly, maybe make it wider, something like that. But I really like the butterflies for downside hedges. Let's see. What's up with financials? Goldman Sachs. All the others. What are the other ones doing? JP Morgan down 2%.
American Express, Capital One. I don't know. I've been out of the loop, but definitely noticed it. Kind of crazy. COF.
That's I'm like, what is this one? This one had earnings. COF.
Oh, there you go. And that's probably why it's probably following those, I guess.
Yeah, they had earnings yesterday. Big sell-off from the recent highs, but yeah, maybe they said something that the rest of the bank sector's stocks didn't like.
Maybe.
I haven't reviewed it, but
neither have I.
What's your plan for the corn trade? I just closed it, actually. So the corn short put spread, the 415, 405. This one we followed in, it was a Thomas trade, and I just closed it for like $70 profit, something like that. So yeah, no reason to hold it. It was over 50% profit, and we got out. So we'll look to next week to play something new in those futures. Can you demonstrate how to use the analysis feature on a calendar trade? Sure. Let's see if anyone has a calendar trade idea. Don't see one. But yeah, we can go back to Boeing. So just looking at a calendar spread, let's say you bought Feb. You're buying the Feb 260. You're selling the weekly 260 against it. So what I would do to analyze this trade is, first of all, look at the Theo risk graph, because that's what you want. You're not really holding this to expiration. It's a pure extrinsic value trade. So this is the Theo right now, analyzing today, January 23rd, no implied volatility adjustments. So what I would do is look at, we're going to push the expiration to the 30th and just assume that you keep all this premium in the 7-day. But you're going to want to crush this implied volatility in Feb. This one's 33%. The back months are 31, 33. So it's harder to see where this could fall after earnings. But let's just be conservative and let's say we're going to analyze January 30th. So you can see the risk graph just jumped up. It assumes that we're keeping all of this 240 premium, but we have to crush implied volatility back here. So let's bring this down to like 25%. So if you get an 8% vol collapse in the Feb monthly cycle, and Feb monthly goes to 25% on January 30th, this is what you could be looking at. So this Theo risk graph assumes we're holding the expiration or holding to expiration for your 7-day cycle. We are collapsing implied volatility down 8 percentage points down to 25 from 33. You could be looking at, if you get a move to 260, you can be looking at a double. You're paying $240. You're making $240, best case scenario. And anywhere in between here, you're going to make some sort of value, break evens between 250 and 270-ish. So that's what I do. It's easier, like if you go to UNH, maybe this will be an easier example. So UNH, if you sold the 7-day and you bought Feb, you can see Feb has a 38% implied volatility, where these back months have 35%. But all of these are going to go down. So I would do a similar thing. I would probably crush this 8 percentage points, bring this down to 30, because you have to assume that after earnings, all of this implied volatility is going to get crushed a little bit. So yeah, it's all about analyzing by pushing the trade through time, and then also crushing implied volatility and going from there. Let's see. What else we got? I've been in a silver iron condor for 2 weeks waiting for an IV contraction, but it keeps going up. Is this normal for metals, and when will this ever stop? No, this is not normal. At least historically speaking, this is not normal. And when will it stop? I'm not sure. I'm happy that you are in a iron condor instead of a strangle.
Yeah. I mean, iron condors honestly are pretty tough to do in general in metals. This is obviously making it even extremely harder. Yeah. I don't know what to say. I mean, I'm not even going to try to prognosticate for you. There might be a situation where a day or two it might slow down, but I don't expect to slow down for long. It doesn't matter if it still continues to go up or if there's a pullback. Either way, there's going to be some volatility here. So it's a tough one to do with an iron condor. Yeah.
And to your earlier statement, iron condors are hard to do in metals. Traditionally, I think that is true and can be true, especially now, because like even in gold is flying around. But look at the implied volatility in gold. 30% implied volatility is not necessarily an implied volatility environment that I want to try and capture premium with risk on both sides, because a 30% implied volatility is a very narrow standard deviation of movement. So when your iron condor strikes are really close to the stock price. So like looking at gold right now, a 430, we're just looking at the expected move, 430, 490. And if you do 5-point wide or 10-point wide, whatever. But the point is, you can pick up $3 for $700 in risk, but at the end of the day, you want to just make sure you're covering a decent range. And between 430 and 490, like, yes, that is a decent range right now, but this is with implied volatility heightened. Silver, a little better environment now with 78% implied volatility, but before it was like 25%, 30%, same story. And the realized moves obviously are way more than that. And now implied volatility is finally reflecting that with an 80% implied volatility. But all that to say, iron condors, you just have a much wider range. Like even Micron, I'm in a Micron iron condor, 300 points or 100 points wide between the short options, 300, 400. And Micron has a 70% implied volatility. This is in the Feb cycle. So, and this is middling implied volatility. So like I'm much more comfortable covering a 100-point wide range versus a more narrow range in a low IV environment. I'd rather just take a directional shot in those sort of environments. Rivian. Tesla was ripping yesterday, down a little bit today. But Rivian, long 15 call in June. Okay, this is a spicy one. Long a 15 call in June, financing the cost with a 15-20 strangle in Feb. Okay. 15-20 strangle in Feb. This is a multi-cycle trade by rolling the strangle portion until Rivian is back to the $20 range. Yeah, you can do something like this. So your cost on the long options, $3. This particular strangle is reducing $100 of that cost. And then, yeah, if this expires or you get to 50% profit, for example, you could buy back Feb. roll to March. Maybe you go a little higher or do something like this, pick up another $120, and you're just chipping away at the cost basis on your long. And as long as your short option is higher in the strike price than your long option, you won't have risk to the upside with a strategy like that. So I like it.
S&P went red here.
Mm-hmm. Down 350, 550, making a little sell-off. NASDAQ selling off a little bit. Bitcoin rallying. Ooh, interesting.
How about that?
Financials crumbling. Bitcoin rallying. Gold at highs. Silver at highs. Platinum at highs. Is this over? What's going on?
I don't know. The ebb and flow.
We talked about the S&P 500 hedge. I think a butterfly is a good way to start. Can we get an update on your year-long micro NASDAQ trade?
Update. Well, took some heat the other day during the downfall, but we're up $1,273 on it, and I am still in the 28-day cycle, the Feb 20 cycle, short the 25,250 put and short the 27K call, and I'm not thinking about rolling it anytime soon. I'll probably hold it for at least another, probably a little longer than 21 day cycle. I mean, not 21 day, but 21. I'll probably hold it past the 21 days of expiration. We'll see how this plays out. Obviously, things have been kind of crazy more recently. I don't know if talks of Greenland are going to freak the market out again and this thing is going to be down. We'll see. But whenever I do decide to roll, I obviously have to take into account the roll market. And from what I'm seeing right now, the M contract is about $200 higher than the current H contract. So I'll factor that into my roll. But for now, we're up credits. We're just chilling. We're sitting on it.
Yeah, it's been a nice trade. I was actually thinking about this yesterday. So the really nice thing about this trade is that we will be able to, once we have the year-long results, which I think are going to be good. Once we have those results, we can extrapolate the results because this product, the micro E-mini product, follows the E-mini futures. It follows SPX. It follows SPY. So what we will do is, and then for your NASDAQ one too, what we can do that's really cool is we can take the results from this trade and extrapolate it in terms of like, if I were to have done this exact same thing in SPY, what would the results have been? If I were to have done this exact trade in SPX, what would the results have been? And then same thing for the big E-mini futures contract. So we can show, like, if you would have just rolled to our same equivalent strikes in SPX, big E-mini futures, and SPY, what would your P&L have been on one contract? So I'm excited for that.
Yeah.
All right. I am scanning yen intervention. Uh-oh. What's the Tasty FX market doing here? What are we doing?
I had a yen long call spread on for the last, a couple of weeks. I closed that out the other day. I'm done with that trade. If I'm going to trade anything, I'm just going to trade the Tasty FX stuff. But yeah, it's a hard one.
Yeah, Tasty FX. I'm getting eaten alive with this dollar position, which is really sad because I had a moment where I could have closed it for profit and I missed it. As we can see by my basis right here, I had just a tiny little sliver of opportunity to close this for profit. And now we're all the way back down to this range. So very sad, but wow, the dollar yen down 1.2%. Yeah, I don't know what to make of this here. Craziness.
Yeah.
Huge move.
Yeah,
Look at that.
It really is.
I'm gonna have to ping Glenn and see what's what. What are we doing in bonds? I don't have any position in bonds. Do you have any?
Nope, no position in bonds. Trying to figure them out. I thought about buying a bond call spread the other day when I saw ZB down to the 114 range, but I passed. Didn't do anything, so nothing.
Yeah, I'm not trading them. I just think there's more interesting things to trade personally. CoreWeave short put in the 56-day, good premium in lower deltas, market cap for the space is reasonable. Yeah, 56-day short put, you're in the earning cycle, so just keep that in mind. But yeah, relative to risk, like you can sell a 70 strike for $400. That's really nice cost basis reduction, especially when you consider the buying power requirement of $700. But yeah, I think one thing you got to just realize is you're in the earning cycle here. You're looking for a pre-earnings upside move. Maybe you can close it then. But this is a 16-point implied move for earnings in a couple weeks here. So pretty big. And especially when you look at the stock price of $90, 16-point implied move. And of course, this will shrink to a smaller level as we get closer to the earnings announcement. But still, right now, you're looking at almost 20% implied move. So that's why the premium is so high. There is risk in here for sure.
Mm-hmm.
Blame the chat. Best insurance. Yes. about those crab trades. But no, the crab trades are working out. Amazon's up nicely. We'll see if we get an Amazon continuation here pre-earnings. I'll just close it and I'll restructure something else. And then Net is picking up some steam here, but this one's only down like 80 cents. So I like it. Good to know about June expirations, but is it really an issue with liquidity if you're looking to sell around May? I forget what this was referencing. I'm not sure. But yeah, I mean, typically the further out in time you go, the less liquid the markets are going to be. But you can still get away with it if you're in a liquid product in general. Last couple of questions here. I'm in the same corn put spread. Yep, I closed it. Andy, close that down. Taking the cheddar. Starbucks earnings, Jan 28th, calendar call or horizontal or something else. So a horizontal spread is just a calendar spread. A diagonal spread is where you integrate a vertical spread into the horizontal nature of a calendar spread, which is why it's called a diagonal spread. But yeah, we can take a look. Starbucks.
S-Bucks. I haven't traded
S-Bucks. S-Bucks. Can't fade the buck. Wow, this isn't trading near highs. Interesting. Recent highs, I should say. Yeah, we'll definitely trade this. I don't mind trading this to the upside, especially since we've come off the lows. We're seeing some better results here, and this thing was trading for 120 last year. So plenty of potential to the upside. But yeah, I think I'll look no further than buying March option and then selling something against it to the upside. So just looking at the 100 strike in March, you're paying 60 more cents to get twice the amount of time going to March instead of Feb. And you've got way less of an implied volatility crush implied here. March has 37% implied volatility. Feb has 45% implied volatility. And all of these premiums or implied volatilities are going to crush down to, like, let's say the low 30s after the announcement. So definitely willing to pay 60 cents more to get out of this near-term IV crush. And then I'll just sell something against it, like the 105, something like this, the 100, 105, long March, short Jan. But I want to wait until next week before placing that. Last question here. Why did you close out of your SPX put butterfly? I'm wondering why you would do it for just $150 if the max profit is 9K. Shouldn't we wait until at least 20% of the max profit? Yes, you totally can. The reason why I closed it is simply because we saw that sell-off, the 100-point sell-off. I looked at the vol futures and I was like, okay, the vol futures are moving a little bit, but they're not reacting in a, world is ending type way. So anytime I see a sell-off that's 100 points or more, the first thing I do is I look at the vol watch list here that I've created, where I'm just looking at the calendarized contracts, and I'm like, okay, we're still in contango. They did flatten out a little bit. We saw the near-term cycle spike a little bit, but right now we're still in a 1-point contango all the way through the M contract almost. So that tells me that if we're seeing a sell-off and volatility is not jumping to 25, 30, I shouldn't really be that worried yet. So when we got that sell-off, we hadn't seen a 100-point sell-off in some time. I was like, I'm just going to close this down. And we got a two-day reversal that erased the entire move. And I redeployed that same butterfly. So I was fortunate to be able to scrape out $150 profit and then just get into the same exact trade. But yeah, to your point, if you are using this as a hedge, and let's say you just want to have one hedge on, then yeah, maybe you don't close it. Maybe you wait and then see if you get that downside move where your butterfly goes in the money and your $500 turns into $1,500 or $2,000 or something like that. But I'll
add one quick thing onto that.
Yeah.
I'll add one quick thing onto that too. Like, there's no wrong answer here, honestly. And it's a small premium trade. It does take a while for a butterfly. So who knows to Mike's point, there have only been this is the first 2% down day that we've had since October. They don't come around too often. Chances are it's probably going to end up worthless, but it's a small hedge. If you held on to it, then that's fine. If you close it, that's fine too.
Yep. Indeed. And with that, we are out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. We'll be back. Same time, same place, 11 a.m. Central next week. I'm actually going to be out on Monday, but I will be back Tuesday with Jamal. We will be going through the whole session. We got plenty of earnings next week, so stay tuned. Keep your eyes peeled on the tastylive.com news and insights tab. We're going to be writing a bunch of previews for that. The whole team is involved, so if you like the written content, definitely keep your eyes peeled for that. But yeah, plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned and we'll see you next week. Have a great weekend. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
What is going on, everybody? Welcome back to Risk and Reward. Today's Friday. We had a really volatile week this week, and I mean, especially today. So we'll touch on all those bases here in a moment. But before we get into everything, my brother Gus, how we doing today? How we living up? It's been another week in the market, no doubt. Are we thawed out right now, or what's going on?
Yeah, doing good. Yes, the cold front is definitely upon us. There is things going on outside my window that I've never seen before. I've mentioned that I have a humidifier in my room that I sleep with, and something has happened to where the humidity transferred through the window, condensation situation, and then my window is just frozen on the other side of it. So that's a fun little thing. Can't see out the window whatsoever, but I'm doing good. I'm staying warm, and yeah, it has certainly been another week in the market. Happy I took advantage of buying some dips when they presented themselves earlier this week. Definitely my best week of the year so far, if not my best week of the last 6 months. It's been a profitable one, so I'm a happy camper.
No, I love that. I mean, we've been really directional to the upside. And then I know the metals are still running at the same time. So a lot of volatility all over the place. I'm glad it was a really good week. I know we're still the first month into the trading year as well. So we'll touch on all those aspects. And I mean, as we jump into the Tasty Trade platform here, let us know what you're looking at. Let us know what you're trading, what you're managing. And, to start off, is there anything that's sticking out to you today, Gus, or is it kind of just riding the wave a little bit?
Yeah, Meta is logging another good day, putting together two back-to-back here. And then another one that I've been drawing attention to consistently throughout the past few weeks is Starbucks, which is also logging another good day. And then Netflix as well, taking a nice little bounce for the both of us. As we're both along there now, so pleased in that regard as well. Mike said, anyone getting long this storm and buying snow, or have I missed the point? I like that, Mike. I would say it's sell the news time probably. So maybe short snow, if anything. You needed to buy the rumor earlier this week if you were going to get long snow, but now it's a sell the news type situation.
No, 100%. I mean, to your point, I mean, wow, Meta's been having a great week. Nonetheless, I think I'd seen a little bit more headlines with Meta and just how rapidly it's been moving to the upside today. So that's definitely got to be honorable mention of the week. I think it was going to be Meta. Now I'm curious. Go back to it. I mean, even after this up move that we've seen in Meta, the implied volatility is still there. I mean, if anything, we've seen it slightly decrease over the last couple of days. So still a decent amount of premium in these contracts at the same time. I see we have earnings January 28th after the bell. So it looks like that's going to be the next event to pay attention for if you're looking at Meta and if you have it in your portfolio. But you definitely squeeze some gains out of it before we get, more of that uncertainty. And I mean, over here on this end, I mean, we have Netflix giving back a little bit. We had sold the 90 strike on Netflix, so we're going to be a little bit patient over there. And then silver, wow, right? Same kind of story each day. We're gapping up again and running to the upside. I mean, we were baffled by this earlier in the week, and now look where we're at today. So some historic moments we're watching in the market right now. We're going to be excited to not jump the gun on any of these metals, but we'll definitely be getting involved. And I mean, in the meantime, we're going to be a little bit more patient and see whenever the backside wants to come in and try not to pick off the top. But there's really not much to say about the metals. It's kind of same story over and over again, right, Gus?
Yeah, I mean, we just sound like a broken record at this point.
Absolutely.
I mean, it's like, we might be at 100 on SLV by next week, maybe by Monday, with the way that this thing moves. I mean, it's absurd. It's like every single day we just log another new all-time high. And as I've said before too, it's not gradual. It is aggressive. It is aggressive. 4, 5, 6% moves to the upside every single day. It's not like we're just slowly eking up the way that you might expect metals to. It's a vertical line. We are still on the elevator up 3 months into this situation.
It is.
Good afternoon to you too, Ron. This RDW, Ron's just bringing up to me over here in chat. Redwire. I'm not familiar with this company, and nor can I find any news. There's some kind of space company, is what I've gathered in my 3 seconds of research here. Mm-hmm. I know it's been a pretty good week for some of these space stocks, so perhaps a sentiment move. But I don't know, 9% seems like they would be driving the sentiment if anything. I mean, are we seeing a big bump in like ASTS or like the more mainstream names in this space today as well?
I believe
Did Trump say something?
We saw some running off of this, but I think a lot of the recent news in terms of the space area was a lot to do with SpaceX. I think if I'm not mistaken, SpaceX is looking to maybe IPO. And if they do IPO, they have the potential to be the largest IPO in history. I forget what the amount was. Was it 25? I forget what it was. But I know there's a lot of commotion going on around the whole space industry. And I know JP Morgan, Goldman Sachs, and a few other names are going to be getting involved in the IPO if SpaceX does IPO. So I know those companies are extremely happy because that's a massive client, right?
Yeah, SpaceX. I know SpaceX is on the docket for some time this year, and I shouldn't say on the docket. That makes it sound too official, but people speculate that it will be sometime this year. We see SpaceX IPO, and OpenAI is the other one that could go off this year and be groundbreaking and perhaps even break SpaceX's record. I'm not sure exactly what we're projecting on SpaceX in terms of valuation, but I do think OpenAI is looking to IPO over $1 trillion, which would be absurd. Wow. But I don't know that it's unjustified either. I mean, we see every other AI name in the world flying to the upside, and I mean, they're obviously the biggest large language model in the world in terms of consumer or market share is the vernacular I'm looking for. But yeah, I mean, if you're talking about the LLM, the chatbot that has 86% market share in what is like the fastest growing industry that we've seen in the last 2 decades, I think perhaps $1 trillion could be fair value.
If anything, and it might be low looking back at this, honestly, just because we're at the beginning of the growth of this industry. I would say we're kind of on the front end of it. So I'm kind of in the same boat there. I think it's justifiable. If anything, it might even grow and be even more justifiable in hindsight. So, we'll see where we go with that. I'm kind of intrigued by the entire SpaceX, and that's a lot of money really going into those projects. So I'm curious to see how it's going to affect the rest of the space. Maybe these other names. I mean, there's so much that we haven't done and a lot of uncertainty when it comes down to anything that has to do with space. So it'll be interesting. It'll be a lot to learn around that point in the market too. So we'll keep an eye out.
Yeah, I think SpaceX certainly has a large foot in the door as it pertains to consumer space travel, space vacation industry, perhaps, which I think is really very plausible in the next, even 20 years. I mean, all of this is moving along so rapidly. SpaceX obviously has developed and largely perfected the technology to re-land these rockets, the whole chopstick situation, as people like to call it. And so yeah, I think as they get more and more reps there, it's highly plausible we could all of a sudden see consumer space travel, which I'm all for. I want to go to space.
Are you down? Would you be down?
Yeah, I mean, obviously when it first opens, it'll be like way outside of my price point. I'm sure. I don't even know how I would begin to assign a value. Like, I don't know, $500,000.
If you had the means to do so, you'd be down, right? Like,
I know absolutely. If I had the means to do so, I think we'll start seeing it be an accessible mainstream book online sort of thing in like 15, 20 years from now, and then perhaps 10, 15 years after that, the prices will be down enough to where it's something that I could maybe consider attaining. And I don't know, maybe I make millions and millions of dollars in the next 10, 15 years, and I don't have to worry about it. But I think it could be a thing that's very much within reach for middle class to upper middle class consumers in our lifetime.
Oh my gosh. Some of the marketing budget, Gus and E on space, trading and the plane, bro. First ones to trade in space. Come on now.
That's true. That would work so well. First stock trade ever placed from space. Yes, you're right.
Make some room on the marketing budget for it. SpaceX, let's go.
Everybody be on the lookout for the GoFundMe.
We'll vlog it. Live stream, come on. That's fun. No, I mean, with that being said, we can pivot over here a little bit. VIX, kind of all over the place at the same time. We got a lot of a pump yesterday with the market selling off, and then premium getting sucked back out a little bit over here now since we have rallied pretty much all morning. I mean, it was a pretty aggressive breakout this morning. And it just continued to the upside. So volatility is there. And even though we're pulling back here, I mean, again, volatility tends to cluster sometimes. So although we've kind of contracted, I think there's still maybe a potential for still expansion in volatility because we really haven't gone anywhere on the overall market. It's just been a lot of up and down with a slight increase in volatility over the time. So I don't think the vol has really done anything. And I think there's maybe still a potential for it. I mean, if we're looking for all-time highs, if we're looking for 7,000, obviously we won't get that, but we're still teetering that line. 7,000 right around the corner.
Yeah, absolutely. Yeah, and we still haven't ever managed to quite eclipse 7,000, but boy, are we trying.
We're trying.
SpaceX, $800 billion to $1.5 trillion is the projected range there. Thank you, Cameron. And then Gabe also wisely pointing out Discord is IPOing in March. That's true. And I think that'll be a big one. He followed that up with all the kids in Gen Z are doing it. LOL. We both are certainly on Discord. We have a tastylive Discord, which I am the primary manager of in there on a daily basis. But yeah, I'm a Discord enthusiast. I discovered options for the first time through Discord. That was my pipeline into options trading was friends that I had on Discord that were doing it that I haven't met in real life to this day that made me aware of options trading when I was 18.
No, I mean, I'm excited for it. I mean, to the point that you're making, I mean, our generation is very familiar with something like Discord. I think the attractiveness of it is, number one, in Discord, when it comes down to the market, sometimes you need to move information very quickly, and the latency on Discord is fantastic. So I think that's one edge that they have over a lot of other services that you could use. But it's just very intuitive too. It's very easy to use. I'm sure I'm speaking for other people in my generation as well, but I mean, the competitor Slack, right? Very intuitive as well. Maybe something built a little bit better for like internal teams. But from my experience with Slack, it still was a more difficult workaround than it was with Discord. Discord was a lot more natural. So no, the rise of Discord is no surprise. It's been a good user experience, honestly.
Yeah, that's well put. I think there's like 3 tiers to it. I think you have Discord, which is just they're not even really trying to be associated with business uses at all.
Yeah.
Some people do still apply it in a business context, but for the most part, Discord exists as its own fun thing. Slack is somewhere in the middle. They are conducive to business. They're also trying to be a little bit conducive to that more leisure type consumer. And then you have Teams all the way on the full on business side. Yeah. I guarantee you, no one's playing video games. And
join our teams. Join the
I will say, having used all 3 a great deal, I think Discord is superior in every regard. I think more businesses should be adopting Discord. I think it does everything that Slack does, but better. I'm a huge Discord enthusiast, and I'll be. I don't know if I'll get involved at IPO. I think that IPO is going to be one where it's so hyped they'll actually probably be trying to short off the top. If I had to predict right now, and if I can get the fills. But that's a stock that I would certainly be interested in holding long term.
I mean, the proof is in the pudding, right? Massive success with Discord, massive adoption by it from people that use those type of services. So proof is in the pudding. We'll be excited for it. We'll look out for it. It kind of reminds me of Reddit a little bit. That's why we brought it up here. It kind of lands in the same bucket in terms of services, right? Not the same type of services, but in terms of, I believe on Reddit, there's a lot of Discord users and vice versa. So they're kind of synonymous with that type of personality that would be using these type of services and products. So Reddit was a fun IPO. I know we were zooming out a little bit over here on Reddit. They've been doing really well. It's a very weird stock to trade, in my opinion. A very weird stock to trade, kind of unique in its own ways, but we've just been consolidating the last couple months. And I'm just curious to see if there will be any type of sympathy effect off of Reddit whenever Discord is really active. But who knows? It's just something top of mind.
Yeah, absolutely. And and there's definitely a lot of overlap in those 2 audiences. I think that you're right about that. And Reddit, though, I will say the main difference in these 2 things and what's kind of been on the back of my mind as it pertains to this Discord IPO is how Reddit has much easier paths to monetization through advertising primarily, whereas Discord, it's a bit less clear. There's plenty of paid features on Discord. People pay for Nitro, people pay for server boosts. There's all sorts of little things that you can pay for, but Discord does not have really any advertising arm whatsoever as it stands right now. And I will say that from a user experience perspective, this is one where I think Discord is very liable to hit the public, and then all of a sudden it becomes all about that bottom line, and the user experience could deteriorate a little bit. And if that happens, I'm one that will just say screw it and pay for the premium, man. I'm so beyond ads at this point. If there's anything that I use on a legitimately daily basis, I will happily pay to not have ads on it anymore. And ChatGPT is moving into advertising as well. I already pay for Pro there. That's something that we've touched on earlier this week. But I think that ahead of a potential IPO for them, that's a brilliant business move. I think it's going to hurt the consumer side, but I'm happy to pay for Pro to avoid it. And I use Claude a fair bit as well, and I pay for Pro there too. I don't care. If it's a good service, I'm willing to pay to get all out of it that I can. Mike, appreciate the clarification on RDW. Shares are trading higher as Trump announced progress on the Golden Dome, and RDW is a dome supplier. Hey yo. Arcat, oh, I see. Reverse IPO, rolling SpaceX into Tesla as the parent company would be better for Elon's leverage. Interesting. That would really feed into what's kind of happened with Tesla already for a long time, which is where Tesla is a company where you're almost buying the man as much as you are buying shares of the actual stock. Tesla is it's become a vehicle for SpaceX. We've seen situations in the past where a SpaceX rocket blows up and Tesla stock tanks, and it's like that shouldn't happen theoretically, in a stock market perspective. But you do see that happen sometimes. You're muted. Sorry to break the fourth wall, everybody. What's going on? I'll let Errol figure out his technical difficulties. What else we got? There we go. He's back.
Right before you said that, I was like, oh my gosh.
This dude's a professional.
I was going to say, if RDW is a dome supplier, RDW will be interesting to keep an eye on. I know I'll be interested. A dome supplier, that's pretty fire. So see if this thing goes to the highs.
Oh, you gotta keep a few dome suppliers around,
Always, bro. Gotta have one on hand at all times. And with that being said, let's quickly look into our watch. Let's see what's going on over here. Some of our largest movers on the day. And then we'll take a peek at micro NASDAQ. As you can see, we didn't do anything in there today on this account. But let's go take a peek at it afterwards and then touch on the metals as, we always do. But for some of the largest gainers of the day, actually, let's start with the largest losers of the day. That's going to be a little bit more fun today. Goldman Sachs taking an absolute beating on the day. What's going on over here? Trading towards its highs. Again, I know there's a lot of news and headlines with Goldman Sachs, JP Morgan. I forget what other banks. I don't want to just throw the banks' names out there, but they were in a lot of headlines, again, around a lot of the talks with SpaceX and them being involved in that deal. I can't imagine, right? Something like SpaceX IPOing, and then let's say you're a new grad at Goldman Sachs or JP Morgan or something like that, and you have an opportunity to help with this deal that's going through. What a massive opportunity if you're just getting out of school and got one of those opportunities at one of the big banks.
Yeah, I know. That's a great point. It would be a very exciting thing to be on the forefront of. I don't know how much responsibility new grads would actually get. I think it might be more of a getting coffee for the people actually doing the.
But imagine being able to say, "Yo, when the SpaceX deal was going through, I supplied the coffee."
It's true. It's true. Yeah, you don't even have to say that. You just got to let 10 years pass and say, "Yeah, I underwrote SpaceX."
Exactly.
Nobody checks anything. Life is what you make it. I'm gathering in chat here that Kimberly welcomed a new grandkid. Congratulations, Kimberly. I had no idea. That's
was
awesome.
It a new grandkid? Say that again.
Kimberly has welcomed a new grandkid into the family. Is what I've gathered here.
Oh, nice.
So congratulations.
Congrats,
where's the Discord link? We can drop the Discord link for you in chat real quick. Somebody can do that. If not, I'll do it for you right when I get off there. But we actually, man, I'll just get wild in my phone. I'll do it right now. I don't care. Let me find this for you.
No, as we drop that, we got coin moving, obviously correlated to the crypto space. Coinbase, that one's down on the day. IV rank isn't very attractive. Maybe looking to buy some contracts, but in terms of selling premium, it's not looking too hot. So we'll skip that one. GE Aerospace, this one's probably moving a little bit more. Big red day. It looks like Goldman Sachs, GE kind of following suit with each other. Semiconductor space. I know a lot of these had a lot of, some of the other semiconductor stocks, I think, got a lot of air popped out of them. I'm trying to remember what some of those underlyings were. It'll come back around to me. But the ETF semiconductors, at its highs right now. So another thing that's kind of in play, grinding towards its highs. IV rank is decent. Let's take a quick look at the options chain together here. I don't mind short delta and any semiconductors. 420, 425. 175, and we're pretty far out. That's not terrible. We'll actually let this one sit, right? Let's see if time could just cook in our favor. Not trying to call a reversal, but maybe we can just let that one cook for a little bit. Okay. Get a little bit of delta on into the semiconductors. Baba, any of the Chinese names? Anybody trading Chinese names?
Yeah, these China names have been popping the past couple of days. Holy cow, that's a crazy move out of Alibaba. I thought the move yesterday was insane. It's a similar chart action both times, testing those highs and then pulling back off them a little bit. But quite the move we got going on here.
I don't know how I feel about getting involved in these names so far. Just very volatile. I kind of feel naked in some of these opportunities right now. That's kind of how I feel. So maybe step aside on some of these, but. Earnings is going to be February 19th for Alibaba, something to keep an eye on. The premiums and the expected move on these are looking pretty solid as well. So there's a lot of tradable underlyings, no doubt. Oklo, I know this is another common stock that we talk about a lot. This one kind of on its backside of the move.
Yeah. Unfortunately, for me, I got long Oklo earlier this week. I was excited seeing it pop up on the high volume watch list today because I figured that there's no way that could be a bearish thing, and it is. So yeah, sad case there. Crypto recovering slightly today, which is something. We're really channeling in lower ranges than what's conducive to profitability. reality for me. But we are getting a little bit of a move, so I'm pleased.
Like that was funny. No, I mean 100%. I feel like crypto has been. So I know we talked a lot about getting involved a little bit more with crypto, but we haven't been very directional on crypto too. So we just have to keep keeping an eye on it, become familiar with the personality of a product like this. But clearly, something like even the futures crypto, a lot different behavior in some of the metals than even Nasdaq. And I know we've even touched on the metals quite frequently this year too. But gold, silver, more similar personality, but a lot different than a Nasdaq or ES. And then again, a lot different from something like the crypto products at the same time.
Hey, speak for yourself. I'm deeply long Bitcoin over here, and I'm upset about it. It's not a good situation. I've begun to have the FOMO thoughts of not only what if I never placed this stupid long Bitcoin trade, but what if I got long silver around the same time that I got long Bitcoin? How different that would be. But that's definitely a situation where I would have exited 6 times over by now. All these now 4 times that I've tried to take stabs at getting short silver, every single one of those would have been a different exit point. I would have been looking to get out of those longs. I would argue that's 90% of people on silver. Honestly,
I would argue silver is probably one of the most difficult trades. And I know I don't want to speak for everybody, but I think silver might be one of the most difficult trades than any other individual underlying. Maybe I'm trying to think. Maybe Nvidia was a pretty difficult one when it was parabolicing, but I don't know, something like silver. When a stock or an underlying is doing something it's never done, you have no past data to even lean on. So it's murky waters. It's just straight price discovery, right? So not much you can do there. But I'd be discovering a whole bunch of profits, though. Oh, no doubt. I'll tell you what. But again, though, like gold and silver was a product that never moved like it is now. I can't imagine a lot of the passive investors sitting in something like gold and silver. And I bet there's a lot of passive investors sitting in metals for a day like this to happen. And wow, their portfolios are absolutely probably outperforming every single other year they've ever had, especially with how large these products are. So congrats to anybody else that's taking advantage of these historical moves we're seeing in the metals. Yeah, absolutely. I actually think one of the best things you could have right now is physical silver, physical gold, like in your house, because that's way harder to liquidate, and you would probably wind up holding that bag longer because of how hard it is to liquidate, especially right now. I know bullion suppliers and buyers are having a really hard time pricing in all this action. So yeah, you probably have a little bit harder time getting out of that, and in turn be making more money than if you just had contracts in the market and were looking to get out of them. 100%. The BOJ is a mystery not even the Vecchio can unravel. Well, if the Vecchio can't unravel it, I'm not even going to try. I will simply not attempt to do so. I'm not even going to look that way. Facts. That's real. That is real. I'm just checking out to see some of the volume that was traded each day on silver. So let's take a quick look together before we wrap. It's interesting enough. This is probably where a lot of people thought the top was in the market over here when we started trading around 81, because we have this massive red day, but based off of the candle, you can tell we went green to red. And then also within all the other recent trading days, all the way to these highs, that was the most volume traded on that day. So if there is anybody that was probably looking to get short, this definitely looks like a potential squeeze. And we're probably seeing a lot of maybe silver getting squeezed out, just considering how many people were involved in this false peak. But with that being said, it's impressive. I dropped the Discord link earlier, guys. Needy. Here, I'll give it again. There you go. There's the Discord link. Go crazy. Go crazy. Yeah. Sorry, I don't have a verified account tied in here. Just firing off from my personal YouTube account. But that is me. That is the Discord link. Don't be sorry. Y'all be careful. No. With that being said, anything else top of mind before we wrap for the day, brother? Yeah, I don't think so. I saw somebody shout out Japanese yen earlier. That's actually not. We don't talk forex very often here, but I am long yen against the euro, and deeply so, and deeply red. So, but those have recovered about 25% today. So pleased to see that moving in the right direction. Good shout, whoever mentioned the yen strengthening a little bit. Nice. I suppose I wish I was long against the dollar, or perhaps you were saying the dollar is strengthening against the yen. I don't know. I'm not a forex trader. I buy things near 5-year highs or lows and I wait. And if it gets worse, I double down. That's the strategy. They are cyclical assets. So definitely keeping an eye on that. And then yeah, outside of that, just pleased with this bullish action that we're getting. I hope it continues into next week, and I'll start to take some profits. No doubt, no doubt. You got groceries, you got snacks, you bunkering down this weekend. Hopefully your door doesn't freeze shut. Maybe no pipes freeze, none of that. You ready?
Yeah. Fortunately, my door is an internal door into the middle of the building, so I don't think door freezing shut is in the equation. But yeah, I'm locked and loaded. Got all the food, all the resources that I need to hang out here for the weekend. And everybody always makes a run on bread and milk. I've always thought that's a fascinating part of people shopping before snowstorms.
Wait, you have no room to talk about people running the milk. If anybody doesn't know, this man drinks a gallon a day. This is why milk prices are up. Gus, right here.
I do. I am a top probably 1% consumer of milk. Maybe some babies have me.
You're not over exaggerating though.
Yeah, no, that's not 1 ounce of exaggeration. I drink 5 to 8 gallons of milk a week. I am a milk consumer. However, I have my milk stores fully loaded up all the time. I don't have to make a run on the stores for bread and milk when the time comes. And I just find it odd that those are the two items that water will sit, but for some reason everybody clears out all the bread and milk. There's a human psychology element there we don't have time to get into right now.
You saw the Got Milk ads in elementary school, and that's all she wrote. That's all they wrote. Now, with that being said, that's going to wrap for the day. Everybody, thanks for taking the time to hang out with us. Be sure to manage those positions, stay warm this weekend if you're out here in Chicago. That's going to do it. Be sure to stay tuned for more segments coming on next. Thanks for taking the time. We'll catch you guys next time. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new tastytrade account today.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Earn a 4% cash match when you open and fund a new tastytrade account today.
We're back. Still Friday, January 23rd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, what starts with $5,000 an ounce now?
All I'm going to say is that those of us that have been, let's say, questioning the stock market and attempting to fight it are thankful for the existence of other assets, which work.
Gold and silver are working, doing work today. Gold across a number of different expiries. If you go out to the GCJ6 and beyond, you're looking at $5,000 plus an ounce. Good news for our GCM6 trade there, Ilya. Silver, though, in the SIH6 contract. There we go.
There he is.
That crossed $100 an ounce. Spot market's through $100 an ounce. So the metal's getting all the attention on a Friday where the S&P and the NASDAQ are kind of meandering.
Mm-hmm.
Trump did say yesterday afternoon when markets closed that an armada is approaching Iran, which we know because we've been looking at the USS Abraham Lincoln making its way from the South China Sea through, well, the area west of Malaysia in recent days. Oil is back up nearly 3% on the session. So gold up, oil up, bonds are a little bit off the lows. Ilya, I'd say that there's a war trade reemerging here. And I'd remind people when the U.S. has engaged in conflict under President Trump, it's happened on the weekends. So, hey, maybe it's going to be a fourth week in a row where we get a really interesting headline to kick off First Call this Sunday, Ilya.
Are we just squeezing everything in before there's midterms and then there's a new Congress and then you can do less of these things? Is that what's going on?
I hope not. We got
Just
a long time until the next Congress.
Now until November.
It really has been, though, this year, right? That has been
one after another. It's like 4 weeks straight.
Maduro, Powell, Greenland. This weekend, Iran. Ilya, next week we have a number of important events coming up. It's the final week of January. It's going to see a few central banks come out and give us some rate decisions here. The U.S. and Canada, both on Wednesday, the 28th. The market's pricing at a 5% chance of a Fed rate cut. We know, by and large, given the data that we've seen, which has been stronger than expected on the growth side, inflation still closer to 3 than 2%. The market doesn't think the Fed's doing anything here or really over the next few months. So we know that the Fed meeting on Wednesday is far and away the most important event, and everything else falls by the wayside in terms of magnitude. If the market is expecting nothing from the Fed from now effectively through June, what could the Fed tell us that disappoints?
It's all about the tea leaves. I don't think the markets have anything to speculate on as far as the next meeting. In fact, they haven't had anything to speculate on as far as the January meeting, going all the way back to when the Fed essentially announced what they were going to do, signaled in August last year at the Jackson Hole Symposium, and even a little bit before, that the balance had changed such that it was time to cut rates. Waller and company had already started to dissent by June to kind of pave the way for the Fed to pivot. And already then the market said, right. So they're going to do 3 now, and then we'll see. But January is not the month when they'll go again. That's been consistent. And so there's really nothing to animate the price action as far as the move itself. It's been all the way baked in. The much larger issue is, what does Powell say? What's in the statement? I think we can safely assume that we have at least 2 dissents. Stephen Meehan dissenting is a given, I think, at this point. He still wants to bring home big rate cuts so that the folks over there at the White House are happy. That's a given. Probably you get somebody like an Alston Goolsbee dissenting the other way, but probably there won't be much to dissent on there. I doubt he'll call for a hike or some such thing. But in the event, it's the guidance. It's all in the guidance, because the markets, despite the fact that they've pulled back a lot of dovish speculation, in the wake of this rise in oil, which seems to be very intimately connected. Oil has been going up right alongside break-even rates, as foretold. We look at this and say, okay, the markets still want 2 cuts this year. They're leaning that way. They're less skewed. We're at about 42 basis points, but they still want the 2 with better than even odds. The Fed's been saying since June they get only 1 cut this year. If the messaging from Powell is, look at crude oil is going up, inflation might be stickier than expected, we don't know. At this point, the risks are becoming more balanced, say. If the language were to be, we thought we were getting out of inflation mode and into jobs mode, but now the risks have become more balanced again, markets aren't going to like that, because that means that the Fed is not even remotely thinking about coming their way.
Outside of the central bank meetings on Wednesday, I don't see much else that's going to move this market. On the macro side of things, the earnings calendar itself is, of course, a very different story, and that probably warrants a discussion unto itself. In terms of peering out into next week on the 26th, you're going to get Nucor, which is not obviously one of the big ones, but we have UNH, RTX, Boeing on Tuesday, Wednesday, Microsoft, Meta, Tesla, ASML, IBM, Thursday, Apple, Visa, MasterCard, Caterpillar, SAP, and then Friday, ExxonMobil, Chevron, American Express, Verizon, Regeneron, Aon, Colgate-Palmolive. I mean, there's a lot. There's a lot, particularly as you make your way into the second half of the week. So Monday, Tuesday, Ilya, that sets up an interesting dynamic whereby perhaps we get that pre-FOMC drift, which is to say that you get a volume drain, you get a volatility drain. It's not to suggest the markets are going to keep moving up, but we just chop around. We don't really make much progress. People are both metaphorically and literally keeping their powder dry to digest the forthcoming catalysts and events. Where does that leave us now then? Well, stocks are meandering around today. S&P is basically flat, down, well, now flat. NASDAQ is up by barely 0.4%, but then you look over to the Dow, that's off 0.75%. The Russell having a little bit of come to Jesus moment today after surging. Maybe Icarus got too close to the sun. It's off 1.84%. So there's some idiosyncrasies there. Either way, though, Ilya, I'm looking at a stock market that's really indecisive and not making much of a decision here on this Friday. We're closing out the week with having recovered the gap effectively that started the week with the Greenland news on Sunday. And then we basically paused there. The S&P can't get through 69, 70, 580. The NASDAQ is struggling right around the gap itself in that 25,700 area. We've reset. We've calmed down. We wait for something anew.
Yeah. I mean, I think at this point, you really want for there to be some sort of price action that gives you a sense of conviction. And we just don't have that. And until you have that, what you have is a breakdown that happened at the start of this week. The supposed catalyst for that breakdown has been diffused, and yet we can't undo the breakdown. So it makes you wonder if the breakdown was a function of just waiting for there to be a reason, as markets sometimes do. They just need clearance to do what they already had in mind. You often see that, for example, in response to either macro or earnings event risk, where it seems like price action after the event doesn't match up with the event. And you go, wait a minute, but why is it going this way when clearly the response is to whatever the catalyst was, but it's completely the wrong response? And you go, well, markets were just waiting to get on the other side of the event risk to do what they wanted to do anyway. They just needed the trigger of something getting reset so they could go. And maybe that's what we had by way of this situation with Greenland, where the president said a thing. Surely after all this time, the markets know to have a certain boy who cried wolf mentality with this kind of stuff, where they go, well, just in October, The president did this with China and does this routinely. And sort of famously did this with Liberation Day, where he comes out, says something preposterously bombastic, and uses that as an extreme position from which to negotiate down and to find that way the most optimum deal, where he says something clearly unacceptable to the other side and then incrementally dials it back until the other side goes, oh, the hell with it, fine. And so you get to what you try to optimize to be the most advantageous outcome. It's a strategy. Game theory, as we discussed yesterday, will tell you it's not a good strategy. It's a very risky strategy. But for the president, it's worked ostensibly his whole life. This is the kind of businessman that he was. And so markets might have shrugged it off. They might have said, well, Trump is doing Trump. Don't get all bent out of shape. He's doing this before the World Economic Forum. He did the China thing right before his meeting with Xi. This is what he does. He sets the stage before big meetings, shakes the apple cart violently, and then uses that to stage set for the meeting. We know this. They didn't have to freak out, but boy, did they. Maybe they just wanted to freak out. And maybe that's why we're holding this breakdown. So the Fed next week, to bring it all the way full circle, may be one of these events where the markets aren't expecting anything, nothing happens, but a key inflection point is passed and the markets go, well, that's out of the way. Let's go do what we wanted to do. And the price action here, with a gap fill and hold across the major indexes, except for of course, Russell, which ignores everything here, it seems to be that maybe the S&P is just going to resolve lower after the Fed, regardless of what the Fed says, because it's where it's steering.
Someone just flagged for me that the odds of Trump striking Somalia before January 31st implied market just went to 99%.
Oh, we're doing Somalia now.
Yes.
That's next week. Okay, yeah. Got it. I was wondering where we're going to go next week. So Somalia, then Iran.
Possibly.
Okay. Got it.
Thinking about the oil move here.
I'll
That's
put that
not
on my
related.
calendar then. Okay.
Is that related to what's happening in stocks? Look, what's happening in stocks today seems to be a banking issue. KRE is off 3.2% right now.
Hello.
That's a pretty sizable reversal. And where is that reversal coming? That actually draws in a really interesting perspective here, where it looked like we were breaking out, Ilya. That now in the banks up at the November 24 high, past 3 candles, green bar, hammer, or shooting star rather, big red bar down, evening star candlestick cluster, topping signal. In the banks, which have been so good and helping lead the market, that's not exactly what we want to see. We can see it in XLF has been weaker in recent sessions, and it's finding a new yearly low here today too, down 1.5%. It's a pretty even split when we think about the sector performance. I'm looking at 13 up, 12 down right now, and that's now 13 down, 12 up. It's oscillating back and forth. The gold miners are among the top of the heap, but it's your banks, the KBE, the KREs of the world that are underperforming. Outside of some very minor earnings today, First Citizens was out this morning. Yesterday we had, I'm not looking at any regional banks. It just seems like it's a day where the regional banks are being dumped after hitting their highest level in several years. Is there a realization, though, creeping down the pipeline? You talk about the Fed next week. Oil prices spike. The Fed's going to have even less of a reason to cut.
Right.
I know that we don't want to read into one single day's worth of price action, but on a day where oil is, up 2.8%, for potential geopolitical reasons that may be a little bit more long-lasting than a flash in the pan, maybe we can't get that relief or rates relief in the first half of the year as many people were hoping. Maybe it's not as simple as Trump replacing Powell as Fed chair, and we automatically get our cut in June.
Of course, it's not that simple. But
Well,
the
we
chair
know
is
that.
the chair is one vote on a 12-person committee. We've been warning for a while that you got to strap in if we get a nomination from somebody like a Kevin Hassett, who's just going to do as told, it seems, because although there's certainly no doubt in his economics credentials, which makes when he says preposterous things that a Econ 101 student would tell you aren't the case, all the more confusing, because you'd think a Kevin Hassett would know better. But when you consider, okay, if it's that kind of a nominee, well, then you just have to strap in and get ready for the Fed chair being the dissent because he's getting outvoted. And that'll be a thing unto itself, but it won't be rate cuts necessarily if the rest of the committee is not on board.
Yeah, I'm just seeing like in my FX channels here that there is chatter that the Fed has checked the market on rates, which is not unusual, but according to Mark Chandler, saying that the Fed explicitly said it was doing so on behalf of the Treasury. So it appears that the Fed may be trying to verbally intervene in the currency markets right now.
Well, let's remember that the BOJ has created a tremendous amount of volatility. If you look at the yen, it is getting.
Are we getting our yen intervention?
I think we might be. Yes, that certainly seems to be the conversation. When Ueda spoke yesterday, Kazuo Ueda, the governor of the Bank of Japan, he said that he's going to closely coordinate with the government on yields and the bond market. And then the comment out of Japan's finance minister thereafter was very telling. He didn't, or she didn't, excuse me, confirm where they might intervene or whether they're not intervening. But Finance Minister Satsuki Katayama said, and I quote, "We're always watching with a sense of urgency." Always with a sense of urgency? Just permanent urgency? That sounds interesting. And so permanent urgency is an interesting state to be in. And so it's very possible that we're getting the early sort of whiff of yen intervention. Maybe not all of it, but maybe we're starting to see it roll out. The Bank of Japan sort of famously learned that big splash interventions don't work very well. It's better to kind of do it incrementally over a period of time and manage the market rather than attempt to shock it. And so, or at least attempt to manage the market. And so this could be sort of stage one. I mean, if you look at a dollar yen spot here, it's probably the most evocative. I mean, this certainly smells like Japan's Ministry of Finance put that call into the BOJ and said, listen, get out there.
It's probably good news for us because we were sitting along the 65, 66 call spread here. We're going to get over to the FX portion in a little bit. Hey, an intervention flyer that may have worked out. Just love when that happens. Just making up for I'm still haunted by the fact that all of 2024, I was long the yen, and then I finally threw in the towel at the end of June, and then July, the thing just goes bananas.
Believe me, I was with you. I forswore 6J contracts thereafter and said, but obviously, this is too big. I need a bigger account if I'm going to do this. Otherwise, this is something akin to suicide.
That happens to me once a year. We did it with natural gas recently when I was short the puts.
Yes.
Last week, and then threw in the towel before it rallied 75%. Gosh, well, at least I got it out of the way early in 2026, Ilya. Well, the yen is moving, perhaps. I've seen all day long intervention talk. Maybe it is. But the fact that now there's chatter that the Fed is being quoted on this, okay, this is the process with which we always discuss. You're going to hear that banks are being asked for quotes to kind of check the market. But if the Fed is now doing this and getting involved here for currency stability purposes, oh boy, can't wait to see what this weekend's run of show has, because again, we may be looking at a war trade reemerging. I see stocks struggling here, Ilya. I see bonds starting to meander around, but trying to pick themselves up a little bit now. Positive at the long end of the curve. ZB's turned positive on the day. ZN is almost out of the hole. I see gold and silver rallying. I see oil rallying. It's not sell America. It's more of that war trade we saw happen last June, what we've seen happen in April 2024. Bonds aren't finding much direction, though, is the point. They seem to be trapped between a rock and a hard place. They couldn't really recover after the start of this week when we had another yard sign or WAPE sign on the road to the U.S. dissolving the global order that it's created on the post-World War II docket. We do see here that while we've recovered most of that drop from the start of the week, we closed the gap and then the rebound has since halted. If this is like a past episode, if the war trade really is emerging, bonds might have a little bit of steam to them in the short term, or that it can get a little bit of a pop, but it would be a pop that one would fade if history is any guide. Ilya, I'm looking at a 1 week moving average, for example, here in notes. And even with this rebound off the lows this week, we can't get back above the 1 week moving average on a closing basis. So momentum feels really soft right now at the long end of the curve. ZB may be a little bit better situated than ZN, but they're not looking great.
Right. Yeah. I mean, at this point, we talked about this earlier in the week. Once this breakdown happened, we looked at those elements where we saw that sort of sell America dynamic. Bonds were falling with stocks and the dollar. And as with stocks, the unclenching has not commenced. We got a big sell-off, then a little baby rally once the whole thing got put on hold with Greenland. And have we made any kind of a meaningful recovery? Have we undone the breakout? No. And so I flipped over, as you know, my long side exposure at the long end into the short side. I've had the belly with short exposure since last week. And so I'm sitting here basically at this point short and looking for higher rates. And certainly the move in crude oil seems to underpin that. I thought it was really funny. Somebody was commenting on one of my macro money YouTube videos yesterday because, I don't script these shows. I just talk about what's in my head because I'm watching markets like a lunatic basically the majority of 24 hours. And so I guess I said that Iran was teetering on the brink of collapse and revolution. And somebody took me to task and says, what's your source for that? I'm like, pick a news source, any news source.
Al Arabia.
Yeah, whatever. Is it not plain to see? This crude oil thing is not going away. And if it's not going away, if it's not a flash in the pan kind of a risk, like what we saw with the shootout between Iran and Israel, and then the U.S. over the summer, where nobody really wanted that shootout, but it had to happen, and nobody really wanted it to extend beyond a little volley back and forth. Of course, Israel made more of that volley than Iran made of theirs, but that's neither here nor there. Neither side wanted to really go to war, and so directly, and so the impact on crude oil was short-lived. We spent most of last year fading those types of spikes. This is not that. This is a methodical unraveling of, according to The Economist's reading, a fifth of global crude supply via the shadow tanker fleet. I forget now which bank or which market watching consultancy they cited, but there was a study that they cited in just the issue last week, talking about a fifth of global supply moves on these Russian shadow tankers. What is it that they're carrying, and where are they carrying it? First of all, the only buyer big enough to absorb that much illicit crude is China, maybe to some extent India, but really China. They are the world's largest crude importer by far. We also have a very clear understanding of who the suppliers into this pipeline are. Russia, Venezuela, Iran. You disrupt that, and China has to go buy oil on the open market. In fact, what do we see? The administration has said China can continue buying oil from Venezuela, but it's got to be at market rates. This is already occurring. So you have this big, giant source of demand suddenly hitting the market at a very different price point than at any time since the Russia-Ukraine war started in 2022 and the sanctions went on. So is that going to move the oil market higher in a lasting way as they have to look for new supplies and at different cost? Of course. This is not going to stop. And if it's not going to stop, then we're looking at a very complicated picture for the Fed, because a month after an oil spike, it shows up in CPI.
Well, this is something that we flagged at the start of the year. Like if oil was down 19.9% last year, and the best that we could get out of bonds, 1.4% at the long end of the curve. What happens in a world if oil rallies back 5, 10, 15, 20% over the course of the year? Which doesn't seem like a lot, because if we go in at like 55, a 20% rally is going to be $11. So oil at $65 is not the end of the world. It's going to lead to a little bit more inflation, but like 65 for the people who've watched Landman out there, they know that like $75 is the ideal price for oil. But even so, getting oil back to a 60, a 65, a 70 would probably mean a bigger albatross around energy's neck. Around the bond's neck, particularly at the long end of the curve where you have those inflation expectations embedded. So it's interesting that while, the contours of a war trade are emerging today, oil's 3% hike to the upside, it may be something that's preventing bonds from realizing their potential. And if that's the story here that we're going to go with, like bonds, you're going to, given the context of all the news, people aren't really feeling too hot about treasuries as a safe haven and the trustworthiness of the U.S. right now. Where else are you going to go?
Yeah.
Oh, yeah, the precious metals.
Yeah. Well, and we should point out here, we haven't cited this in a while, but we've been talking, of course, for a while already about this idea that the term premium in the 10-year bond has been significantly elevated. And that what this portends is the markets being concerned about essentially what happens over time. That is, there's a lot of uncertainty in a 10-year lending window. And so markets are going to demand higher yields to compensate for that uncertainty, because things are, as we said earlier, getting shaken frequently in this environment. And what we find is, not surprisingly, since the beginning of 2025, the term premium in bonds has been building. Now, the 10-year Treasury term premium at 79 basis points, or 0.79 percentage points of the yield, is at the highest since 2014. And the bond market has been heading here for a while, before things got off kilter in stocks, before we had the slam lower in risk assets this week, the prior one, long before any of the recent ructions. The bond market oftentimes gets cited as the smartest of the markets. I would argue it's the second smartest, because the currency
there's still people
because the currency market is the smartest. But here's their smarts on display. They've been telling us, look, there's uncertainty here that we want to get compensated for, and it's the most elevated it's been since 2014. Pay attention now.
I think bond and commodity traders get cited as like the smarter people in the room, because like anyone can go and trade stocks and open up an app on their phone and buy penny stocks, right? So like the average person who's trading equities has a lower level of market intelligence than the average person who's trading bonds or commodities or FX. That's not my view. I think this is probably where that comes from. But at the end of the day, we're all people.
That's right.
It excesses in markets with fewer speculators and more institutional investors would make for greater stability. Well, you would say that about metals over the years. Today, silver in the SIH6 contract continues to make its way towards the ascending triangle Fibonacci extension up near 103 and 3 cents. Now at $101.28 an ounce. Ilya, I'm out. I'm out. I'm out. This is enough for me for the short term. The recent positions have.
I'm going to have to roll my gold exposure. I think the contract rolls over next week.
I'm not out of gold. I'm out of silver temporarily because we're starting to get into a place, even a day like today, we have no touch of our 1 week moving average, for example, which we don't even get there on the open. In previous episodes in recent weeks, when we haven't touched the 1 week at all, it's been a day where the market pulls back in. I do want to buy back in. We've been holding this 1 week. It's not going anywhere. So if we get down to 95.5, I'll reinitiate new longs. But for now, taking profit on positions that have been held for quite some time that were 70, 80 DT when they were put on, well worthwhile to harvest those rewards. I think the most recent silver call spreads that we had in the follow account were purchased for like 28.5 cents. And we flipped them today for near 98 cents. So always like a good 3-to-1, a little bit better than that. And that leads us to gold, which, Ilya, several weeks ago, I recall an Anthony Batista telling me very specifically on air that buying those those $5,000 calls in gold was not his cup of tea. It's certainly my cup of tea, because we now find that the call spread that was put on a few weeks back when gold was trading closer to $4,500 an ounce is now in the money. Great. That's exactly what's supposed to happen.
I clearly also like tea because I've been for all my naysaying of gold as a safe haven asset and all this stuff. The price action's king. So when we got the breakout, I got right back in, and I've been adding. This is by far the winner in my portfolio right now. I just got to figure out what I'm going to do here, because I'm in the G6 contract, and I got to roll that out or close out and wait. So whether I'm going to roll out now or roll out later, I'm not looking to short.
Where to go next? I mean, that's the question here. The trade isn't over. The catalysts that have pushed us here haven't disappeared. My double exposure in gold at 94 DTE and at 32 DTE, I'm going to let this run into the ground. It's so far into the money right now.
Take a look at a 4-hour chart, though, because here I sort of get the essence of a thing that makes you think, okay, maybe this is a place where I should roll. And by roll, I mean take profit, take a sidestep, and then let the market digest a little. Because if you start to look at the momentum indicators, you're starting to get negative divergence. You're starting to see these short-term highs start to get met with a little bit of momentum loss. Now, does that mean it's going to turn? No, that's not what it means at all. And if you look at something like an 8-hour chart, it's not there. So it's just starting to percolate. If we were to get, let's say, a pullback through, let's call it 48.90, something like that, that might look like a spot to take some profits and wait. But because I have expiry coming next week, by Wednesday, I'm going to have to think about what to do here faster than that, maybe. So I could see myself taking this off right here ish, then rolling out into the next contract, and then kind of trying to roll out at a little bit of a discount relative to here anyway.
Last June, during the run-up to the U.S. and Israel attacking Iran, this is what gold was up to. So gold rallied into the event, sold off thereafter, right? In fact, even going into that weekend, Ilya, gold wasn't exactly pushing the highs. It was a catalyst for a little bit of a pullback. We then got some sideways chop. I feel like this could be a buy the rumor, sell the news type of event, right? We saw what Iran did last time where they retaliate and then they declared victory. I don't think it's in the, just given what's happening in Iran right now, it's not really in the regime's best interest to be fighting a two-pronged war, so to speak, where they're dealing with an uprising of their local population and then have to fend off American and Israeli warplanes. So they probably want to just...
Well, they couldn't fend them off anyway since Israel blew up all their air defenses last time.
Right. So we go in, we do another attack. Maybe that's that. And if that's that, then the geopolitical risk premium comes out of the market. Gold, silver, they pull back in. We get a little bit of chop.
Well, this is really the interesting thing. Israel has been discouraging the U.S. from getting involved.
Because we don't have enough assets in the area to protect Israel. But
and
the second that we
don't know who runs the country if you were to decapitate it like you did in Venezuela.
Is that a Donald Trump problem or is that a Marco Rubio problem? That's a Marco Rubio problem.
Well, we know how this worked last time. So
he's going to be the next Shah of Iran, just like he runs the State Department and USAID, and he's, just one of the many things in his
somehow
portfolio.
my head just went to an episode of the Sopranos where that New York boss comes in and Tony looks at him and goes, there he is, the Shah of Iran. So when I think about this, it seems like the administration is trying very hard not to do the George W. Bush in Iraq thing here. And I think the situation in Venezuela is very telling. We didn't do regime change. We kept the regime completely in place. We took off one guy who was intransigent and said, right, now does everybody want to play ball now? And everybody said, yeah, okay. And so I don't think we're trying to make Marco Rubio the Shah of Iran. I think we're trying very hard not to be involved in the decision. And so both Saudi and Israel have been telling the administration, listen, we have no idea what happens if you decapitate this regime. We don't know who runs it. Iran is a diverse country. It has many minorities. They don't necessarily agree. This could turn into the Balkans. So don't do that. Don't take the lid off a whole hornet's nest of issues like you all did when you took out Saddam Hussein. At least know that that's what's going to happen before you do. Have a plan. Have somebody that at least you can point to and go, here is someone with enough support in the street that they could run a provisional government. And you can increasingly see that there's acolytes out there for the Crown Prince, Reza Pahlavi out there, the Crown Prince in exile, the former Shah's son. It doesn't look like he is a unifying consensus figure at this point. Maybe this campaign's going to get him there because the PR machine is out there on him from some circles. But of course, we had those folks that were telling the Bush administration, listen, you're going to walk into Iraq like liberators and we'll run it for you. That didn't work out, but for the first week or two. And so maybe we're not in a hurry, and maybe that's not a bad thing.
Gold, silver, really nice days today. Looking to re-enter in silver, riding it out in gold, looking for a buy the rumor, sell the news type of reaction around a potential weekend headline coming out of the Middle East. Copper prices, we stuck with it, Ilya, because the uptrend from that November swing low that really kickstarted everything, gold, silver, copper, platinum, palladium, look to late November. That's where the markets find their lows. That's when these rallies and all the metals begin. We held it this week. It coincided with our 1 month moving average here in the past few days, this yellow line. We have our uptrend. We've now bounced, thankfully. So copper is not the canary in the coal mine. It's not telling us that the metals rally is weaker and that there are some aspects of this that aren't so great. Copper being up today is a very important development, I think, in the grand scheme of things. It shows that this is not just a gold and silver story, but that whole entire base metals, let's find reserve assets that are, well, hard assets that we can use as reserves and store. That still carries some weight. I do see here that the Trump administration is considering a naval blockade to Cuba, which, we look at some of the metals again. Why are the metals so popular? Because you get headlines like that are causing people to jump into things like, well, here's platinum, Ilya, 6.71% to the upside, another new all-time high. The metals of this trade right now, they bend the trade. They're going to remain the trade. Trump's still president for the next few years.
Right.
That's not changing.
I think that's the essence of it. And frankly, it seems like pushback on China is a bipartisan kind of thing. I mean, Biden didn't exactly change tack there. Frankly, it's more style versus substance. And I mean, frankly, if we had the TPP passed, one wonders if this were even a thing. But that goes all the way back to the Obama administration. They were attempting to contain China. Their whole policy pivot, we talk about now, we're abandoning Europe. The Obama administration was talking about increasingly focusing on Asia. The whole TPP thing was about Chinese containment in a way that didn't necessitate what we're seeing now. Of course, that got scrapped. And so here we are. But the general sort of push to view China as, if not an outright adversary, then certainly direct competition and a challenger to the crown, and to forcefully resist, that seems bipartisan. And so you probably get some relief if you get a changing of the guard in the White House to a different style in a few years. But that could just be a buying opportunity, because I don't think anybody in the U.S. political establishment has any desire not to push back on what Beijing has been doing since the advent of Xi Jinping becoming premier.
Yeah, I'm sticking with my metals exposure. I'm going to wait to add more because it's the trade that keeps on giving until the momentum breaks. Momentum people have no reason to get off the train.
No.
Energy buoyant.
Yeah.
Very buoyant. Gold here is one story today. Crude oil is another, up 2.96% right now. We continue to see this little churning, right? This improvement of momentum. We had our morning star. Yesterday was a pullback, but we bounce again on that 1 month, 50-day area where we had resistance.
Star?
Yeah, well, morning star, right? 1, 2, 3.
On the way back. I got you.
Morning star here, right? And then we have our little.
I'm a candlestick purist. To be a morning star, it has to be at the bottom of a down.
These are all made up things. These are all made up.
They
words.
are made
so
up.
Like they can be, all words are made up. 46 IVR though, so we do get a bounce back in volatility today, and that ultimately you're seeing that the vol levels across the curve.
All things are made up things outside of physics.
Yeah, and this is not candlestick.
And this is not physics.
Not a law of nature, just words that people mash together. So, okay, oil here, bouncing back with a rise in volatility. Again, part of the reason why I say I think this is a war trade reemerging. Stocks struggling, bonds trying to get it together, but oil up 3% alongside what you're seeing in gold. Maybe there's the intervention in play.
Yeah.
Ilya, yesterday we took off the short iron condor trade, which given the pullback and the recentering of the strikes, it felt like that was the prudent thing to do. I'm still looking at a short put spread in here. I'm likewise looking at a long call spread in here. The long call spread is tailored around this being a bullish falling wedge. So I have a kind of a double bull going on, a little bit staggered because they're not at the same expiration point. this thing needs to go up for me to make any money moving forward.
Yeah.
I feel like it's going to be going up sometime soon. So I'm comfortable with that exposure. If it is a geopolitical event, though, we got to take out the playbook. It's the buildup that drives the prices higher. The actual event itself has been the release valve. So it might be a situation where, like, if an attack goes through on Saturday, on Sunday, what did we see here, Elliot? There was a gap open higher on June 23rd, and then this thing immediately sold off. If we get a bounce into 62, 63, 64, 65, and vol is going through the roof and the market opens, the play is to immediately get out if you're long and not be too cute and see if it runs another $2 or $3. Just take the money and run. So that's what I'll be doing. If the market opens Sunday, we see oil's up $2, $3, $4 because of an attack on first call, I'll be closing out any long deltas I have in oil, and I'll be looking for the opportunity to look at the short call spreads to fade off the risk.
That is not what I'm doing. I have been long looking for this breakout to be a trend change and to be something lasting. I think what we saw
I'll buy back in after it pulls back after the geopolitics subside.
Okay, fair enough. I mean,
I want to play a little ping pong here.
If you look at what we've seen so far, right? We got the breakout. We didn't end up attacking Iran. Did the breakout get undone? No.
No.
It pulled back. It held. And now we're using former resistance as support to launch back higher. I was banging the drum on this all last week, saying this is not the geopolitical flash in the pan to fade. This is a thing that isn't going away, it seems. Now, maybe this changes. Who knows? But the price action will tell us if it does. And for now, this is a breakout that lasts. And of course, it's a breakout that looks like it's going to last here because everybody was going into this year expecting an oil glut as far as the eye can see. You got that from the EIA. You got that from the International Energy Agency, the IEA. They all seem to use the same vowels for their acronyms. They just shuffle them around. But when you look at all of the forecasts, they're all, we're going to have supply exceed demand for the next 2 years, 3 years. There's a glut out here. Okay, maybe not. Maybe if China has to buy oil not from illicit sources for pennies on the dollar and has to go buy them at market rates and then has to go tap supplies that were not prepared for them to be tapped to this extent, like Saudi, like Iraq, like the rest of the Gulf, like Brazil, like Guyana even. If that were the case and suddenly they had to come up with supply to meet Chinese gaps in demand, again, China is the world's biggest importer, then what glut exactly are we talking about? That's not a story that's instant. That's not one attack on Iran or even two. That's not even a supply disruption. It's a structural reorganization of the market.
Energy prices staying firm here as this weekend storm bears down. I see that my personal forecast here just north of the city is now 14 to 21 inches. Delightful. Fun. All that's
I'm
going to
very much looking forward to walking around Chicago next week with all the charm of a Smurf suit, because those of us that are from California are not built for this kind of a thing anymore. I did my time. I was born in Russia. I lived in the extreme cold for long enough, and I don't go looking for it anymore. You can keep your ski resort. And I live nearby Tahoe.
-6
nearby enough.
Congrats. Going to a -6 Chicago. That's going to be fun.
It's going to be great.
Yeah,
it's going to be great.
Thankfully, Tasty has heating in the office. Otherwise, gosh. When is this going to roll over? Well, it's 105.8 IBR. Ilya, there's that voice in my head saying trade natural gas. Let's listen to him. What's the worst that could happen? 20 days in, 20 days out.
Mark your trading logs. This is the day that Vecchio will talk about later when he says, man, every time I do this, I know not to do it, and then I do it again. This is the thing that he'll know not to do a week's time. 2 weeks, maybe.
These aren't great. These aren't great.
Then, of course, he'll do it
odds.
again.
Well, it's 100.
Don't touch the crack pipe, sir. The water is not hospitable.
Okay, so we are at like in the NGH6 contract, and maybe there's a few dollars that could be squeezed out of here over the next few days because it is only at 30 DTE. But if we wanted to just square this up, the highs that we have for 2025, 480 down to about 260 midpoint in this contract, 0.5. No, those are sixes. It's not cooperating. Ilya, I would like to consider the fact that we are basically at the midpoint of the 2025 high to 2026 low range right now. So if we were to be directionally
fade this thing,
just directionally neutral, if we were to play it on either side, right? And I really don't want to go up to 4.8 because just the market doesn't look like it's going to do that in such short order, but 433
it might not get
maybe.
all the way that far.
We could go 10 cents wide on either side and do 4-1. Maybe we could get to 50% max profit next week. Yeah. It's 100 IVR, Ilya. We got to take those trades. We got to stay mechanical. If I had stayed mechanical and stuck with my 45 in, 21 out the last time I did short put spreads, I would have had a hell of a week here with natural gas. This was the other trade I missed out on. I missed out on the yen in 2024, being impatient. This one I was impatient and stepped outside of the mechanics. And I ended up missing the biggest move that people will be talking about for 10, 20, 30 years from now. If you were long natural gas coming into this week, you had 4 years worth of returns in 1 day, 2 days. So I am going to play it directionally neutral. I'm going to learn my lesson and not try to play it long or short. Energy exposure is in place. We have only a few minutes left. You and I are on last call today, so I know we're going to go into more. But I do want to talk about this yen a little bit here because those intervention rumors.
My lesson today, or yesterday, rather.
Yeah, so we mentioned this earlier in the show that there seems to be an intervention going on in the Japanese yen. There was rumored to be one overnight. There now chatter over the past hour or so that the Fed is getting quotes on behalf of the Treasury. So this is coordinated intervention efforts, not just from the BOJ and the Ministry of Finance, but perhaps here stateside as well. Either way, though, it's been a really nice uptick in vol over the course of the day. We've also seen prices rise very sharply. So we've had this as dollar yen spot rates get close to 160. As they get close to 160, should we be playing for a little bit of an intervention play here, getting something out of the money cheap where price goes up in the yen's favor? If we have an expansion of volatility on the back of an intervention, could we benefit from that? It hasn't worked out a number of times, but we've structured the trades where it's like risking 1 to make 10, risking 1 to make 15. It is working out a little bit better today now with this occurring, with the vol spike, with this news coming out. I'd have to imagine, Ilya, that this is not the only effort they're making. If they're just, quote checking right now, whether or not these strikes are hit is one thing, but the intervention and the sensitivity to the 160 level seems to be very well established by now. And that is something we should consider moving forward.
Yeah, I mean, if you look at the last time yen had a big turn, it was at the beginning of last year as it started to rally alongside the massive sell-off in the dollar more generally. Already by January 10th, the move was underway. Incidentally, that was the trade that bailed me out of second-guessing the stock market last year. That was massively short the dollar in the first 6 months, just kept adding across different currencies. It was the gold of last year, if you will, for my portfolio. And so when you look at this now, that top from the beginning of last year, that's basically where we just got rejected. So that was 158, 80, 90 spot. We poked above it for one whole day. And that was on the 13th of this month, last Tuesday. Since then, we've gone sideways and then today down. So we got rejected at exactly the same spot.
It sets something up for the 6J contract where 63 basically becomes a floor in the short term, which I just pulled it up there briefly because we do have to wind down and you and I can continue this conversation on last call later on. But it sets up where you can get something in the neighborhood of like a 3-to-1 risk to reward, risking 3 to make 1 on a short put spread wrapped around 63 and a half, right at 42 DTE. So if we think that they've established an intervention line in the sand, trading around it, as in the yen is not going to get weaker than there, could be something viable. But you and I will be back Monday. Durable goods is the U.S. data release to watch. Otherwise, Ilya, I'll see you in an hour's time from
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. Today, we are going to shoot from strength. Man, there are so many things to celebrate. Silver 100, gold 5,000. But first and foremost, man, we need to educate ourselves a little bit around why we sell options in the first place. So, Josh, go ahead and get us going there on the slide. So, why do we sell options? I mean, this is like the main thing you need to figure out, right? Like if you're in the derivatives market and you're taking a look at an option, you're taking a look at a trade or what have you, you need to figure out like, okay, should I be the option buyer or should I be the option seller? Well, if you've been around the Tasty ecosystem for any length of time, like if we have, captured you inside of our ecosystem, then you know that we generally like to sell options rather than buy options. And why is that the case? Honestly, there are a number of reasons. Like it's not really just one reason. It is a collection of reasons as to why why we choose to sell options rather than buy options. But if I had to boil it down to one singular driving force, I think this would be it. So Josh, go ahead and cue us up here on the information. So I think, again, there's a number of advantages to selling options, right? You've got high probability, you've got plain volatility contraction with the negative vega and things of that nature. But at the end of the day, if there's going to be an edge, right? If there's really going to be a true advantage to selling options, it's going to originate from this relationship: implied volatility relative to realized volatility. So if we look at a Black-Scholes options pricing model, right, and we think about the theoretical framework that goes into determining what option prices should be, we have the Black-Scholes option pricing model. The Black-Scholes option pricing model obviously determines what a fair value should be for the options price. Well, remember, inside of that model, one of the variables that gets input into the model is implied volatility, or IV. This is, of course, the forecasted volatility for the next however many days you might be looking at, like whatever expiration cycle you might be interested in, whether it's 30 days or 45 days or 1 day for my shooter McGavins that might be watching the show today. Whatever it is, there's going to be an implied volatility that's associated with that window of time. That goes into the model to determine what the options price should be. So options are priced based off of that implied volatility. Okay. The implied volatility is the forecasted volatility for the upcoming period, right? It's an estimate. It's a forecast. You don't know what the actual volatility is going to be yet, but this is the market's, for lack of a better phrase, best guess at what the volatility should be for that window of time. Okay. Once the window of time happens, once those 30 days or 45 days or 7 days or whatever actually transpire, then you have a variable called realized volatility. So you're actually able to go in and figure out what was the volatility over this period of time. Like what were the actual fluctuations? Like how big were the actual deviations for those 30 days, 20 days, or what have you? Well, if you look at the comparison between implied volatility and realized volatility, here is what the Tasty research has found over and over and over again. And it's not just the Tasty research, mind you. It would be any empirical studies that are done on the same phenomenon. On average, over time, implied volatility is greater than realized volatility. In other words, the volatility that's going into the Black-Scholes option pricing model, or really any option pricing model for that matter, the Black-Scholes just happens to be the poster child of all option pricing models, the implied volatility that goes into that model is actually higher than the realized volatility that actually takes shape or transpires for that period of time. So what does that mean for us as derivatives traders or option buyers or option sellers? Well, go back up to the middle of this slide and remember, it is the option pricing model that's going to determine what a fair price should be for a given option. Okay, if that price is determined based on the implied volatility, and the implied volatility is systematically higher than the realized volatility for a given period, then it naturally follows that the option prices that got a little extra kick to them. Right? The option prices that got just a wee little bit of extra juice in those prices. So they're kind of overstated. They're kind of overpriced in a way. And so if I'm going into a trade or a potential decision, should I buy the option? Should I sell the option? It's like, well, if I buy the option, I'm going to be overpaying a little bit. If I sell the option, then I'm going to be overcompensated a little bit. And so we like to take advantage of that relationship on average over time. Now, we have to be fair. Right, we've got to be fair. We've got to be balanced. It's not always strawberries and sunshine. Right? This is no guarantee. This is no promise that you're going to absolutely make money by selling options. It's not that at all. Because as anyone who's traded for any length of time, you know that for every gimme, there's a gotcha. Right? And this time, it's a pretty sizable gotcha when you start getting into undefined risk, naked positions, and things of that nature. But that's a different discussion for another time. As a foundational element for kind of setting ourselves up for success, we like this trade, we like this relationship, and we want to take advantage of the simple fact that on average, implied volatility is greater than realized volatility. So that is why we sell options. All right, Josh, go ahead and bring us into the market. We did it, man. We made it. So let's go ahead and see where we are at here in the old market. All right, EMI S&P is up 4 on the day. You've got the risk-free instrument, also known as the Nasdaq futures, extremely high risk product, up 82 on the day. You've got the boomers down 300 and the Russell 2000 futures index down 46 on the day. Man, that is a pretty big move in the Russell, kind of bucking the trend a little bit in terms of, S&P 500 looks green, NASDAQ looks green, Boomer is struggling, but hey, it is a Friday. They typically shut it down by Tuesday afternoon, Wednesday morning at the latest. And then you've got the Russell kind of following the Boomers lower, down almost 2% on the day. But of course, everybody's here because this is the only place where you are able to actually see and enjoy gold at 5,000, silver at 100. Nobody else on the internet even knows this is happening. It's only the people that are live on the Tasty Live network. So thank you guys for being here, and you are rewarded. Like, you get, early access to this information that you just can't find anywhere else. And so gold at 5,013. Man, gold at 5,013. They've got silver at almost 102 now. I mean, 100 is like that is a distant memory. 100, like that thing is like 100. Like, forget about that. That's new support. Like, old resistance is now new support, and 100 wasn't even resistance. And I know the other day I said it's not going to hit 100. What I meant to say was it's not going to hit 125. Like, that was the number I had in my head, but for some reason it came out as 100. I mean, you guys know what I'm saying. It happens to you guys all the time too. And so now with silver at 101, almost 102, man, I don't know, man. That's just some crazy, crazy, crazy stuff. And so anyway, I think silver is on the high, if I'm not mistaken. Let me look at this really quick. So silver, this is the high tick, right? This is it. This is the top print. Is it not? I mean, there's your daily chart. 101.90. Yeah, so we're 13 cents off the high print. So, I mean, Armageddon has begun in silver. I know everybody's talking about Snowmageddon and Wind Chill-mageddon, right? Well, it's all going to hit the silver markets here in any second here. It's just now, 11.5 cents off of all-time highs. And then gold, I think, was it up over 50.20 maybe? 50.25 or something? Yeah, 50.27. And so, and by 50.27, I don't mean $50.27. I mean 5,027. And so that's just, man, that's crazy stuff. When silver was getting ready to hit 100, I was watching this last night. And I mean, I thought it was going to happen last night. I tweeted about it last night, and I had some exchanges with some of you guys back and forth. I kind of thought about it. I'm like, is the market ready for this? And I don't mean from like an emotional standpoint, or like, kind of a visceral reaction standpoint. I meant from like a structural standpoint. Like, I kind of thought we may have run into a bit of a Y2K thing. Like, do you guys remember Y2K? I mean, I was 18 in 1999, so I remember it vividly. And so, I mean, Y2K was like, we're not ready for the calendar to change to 2000. Like, they had to deal with this, last millennia, 1,000 years ago, but that's before calendars even existed. That's before they even really kind of understood like the sun and the moon and like days and stuff. Like, they were just figuring all that stuff out. And so they didn't really have to worry about like the change of the millennia. But we in 1999, it's like, we got to worry about this, right? Well, silver, I was like, are they ready for 3 digits on the left side of the decimal? I don't know that they're equipped for this. And so I was kind of watching on pins and needles last night. I'm like, is everything just going to blow up? Like, is everything just going to get, kind of blown to smithereens here on, silver hitting 100? But it was not a problem. It was not a problem at all this morning. So silver 101, almost 102. It's crazy stuff, man. It is some super, super crazy stuff. And so I see you guys in the chat, by the way. Man, look at you guys. I appreciate you guys. Look at Sam L in the house. Stephen Bivens is here. Man, Kimberly Thomas is in the house. Man, Ash Finn is here. Old Two-Face is here. Sergio's in the house, man. O'Neill is in the house. O'Neill is in the house. Brian Dowdy's here. The son of Anacone is here. And Donald Bloomberg is here. What's going on? I appreciate you so much. iPod Touch is here, guys. iPod Touch is here. NASDAQ up 70. And so this would not be the day that I would show up iPod Touch. But again, you got to do you, boo. It's 100% your call. So, all right, let's go ahead. So let's talk about a couple of things. So number one, it's kind of funny with the silver situation, right? So let's talk about SLV just a little bit. I think we're getting close to the point. I think we're finally getting close to the point where it's like, okay, I think enough is enough. This is one of the things. So I talk about this on the show a lot, and I think this is actually really good that it's happening because this gives us a real-time example of something that I do talk about on the show and I do bring up from time to time, especially right now. It's quite relevant. When it comes to managing losers,
But I thought about doing a segment today on managing losers, but I decided to go with the Black-Scholes. I was kind of in a implied volatility versus realized volatility type of mood, and I was kind of feeling those vibes, and so we went that direction. But managing losers would have been obviously a worthwhile topic to cover as well, because the winners take care of themselves, right? I mean, whether you sell premium, buy premium, like whatever you do, the winners, that's not difficult. Like, that's not hard. That's going to work itself out, whether you cut them quickly or you let them run, whatever. It's like those are all high quality problems. You figure that out and you move on. It's obviously the other side of the equation and the other side of the fence that obviously warrants, the lion's share of our attention. What do you do with the losers? Well, when it comes to selling premium, if you look, the Tasty Research has looked at this a number of times as well. Should I cut it at 2x? Should I cut it at 3x? Should I have no predetermined exit point, right? I think there's a number of ways that you could slice this up. Personally, I like to go into my trades with no predetermined exit point. So I don't have a hard cutoff at 2x. I don't have a hard cutoff at 3x. Now, those are great points. You can go to the Tasty Research yourself. If you search managing losers, Tasty market measures or whatever, or have your AI agent search it for you and then report back to you tomorrow morning so that you can just go, live your life, just like Wally, right? Whatever you want to do, like that's 100% fine. But you'll see that 2x, 3x of credit received, those are really good markers as well to kind of cut your losers. Well, when you decide to have no predetermined exit point, like it sounds cool. Like it sounds kind of like, man, that's living a bit dangerously, which it is, but sometimes it doesn't work out. And sometimes you're kicking yourself a little bit like, man, I should have cut this at 2x. I should have cut this at 3x. And so right now, looking at this SLV position, this thing is comfortably at, what is that, about 5.5x maybe? That's about, no, not quite 5x. So I sold it for, I'll just round the numbers to make it a bit easier. I sold it for $5. It's a little over 5, but this will make it a little bit easier. It's currently marking at 28. So that means, in fact, here, let me grab, do I have a red? Ooh, I do. That's a serious looking red. I am down 23. Look at that red. Man, that is a Snowmageddon red if I've ever seen one. Like, there it is. So I'm down $23, right? So I'm down $23 on a $5 base. So that's almost 5x, right? I'm at about 4.5x right now. I think we're probably getting to the point where we may just have to cry uncle and just kind of call it a day. I want to give it a little bit longer because now it's like, man, this is just getting to crazy town. And I really do feel like, there's going to be a day at some point in the future. I'm kind of hoping it's Monday. Kind of hoping it's maybe Tuesday, but it could be 2028 or 2029 when silver is down like $17 and silver is down like $19, right? And so I really feel like, we are just loading the springs for that huge drop in silver. Now, of course, again, that's where all the silver bears, I guess myself included, will come out of the woodworks on the internet, online, on Twitter, X, whatever, and say, I told you, man, I told you it was going down. It's always so funny when I see that graph that's like a huge line going up for like whatever asset, like gold or silver, or Bitcoin or the market, whatever, and it's just this huge like straight line, and then there's like a little dip at the very top, and it's like all the bears like, man, I told you it was going to go down. And so I sort of feel like that because I guess I am sort of like that. But I still do feel like it's worthwhile though. Let's hold on to it for just a wee little bit longer to see if we can't get a better exit point. If we don't, we don't, and then that's going to be that. And so, this is kind of the, what you sign up for though. If you have no predetermined exit point, like if you don't have a predetermined exit point, then you kind of have to treat it on a case by case basis. You kind of have to treat it on a rolling basis, kind of day by day. And this is just, this is kind of what you're, again, it's what you're signing up for. But all hope is not lost, people, because take a look at this. So, the P&L Open Bros, man, they're really going to let me hear it on this SLV position. And that's fine. Because if you're going to let me hear it on SLV, you also must include its adjacent neighbor SBUX. So take a look at that, man. Man, we're fighting back on the P&L Open. Like, we are doing it. Starbucks up another $1 today. And so that's getting close to the point where I'll probably take off that long in the money call. We talked about that before recently too. But right now I kind of feel like I need Starbucks on as a bit of a hedge against silver. And so maybe we get, obviously the holy grail of all situations, maybe Monday, where it's actually silver down and Starbucks up. Silver down and Starbucks like unchanged? Like, could that possibly happen? I don't know, but you've got to watch the show to find out. And so again, the content's not going to write itself, but now you guys have a reason to come back. And so there is SLV, there is SPUX, and then the last thing I want to talk about here, and then I'll get to you guys. I'll try to get to as many of you guys as I can. So I did this calendar spread in Intel for earnings last night. And this was a trade from you all, so I appreciate you all. I don't appreciate the fact that Intel went down by so much, but I appreciate you guys bringing trades to me and giving me ideas. I mean, this is a trade I don't do that often, calendar spreads, and so it's kind of fun to do a little something different. I hoped it would have worked out differently, and I wish we would have had a different result. But this is still a really, really good teachable moment because you can see that Intel is down a ton today. It's down almost $10 on the results, whatever they were. Obviously, they were not good, and the market is not super excited about the Intel results. But when you put on a calendar spread, one of the things you hear us talk about all the time is, your maximum loss on the strategy is usually right around the debit that you pay. It's usually going to be, kind of equal to the debit that you pay. Now, theoretically, if some weird things happen in volatility between the front month and the back month, you could lose more than what you actually pay for it. But if you pay 70 cents for a calendar spread, you're not going to lose $7. You're not going to lose like $5. It's a situation where maybe you lose 80 cents or 90 cents or maybe $1. It's not going to be off by that much. And that still is a pretty rare instance. I mean, look at this situation where from a price standpoint, it pretty much, we couldn't have missed the mark any worse than what we actually did. And still, we're going to be able to get out. Apparently, we're going to be able to get out for a 6-cent credit. I mean, even if I get out for a wash and end up losing, the 72 cents, then that would be totally fine. Now, right now, you've got this 56 call that's clearly going to expire worthless here in just another hour. So we could just sit tight and do nothing and just leave the naked call on. I mean, that would probably be the most prudent play right now because I'm only going to save 6 cents on that call if I'm even able to get the 6 cents. So for now, you've got Intel down $9 today. Is it going to recover $9 or $10 next week? It's not very likely. But right now we'll just leave it tight. We'll leave it sit because the 56 call that's set to expire here in just over an hour is going to go away, and then we'll wake up on Monday morning with just a long call on Intel. And who knows? I mean, maybe the government needs more shares. Like, maybe the Trump administration needs some more Intel, and if that happens, I don't know, man, this thing could skyrocket next week, and then we will be the beneficiaries of that. So Intel, I did want to point out that we're basically sitting at max loss. And as you can see, the maximum loss is essentially equal to the debit that we pay on the strategy, even when you miss the mark pretty badly indeed. So, all right, let's go ahead, though. Man, let me see where you guys are at. Man, where are you guys at? Man, I see you guys in the house. Man, look at you guys. Look at you guys in the house. Man, look at Branches in the house. Man, Ryan Lauder's in the house. Let me surprise and delight Ryan Lauder. So Ryan Lauer in the house. I see you in the house there, Ryan. I appreciate you. I don't recall you having been in the chat before. Maybe this is your first time. Maybe I'm misremembering. That's also a good possibility. But Ryan says, I'm glad my SLV position isn't as bad as Jim's. There you go. This is what I'm here for, people. Like this, I'm here for you. Don't you ever forget that. All right. So you may have a really bad SLV position. You may have a really bad GLD position. You may be thinking, I'm the worst metals trader in the world. And then you tune into this show and you realize you're number 2 at worst. You realize, wow, he's actually worse than I am. And so that's good, Ryan. I'm glad that you're here. And I'm glad that I could be a source of joy for you. And then Ryan went on to say, you've got the SLV Starbucks pairs trade. I mean, that's that's pairs trading 101. Like a lot of people think of like NASDAQ S&Ps, like maybe Russell Dow, maybe even gold, silver, but you got to be a little bit more innovative with your thinking. You got to be a little bit more, exercise a bit of creative license. Like let's get some Starbucks silver. Like let's get some gold, maybe Snapchat. Like let's kind of think outside the box here and get some things on that maybe the market hasn't seen before. And then we'll just kind of, we'll kind of go from there. And then I'm surprised to let one more person because I see Brian Dowdy trolling me. Says, "Oh, good, he's not capitulating yet. So you must be long silver. You're welcome, my friend." Right. So on Monday when we gap up to 107, you are welcome, my friend. And so again, I'm here for you guys. Don't you guys ever forget it. And so, all right, let me go back to the beginning. Man, good times, man, good times. All right, Ashfin's in the house. What's going on there, Ashfin? I appreciate you, my friend. Thank you so much for being here. I appreciate you so very much, my friend. I hope all is well in your world, and please tell your wife I said hello. And yeah. And so Sam L in the house. Doc says Silver would never hit 100. There you go. Looks like the Hunt brothers finally caught you with that one. Entry management missed. Exit management legendary. Oh, there's no exit management. We still have it on. Right. And you know what's going to happen? Like, let's just say, thank you for being here, Samuel. I appreciate you, my friend. Let's just say Monday, we get a little bit of something. And I don't need much. I just need like 40 cents to the downside. Not much. Just need a little something to get it started. Then all of a sudden, it's like, I don't know, man. Could this be the beginning? I mean, the longest journey begins with a single step. Like, let's not put the cart before the horse here. Like, just give me one day, give me like a 30-cent down day. I don't need much. But then all of a sudden, you get the wheels turning, get the juices flowing. Next thing you know, we got our sights set on a scratch, man. Like, the next thing you know, I'm looking at that 64.5 straddle, and I'm like, we got a chance. Like, we got a shot. I mean, silver just rallied what? It's already up 40 or 45% this year. Like, who's to say it can't drop, 40, 45%, next week? I mean, that would be pretty awesome. Pretty awesome indeed. In fact, if you look at silver, hold on. I was looking at this before the show. I couldn't believe it. So if you go to silver, if I go to the options on silver, I go to the trade page, I go to May. So they're only giving us May options. So we can't even do anything long-term in silver. Obviously, you could do something in SLV, but I'm looking at the silver futures. In fact, hold on. Let me look at SLV. Yeah, because I want to go all the way out to January. So January 15th of 2027. So this is a year. So SLV right now is at 92 and some change. I think when the show started, it was under 92, was it not? Yeah, it was. Wow, look at this. Silver's over 102. Man. Wow. I mean, I thought when it went from like 50 to 52, I thought that was a short squeeze. And so I was like, okay, maybe that's like the amuse-bouche of short squeezes. Not the main course, but that's just kind of the start of it. So then when it went from like 58 to 61, I'm like, okay, there's the short squeeze. And then like 67 to 70, I'm like, okay, I missed the first couple. That's obviously the short squeeze. And now here we are going from 97 yesterday to 102 today. And it's like, all right, is this the actual short squeeze? I mean, it's like margins are getting raised and this, that, and the other thing are happening. And it's like, man, it just doesn't even matter. That's really crazy, man. So yeah, so silver, SLV at least, was under 92 when we started the show. But now it's over 92 and will soon be over 93 when I get done talking about it. But I want to see, what does a double in SLV look like? So for the next year. So as you can see, I've got January 15th, 2027 pulled up. So this is almost exactly 1 year. So 1 year, this would be SLV going to, let's just call it 180 or 185, whatever we can find on the option chain. I have not looked at this. I looked at SI, but it only goes out to May, so that really didn't do me much good. I'm very curious to know what the delta is on a double for SLV. The IV rank is 85. I'm a little bit surprised. I figured it would be over 100 because, obviously silver is just all-time high after all-time high. But anyway, I'm curious what the delta is on a double for silver for the next year. I'm going to say the delta is like 15. I'm going to say it's like something like super, super crazy, maybe 12, which would still be really crazy because that will put the probability of a touch at, basically 25%. But let's take a look at it together. I have not looked at this, so I don't know what the answer is. I have a feeling I might be way off, but you never know. So let's go all the way down to, they won't even give it to us. Well, look at that, man. They only go up to a 160. And that's a 30 delta. So I may not have been that far off. I mean, we can't even go beyond 160. And so we can't even look and see what a 180 or 185 might be for the double for the full year. And so I don't even know. But the 160 call is a 30 delta. I mean, that's some pretty wild stuff, man. When you think about the fact that, typically when we do like a covered call or something, or even a short put, if we're on the put side, we're selling about the 30, 35 delta. Like that's typically like the entry point for, the delta that we look at for a new short premium position. And so I'm like, wow. So if I was doing a leap covered call, which we wouldn't typically do this because the decay is so slow and it barely decays when you're so far out in time. That's why a lot of times when you buy premium, it kind of makes sense to buy something further out in time because it's not going to decay that rapidly. But still, just for the purposes of this illustration, if I was going to do a leap option with a leap call, kind of with that core position, poor man's covered call or long shares or whatever, man, I'd be selling the 160 call against those shares, right? Because that's your 30 delta. I mean, that's typically where the analysis would begin. That's crazy, man. That is crazy. I remember when silver was like 18. And that was like last year. Like, this wasn't like, I remember back in my day when blah, 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 blah. Like, no, this was like February of last year. This was like last January. This thing was 18, 19. And man, that's really, I can't believe it. I really can't believe it. But anyway, I digress. Stephen Bivens in the house. What's going on there, Stephen Bivens? I appreciate you, my friend. Thank you so much for being here. Jared Kramer in the house. What's going on? Did anything cause the midday dip, or was that just the market being the market? Man, I don't know. I can't keep up. Taco Wednesdays, Taco Thursdays, silver at 100, silver at 102. Silver's going to be 104 before it closes out today. And it's just, I don't know, man. I can't keep up anymore. But so I can't answer your question there, Jared. But maybe somebody in the chat can help you. Sam L in the house. Intel missing earnings, doc. Was there ever a doubt? At least they're still in business. I mean, maybe. I don't know what they said, but they may have said, like, listen, like, it's happening. Like, this is it. It's going to be lights out next couple quarters. And so I would just, get what you can before we shut it down. I mean, I don't know. I don't know what they said. And so Org Danu's in the house. What's going on there, Org Danu? I appreciate you, my friend. Hello, Dr. Jim. I hope you had I hope you have a great weekend. Thank you, my friend. I appreciate you so much. Brian is in the house. Says, hey, Jim, what's going on there, Brian? I appreciate you too, my friend. Thank you so much for being a part of the show. I don't recall you having been in the chat before. So thank you. Thank you so much, my friend. I really, really appreciate you being a part. And if I can ever help you in any way, please let me know. Like, let me know in the chat, via email, on social media, come on by the house, like whatever makes sense for you. It makes sense for me, man. So reach out if I can ever help. And I try to be as responsive as I can. But if you guys ever email me and I miss it, like send it, like wait a day or two and then send it again, because I kind of treat my email inbox like a Google search. Not that anybody uses Google search anymore, because the AI agents are doing everything for us, of course. But, in the artist formerly known as Google searches, the first page was where it was at. Like nobody's scrolling down on the screen. Like those days are over, man. And so if I ever miss it, just send it again, and I'll try to get back to you as quickly as I can. And so Wolf is in the house. Dr. Jim, we're preparing for a snowmageddon in Texas. If we don't make it through the weekend, please promise me you will have a banana daiquiri on next Friday's show. In my honor, love, Wolf. And see, that's the thing there, Wolf. I got you covered, because you're assuming that this already isn't a banana daiquiri. You don't know. You don't know what it is. It could be a banana daiquiri. It could be Natty Light Ice. It could be the two combined together, which would, now you want to talk about innovation. Like, there you go. Like a little banana daiquiri with a Natty Light Ice base. See, now we're talking. Like, now we're using that creative license that the good Lord has blessed us with to come up with brand new products. And so you think the robots can do that? The robots can't do that. And so, but Wolf, stay safe this weekend or next week or whatever. I'm going to Chicago next week. And so I don't feel too great about that at all. But Jared Kramer says, Dr. J, let's go. What's going on there, Jared Kramer? I appreciate you, my friend. Sam L says, I tried to scroll. The algo said, watch the doc. I appreciate the algo for that. That's some good stuff. Jared Kramer says, it's minus 35 here currently, but we still got our deadlift session in this morning. That's what I'm saying. Deadlift on a Friday? I'll accept it. That's pretty good, man. Like, that's pretty solid. And do you do deadlifts on back day, or do you do deadlifts on leg day, or do you do deadlifts on deadlift day? Like where are you placing it in your program? I've always had a hard time figuring out where to put it. And I'm not talking about RDLs. Like, RDLs are very obviously, all hamstrings, a little bit of glutes. So that goes on leg day. I'm talking about deadlift. Whether it's conventional or sumo, like, where are you placing that in the program? I'm very curious, because I've tried both things. None of them kind of feel right, other than just putting deadlift on deadlift day. And so Old Two-Face is in the house. What's going on there, Old Two-Face? Appreciate you. Small trades often. Old Two-Face says the algo has one trade. The algo always wins. The algo is long silver. The algo is 100% long silver, and it's also short silver at the same time. So it's ready for the drop that's coming Monday, Tuesday, a couple years from now, whenever it might be. Small trades off, and Dr. Jim time. Looks like you are spared from the snow again, Dr. Jim. Yeah, it's like 81 here. I mean, it's beautiful. I mean, there's not a cloud in the sky. Like, the sun is shining. Like, my kids are outside, like, picking flowers and, like, just running through the fields and just bounding across the grass. And, like, I got the AC on. Like, I had to turn it up, actually. The AC. I was like, man, it's a little bit, I'm kind of sweating in here. We got to turn on the AC a little bit. And so, but, so you guys think you have it bad? Like, I had to turn the AC up a little bit today. It's basically the same thing. So Grumpy Mike is in the house. Appliances are not what they used to be. That's true. I repaired the ice maker in my 2014 fridge 3 times. It's broken again and will stay broken. There you go. You tell them who's boss. Like, you show them, Grumpy Mike. I wouldn't fix it either, my friend. And so just go back to the trays, man. Like, you got some trays in your garage or in the junk drawer somewhere. Like, just roll with those guys. Just fill them up under the faucet and put them in the freezer and just go old school style. Mount Go Rail in the house. Had to take the dog out this morning. Minus 25 temps. Now it is a balmy minus 11 in Minnesota. Yeah, I mean, I remember it was 2018 or 2019 in Chicago, the first polar vortex. Apparently, this is the next in the new modern day polar vortex, but it was like minus 70, minus 80, or like minus 95 with wind chill or whatever. I mean, it was bad. Like, you couldn't look out the window. Like, your eyes would get burned from the cold. And so I was like, yeah, this is not good. And so I've already lived it, man. Like, I've lived it. I've earned 81 and sunny in January. So thank you for your concern. But Anderson Homestead says Samsung fridge. It could be Samsung. Samsung does great with like TVs and stuff, but I've always heard the same thing with like fridges and appliances. Samsung is not the way to go, and neither is LG, is what I've always heard. Stephen Bivens, minus 11. I would just hibernate until spring. There you go. 100%. Night moves in the house. What's going on there, night moves? Jared, the market went to tease the bears and then go back up. That's probably true. Samuel commenting for the algo, staying for the B- humor. I appreciate you, my friend. More like a C+ today. I think that we're pushing a little harder than usual, which is causing it to go down, and it kind of has that inverse relationship. Sergio's in the house. Hey, Doc, thank you for all the great content you put out. I have found a great segment you did with Kai. Ah, yes, man. Did lots of great segments I did with Kai way back in the day. Man, we did so many great little series. We did like building blocks, and like I know building blocks was one of them. I can't think of what we titled the other one, but man, we had, I mean, if you search, I know building blocks was pretty solid. And let me tell you something about Kai. He is an outstanding researcher and just a super sharp guy. For all the shows I would do with Kai, just so you guys are clear, Kai did all that work. Like, he would do all that work. I was just the eye candy, man. I was just a sultry voice. Like, he did all the work for those shows, and so I give him so much credit, and I'm very thankful that, you know, he came on the show so many times to help us all. Like, we all learned so much by having Kai on the show. And so, yeah, I mean, if you want to go back in the archives, you know, I know you could start with From Theory to Practice building blocks, and you'll find it was like a 6 or 10 or 12-part series I think we did, and just going through some of the basic things that we talk about. But Kai had lots of great studies. I mean, we learned about like how to calculate buying power and like how to do a bunch of different things. And so yeah, so having Kai on the show was really, really awesome. I really appreciate him so much. Night moves, Florida Jim. That's right, man. Florida Jim. I'm trying to figure out if I should pack my slides for Chicago. I mean, I'm probably going to because I don't have any other shoes. And so that's essentially going to have to be the default setting. But yeah, it's going to be very, very interesting. Anderson Homestead says silver 100. That's right. I told you guys it's not going to hit 120. 100 is a foregone conclusion. I am on tape as having said it's not going to go above 130. Right? 137 is the absolute max on silver. I don't see it over 145. And so Rex Kramer says Sunshine State Gym. That's right, 100%. And so that's where I'm at, baby. Stephen Bivens, Dr. Jim, me and my frozen bottom biscuit will be headed back to Motown next week. Wish me luck. Yeah, you're going into the belly of the beast, man. Like, man, what a time to go to Detroit. I mean, you're going there right in the polar vortex. And so, man, stay safe, stay warm. And yeah, best of luck to you, my friend. Jared Kramer, let's see, talking to Night Moves. There you go. Shawshank in the house. Dr. J, is there a silver lining for SLV? Man, I don't know. I mean, as I talked about in kind of the opening Jimmy Fallon monologue to start the show, well, actually, the Jimmy Fallon monologue was kind of the Black Scholes, realized volatility, implied volatility stuff. The monologue after the monologue was about SLV. And it was, you know, I don't know that there's going to be a silver lining here. I think we're going to have to finally just pour one out for it. You know, whether we pour out a little banana daiquiri, whether we pour out a little natty light ice, like something's getting poured out for this SLV position pretty quickly. But I'm going to hang on one extra second just to see, because I have found that being patient on things like this has proven to be beneficial, in my opinion, in my experience. You may view it completely differently, and that's totally fine. That's what makes a market, as they say. And so I'm going to sit tight. We'll see what happens. But yeah, I don't know, man. Maybe it may be over. It may be all over for SLV. Joe Kramer, VIX over 12 sell options, VIX under 12 buy options. Ooh, man, you're using 12 as the reference point? Wow, that's quite a reference point. So the historical average is a very low reference point, in my opinion. The historical average for the VIX is about 16, I think, 16 or 17. And so I think normally using using that as some kind of reference might make a little bit more sense, because I mean 12 it's almost always going to be over 12. It's rarely going to be under 12. I mean, you got to go back into like 2017 type of stuff to get under 12, at least, consistently under 12. I do like the idea of maybe waiting until it's that low before you buy options, but selling options, I would maybe be a little bit pickier and choosier to some degree. Now, I recognize the fact that you want to have premium working for you. You want to have short options working for you, have some things in the hopper and have the capital allocated to some degree, probably all the time. So I recognize the fact that like right now with the VIX at 15 or 14 or whatever, you're like, hey, I'm going to sell a little bit. Like it may not be anything super crazy, but I want to get something working for me. I think that's fine. I mean, I think that's what I do myself. But in terms of like using 12 as kind of your anchor point for really going like gung ho on selling premium, I think it's a little bit low. I think maybe, kind of have a graded exposure type of thing, right? Like kind of have, if it's 15, 16, I'm looking to sell. I mean, you can even use Julia, the Unlucky Investor's Guide to Options Trading in terms of, the chart that she laid out, in that book. I can't remember what the actual markers are, but it's kind of like, the VIX is at this level. I have, X percent of capital allocated. The VIX is at another level. I have Y percent of capital allocated. And anyone who has the book, like put it in the chat so we can all benefit from that here in the final couple minutes of the show. But I think something like that probably makes sense. I like where your head's at, though, especially on the buying premium standpoint. I mean, the lower it is, the cheaper the options are going to be, and the cheaper it's going to be to take that directional shot in terms of, buying the call or buying the put, because that's what you're doing when you buy an option. Like, yeah, it can be a volatility play, of course, because if volatility increases, then that's going to help the option price and it's going to help your long option position. But generally speaking, buying calls is a bullish play, buying puts is a bearish play. You're going to get paid if you get the direction right. And so, but I appreciate you, Jerry Kramer, so much. O'Neill's in the house, or O'Neill's in the house. I'm probably saying that wrong both ways, but let's give it a shot. Hello, Dr. Jim. Hypothetically, if you had a strangle with a short call at 85 and a short put at 70 with 32 days to go, would you go inverted given the current price of SIH at 101.85? If so, at what put strike? Okay. Well, so, I just went through this, obviously, with SLV. Now, SLV, SI, still, one of them spot silver, the other one is future silver, but the same basic idea, the same basic principle still holds. And what I examined the other day, and of course, now I wish I would have done it, knowing what happened to silver, but, the rearview mirror, it's kind of like that in terms of it being pretty accurate in terms of what you should have done. When you go inverted, oftentimes you're looking to roll that untested up to the at the money strike. So for you, you've got 85 call and a 70 put. You're looking to roll the put up to maybe the 100 strike, maybe like a 102.5 strike or something like that. And so if you want to maximize the extrinsic value that you collect and, more effectively control your directional bias, that's what you would roll up to. And then you'd have to take a look at how much credit have I collected, relative to the width of the inversion and see if that makes sense. But that's usually the starting point. Now, you can roll up over and above that if you are willing to give up some extrinsic value in exchange for having a wider zone to be quote unquote right and also less directional bias. Like, with silver at 100, you could roll the put all the way up to like the 120 strike. And now I've got an 80, 120 with the stock at 100. You're basically perfectly centered at that point. And so you can remove all of your directional bias if that's what you want to do. Now, you're not going to collect as much extrinsic value at a 120 strike relative to what you would get at a 100 strike. And so it's gimmies and gotchas, as it always is, right? But the starting point for analysis is usually the at the money strike. So that's what I would do there, Arnold. And hopefully that helps you a little bit. Oh, Grumpy Mike says he bought a fridge at a garage sale. I painted in my driveway and used it until 2014. I wish I would have kept it. Yeah, those old white ones, man, they're not going anywhere. They're going to survive the Snowmageddons, the Armageddons, the Silvermageddons. They will still be around. We all know that is 100% true. Ash Fish, that's a pretty cool segment to start the show. I love this, man. I'm glad. Like, that's awesome. That's great feedback. Thank you for telling me that. I really like doing the educational pieces, and then we can kind of cut them and slice them and put them on YouTube later on over the weekend to hopefully reach some more people and just help them out. Try try to put some more information out there that helps some people. Because, I mean, this show is obviously, I mean, I'm a bit biased, but I enjoy it. I think it's valuable. But it's live trading. It's live trading. It's things that are happening. I'm commenting on things in the market. I'm commenting on things in my position. And I'm commenting on the things that you guys are commenting on. And so putting something like that out on YouTube is not necessarily going to be the best fit, I don't think, just because in terms of the evergreen nature of like uploaded pieces to YouTube, this is a lot more timely and a lot more relevant for like now and today. And so that's why, you know, at least once a week, I'm trying to kind of spin off one of those other pieces. But wow, look at the market. The market's about to be unched on the day. Wow, that's crazy. Look at silver, 102. So it didn't get to 104 by the end of the show like it looked like it was going to do. But man, I'm totally out of time. I can't believe it. Man, look at you guys. I see N1C in the house. Man, I see Edgar's in the house. iPod Touch, man, forever in the red is in the house. Donald Bloomberg is in the house. Man, I appreciate you guys so much, so very, very much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Hello, everybody. Happy Friday. Happy triple-digit silver day. Finally here for the first time in history. Longtime viewers know the only things I'm shameless. Take home the participation trophy, but it hasn't. But silver is 102.42 on the futures, up 6.31%. And my frenemy palladium, which I called marvelously and traded horribly, is up $119.30, 6.19%. Up about 50% since Thanksgiving. So they're just setting the world on fire. Now, I'm not selling any of the bullion because I don't know. I'm thinking the day comes that, I'll live like a king if I got some silver coins to trade. So yeah, I'm not touching the stuff. But it's just mayhem out there, and who knows how high it'll go. I don't have any particular. Psychologically, the triple-digit thing's important. Big round numbers, humans love those. I don't have any particular disposition about how high it's going to go. My ratio charts, as I mentioned, call for a sustained rally of precious metals versus equities. So I don't think we're anywhere near close to over with this. But it's a milestone, so we can celebrate that. And I suspect if we don't get 5,000 today, we'll have Monday or Sunday afternoon. So let us look at some charts together. It's considering how wretched Wednesday and Thursday were for the bears today is not bad. It's a bit of a mixed bag, I will say that, because we're going to start off with Intel, which is getting just clobbered. Intel has lost about a fifth of its value. That's kind of a big deal. I mean, that's, I know you can do arithmetic just like anybody else, but that's what Intel's doing now is the equivalent of like 9,000 points off the Dow. It's a big move. Although Intel's been very strong, so really all it's done is plunge to prices not seen since last week. So it's not that huge a deal, but all the same, I'll take it. A nice little slice down, although the NQ doesn't care. Intel used to be like NVIDIA. Intel used to be like the most important thing. Now it's just like, oh yeah, Intel. So the fact they're down over 17%, the NQ is up. The NQ just sort of rolled its eyes and has moved on with life. So it is up, annoyingly enough. But yeah, Intel got clobbered after earnings. SMH, the semiconductors, is down a little. Obviously, Intel's a component of that. And some other semiconductors, like I'm short Avgo and ARM, and we're getting some nice negatives on those too. But NVIDIA's up, which is a huge component, the biggest by far. So SMH is down, yes, but not by much, not even a percentage point. But again, I'll take it. I mean, honestly, after Wednesday and Thursday, I will take any red you can give me. The cubes are up. I have no position in the cubes. The only ETFs I have at all is I'm short the XME as of today, which probably is crazy, but we'll see how that goes. Is that it? I don't know. That might be all. It's just a whole hodgepodge of individual issues. But let's look at a couple of items here. Kind of in the same realm as the cubes, in the same realm as tech. At long last, it seems that these storage companies are having a little bit of selling here. These are tremendously expensive. They've had multi-triple digit runs in recent months. Seagate, down 0.5%. So it's off a little bit. I was going to get a long put position on that, but as you can understand, it's quite expensive. Volatility is crazy on that. Western Digital, WDC. I do have one put on this as of today, just because. And it's down 2.5% off of yesterday's lifetime high. And these are, exceptionally expensive stocks, but they've also been exceptionally strong stocks, as you can see. I mean, you could lay down a butter knife on the screen and it would cover all those price bars. There's very little variance from that muscly up channel right there. But you know what? I was yammering about precious metals. We've got to turn our attention to those before we move on to other things. Let's just look at bullion for a bit, look at the futures, see what's going on there. Here's gold. Spot the trend if you can. It's just green, 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 green. Every day this week, a nice green bar. We've added many hundreds of dollars this week per ounce to old gold. And as I said, I think that it's just by a tiniest fraction of a percent. It's missed the 5,000 trophy, but I think it's going to get there. Maybe it won't, just despite us all, but it seems almost inevitable. So gold is up almost $70 an ounce, and it's just it's been a sensation. And there's one of the bases that was formed, the most recent meaningful base that was formed. And I gotta say, the little Boxing Day plunge, that's just a head scratcher. Precious metals just got blown to smithereens for like a day before brushing themselves off and moving higher. Silver's the real superstar here, though. This is up 6.3%, triple digits for the first time. You're going to see a lot of headlines about that because it makes for an easy story. But again, look just how, this was the only noise in this. This is just almost an exact straight line up. It's just an uninterrupted channel lasting higher. What's going on? What on earth is going on? Why, in the span of just the past couple of months, has silver more than doubled? What is happening out there? There's something big. Is worth noting. As I said, I have a complex relationship with palladium, but I have been steadfastly bullish on this beast. It has been a great success. It is nowhere near lifetime highs. Silver's lifetime high, gold lifetime high, palladium, no, not even close. But it's having a great time getting there. So it's this was in the 80s a few months ago. And we are getting within spitting distance of 200. So palladium's been, this is PALL, not the futures. This is the ETF. Tremendous run on here. 4.8% gain, 4.6 on the day. PPLT, which is platinum, is even more eye-popping. Look at this. This is gone. This was in the 70s last spring. We're in the 200s now. It's gone up more than 200% in a matter of months. Zounds, really something else. Those ratio charts really just rang the dinner bell on all this stuff. It goes without saying that miners are enjoying this too. GDX is up over 2%. And individual miners, which I was thumbing through last night, have just been, many days, they have double-digit gains. The junior miners, GDXJ, are also up about 2.5% and a lifetime high for both of those ETFs. SIL, which is also miners but specific to silver, as the ticker symbol suggests, is up almost 3%, lifetime high. And there's other lesser traded ETFs like PSLV, SLVR, which I think is also a mining one, that are having a really good day too. But the crypto crowd's gotten kind of quiet lately, except for I think they're bots. But there's some. I don't know if you're on Twitter much like I am, but there's one guy who claims to be this Korean with an IQ of I think 276, which is just that's not even a real thing. That's like saying drug prices are down 500%. That's not real. But this guy, Mr. IQ of 276, on a daily basis pronounces that, you see, the bull market in Bitcoin started, and, I predict a huge rally tomorrow. That never happens. And no one's that dumb or no one's that shameless. It must be a bot. But I did see that they're still promoting Tom Lee's prediction that Bitcoin will be 100, I believe it was 180,000 by January 31st. So there's still time, Tom. But we ain't there yet. It'd have to double in a week to get there. But I don't think Mr. Lee will say about it after that. We'll have the February 28th prediction afterwards, I suspect. But you've seen these charts. You've seen how sensational they are. How are crypto-related companies doing? Well, we've got a couple of those to look at. I'm not going to show you a strategy again. We've beaten that horse to death. But here's BLSH. Earth's most ironic ticker symbol. So here's, this is bullish. It's the name of the company. They are all about crypto. And I believe this is a lifetime low. So there's a lifetime low in BLSH, having fallen from the triple digits down to, what's it at now? 30 something. And then another one is this, the Trump boys doing this one, American Bitcoin, ABTC, lifetime low on this one. And these are both rather young issues. So this came out, it's around $15 to $16, and it's $1 something right now. So yeah, not so spiffy. Yeah, I'd rather have stuff I can hold on to and jingle around in my pocket and so forth. So crypto is really lost the narrative, I guess they might say. Over in Shortland, I'm still, constant as the Northern Star. I've got a bunch of short positions going. I don't think I got stopped out of one today, but I got right back in just to be sassy. AMD, the indefatigable stock. But at least I've stopped trading Micron. But AMD, I got stopped out. That was the only one, and I made an obscene gesture at the screen and got right back in again. So I'm still in that one. But here's a few others, odds and ends that I'm short. One is ARM Holdings, ARM, down about 3.5% on this. Open strong, it's trading near its low of the day right now. Broadcom, which naturally symbols AVGO. Sounds like Broadcom, doesn't it? So AVGO is down over 2%. And it's completed a cute little top right there, which I have not bothered marking. BRKR, which is down 4.2%. Bruker. Caterpillar, I shorted this yesterday. Yeah. And this one's down 3.5% plus. So that's appreciated. There's also one, this has been very squirrely, but it might be behaving itself. This is Floor and Decor, FND. And this one's down about 1.5%. It pushed into its own distribution top, but we're going to give it a chance. It's a small position. RCL, Royal Caribbean, is massively unchanged, as Mr. Sosnoff used to say. But as long as it stays under that price gap, I'm going to stick with it. CSGP, which is CoStar Group, this is down about 0.5%. And this is slip sliding away over the broad haul. Dell had been kind of feisty yesterday, but I'm glad to report that it's stopped that nonsense. It's down almost 2% today. Yeah, yesterday's green bar was a little bit troublesome, but on the whole, that top is still intact. I don't know what yesterday was all about, but it didn't cause any lasting harm. And one last one here, a pretty new one that we've talked about. Supergroup, SGHC, is down over 3%. And I might be adding to this one because I like the way this is breaking down. We're getting near some new lows for at least a year. And so, yeah, probably add some more to that before the weekend is upon us. In the 90 seconds we have left, a couple of just things to wrap up the chit chat here. VIX has stabilized, it seems, around about 15. VIX plunged all week, as you can see. We started off very strong on Tuesday, so we went from the low 20s and it lost about a quarter of its value. So enormous plunge on Wednesday when Trump tacoed out, and then a continuation of the post-taco fumes on Thursday and today. We're settling down because this is about as low as things tend to go. And I will say, just to wrap things up here, the spider, I talked about kind of the architectural, mechanical, structural change, that's still intact. I had said we gotta go down tomorrow. It'll do. I'll accept it. There's been nothing violated. There's been no real harm done. So this works. So far, so good. The diamonds are weaker still. Those are off almost 1%. And we've been just hanging out for weeks now in this realm. But the really interesting thing is, you may recall yesterday I made a pitch to the market gods to give me an island reversal pattern, and they did. Barely, but they did. So our little doji friend here is our island reversal. And so we've got flanking items right there where the highs for Wednesday and today are lower than yesterday's low. And that's what I hoped for. So yeah, thanks market gods. I appreciate you listening. So I'm out of time, and I will say goodbye and see you here on Monday. Hope you're doing okay. And I hope nothing crazy happens this weekend, because I think we're all kind of tired. So see you on Monday, bright-eyed, bushy-tailed, and take care. Bye-bye.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was not a
awesome.
paid, you're not getting paid
Right.
for this advertisement.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we're back. We're here to wind down the trading day. Final 30 minutes of the trading week. We're here for the last call. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, markets really haven't changed all that much since you and I last saw each other about an hour ago. Barely a million S&P 500 contracts traded here on our screen. We just crossed the million contract mark, down 5 points, 69.40 here, off by barely 0.1%. The NASDAQ, a touch firmer, just under 0.2% higher. Russell 2000, which has been a real leader this year. Small caps have outperformed their mega cap peers in 2026. Not the case today, down nearly 2%, led lower by the banks, by the home builders. Rough session for KRE in particular, your worst performing sector ETF, now off nearly 5%. In the world of metals, though, because that's far more interesting than whatever meandering is going on around in bonds, gold, depending upon where you look, you're looking at a $5,000 an ounce contract. GCJ6 now, which is the preload on the platform here, trading at $5,015, another 1.34%. Silver prices in the March expiry up now 6.2%, $102.34 an ounce. Copper likewise right there with them, up another 2.6%, $5.92. We could talk about energy a little bit here. Oil prices are up over 3% now as we head into a weekend, a day after President Trump warns that an armada is heading towards Iran. And we know by history standards, President Trump, when he does military action, it tends to be on the weekend. We do have that storm coming in across the U.S. Natural gas prices remain firm, although the several days in a row of 25% gains, that seems to have petered out. IVR is still north of 100. You can go to the currency market, Ilya, where we find ourselves looking at a Japanese yen, where intervention seems to be afoot. Both the BOJ overnight as well as the Federal Reserve today have been rumored to have been seeking quotes and operating in the dollar-yen market, so potential yen intervention watch as well through the weekend. Oh boy, lots of fun things. Next week, of course, tons of earnings due out. Some of the major tech names right around the corner, also non-tech names like Caterpillar. We have the Fed meeting on Wednesday. Ilya, let's just wind down into the weekend here. What is the most interesting market move here on the screen? Is it the gold above 5,000, the Russell down 2%, the yen intervention?
Well, I think one of the most interesting things here is the Russell seems to be a reflection of what's going on in oil, whereas the other indexes pointedly are not. If you look at what's going on here today, when you overlay crude oil with the price action in stocks, what you see is that everything stops its risk on recovery right toward the end of the day yesterday. Russell, S&P 500, NASDAQ, they all kind of line up with the bottom in crude oil prices. And once crude oil prices start to build, stocks stop rallying. Now, in the case of the S&P 500 and the NASDAQ, they just meander sideways. They haven't gone anywhere since basically things closed up yesterday. But when you look at what's going on with the Russell, when crude really starts to make that secondary push early in the morning, going into the Friday session, this is early Europe, 7:30 a.m. GMT. So going into the London trading open before crude has the big leg that it takes through European markets and into the US, that's where Russell futures start to crack, exactly in that spot. And where the S&P 500 and the NASDAQ are holding in the same range, the Russell is the one that gets smacked. And so it seems like there is a sensitivity here around interest rates because, of course, KRE is very much an interest rate story. Russell is very much a KRE story. And interest rates increasingly are a function of this breakout in crude oil. And as we've argued before, certainly I have, this is not a story about will we or won't we intervene in Iran as such. It's a story about, certainly that could be a catalyst, that could be an amplifier. We've seen that already when there was concern about maybe we were going to go last week. Instead, this is more a story of we have a structural breakout in crude oil, and that is structurally inflationary. Because whatever happens in Iran, it isn't going to be status quo. I think if you study the history of revolutions, popular uprisings, even in Iran itself in 1979, they don't happen in one explosive conflagration. It doesn't happen all in a day. It doesn't happen all in one uprising. I mean, if we think about even the Russian Revolution, it wasn't one revolution. It was two. And so there, when you look at this whole thing, you go, okay, well, it's so bad in Iran for the status quo that the military won't even come and suppress the protests. The IRGC has to do it. The people have lost thousands to this crackdown. The administration had to shut down internet for the entire country using Chinese technology, by the way, that they pioneered for spying on the citizenry on the mainland. So this whole thing is clearly shifting to something, whether we intervene or not, that isn't status quo. Events are taking on their own momentum. And so you put it all together and you go, well, we're squeezing the shadow tanker fleet. We've apprehended 6 already, and ostensibly we're on the hunt for more. Maybe the Europeans won't have hard feelings and let us keep using their bases and bases we have in Europe to keep stalking these shadow fleet tankers, despite the fact that we tried to bully them around Greenland. And with all of that, the Venezuela situation and Iran teetering leaves China without its cheap supplies and makes it go out into the open market and tap areas where they hadn't tapped as much before. Their import mix includes Saudi, includes Iraq, includes the rest of the Gulf, includes Brazil. But if they have to substitute all of the illicit supplies, they have to tap those other sources more, forcing them into more of an expenditure of their inventories and at market rates. That's an inflation story. It's an interest rate story. It's a KRE story. It's a Russell story. And your sound.
A little bit of everything there, Ilya, for this oil knock through. I mean, the jumping commodity prices across the board, I think, is understated for the start of the year. If it's natural gas, if it's crude oil, if it's gold, silver, copper, there's probably going to be an inflationary impulse there. One of my favorite charts, going back, looking at some of the commodity tracking ETFs, and one of the reasons why I'm been so optimistic on commodities here for 2026 so far. This is DBC, the Deutsche Bank Commodity Index Tracking Fund, on a weekly time frame.
Pretty good.
breaking of a downtrend, nice little triangle breakout here. DJP, which has a little bit more weighting towards the precious metals, towards the metals, less energy. This is in at a new all-time high, and I love things that go bottom left to top right that sit at 52-week highs. So another good day for gold, another good day for silver. Maybe buy the rumor, sell the news. If the oil vol expansion, the IVRs are back in the 40s, is a precursor to what could be another U.S. engagement in Iran. We saw this in June of last year. So war trade-ish kind of conditions today. But it's those rate-sensitive things that have really taken it on the chin here. The home builders, likewise, down 1.75%. They're not having a good session. We could go over to telecom. Those, likewise, down a touch, 1.5%. They're closing out a new all-time high yesterday. Ilya, next week, we know we have the Fed, but it's also a big week for earnings coming up. Thus far, we've had about 13% of S&P 500 companies having reported their Q4 results, according to FactSet. According to this report they just put out, 75% of those have delivered positive earnings surprises. 69% have beat revenue expectations. While respectable, both of these ratios are below their respective 5 and 10-year averages, indicating that while companies are still topping forecasts, the strength of those beats is actually a little softer than typical. In terms of the quarterly growth rate, the blended year-over-year earnings growth rate for Q4 stands at 8.2%, which would mark the 10th consecutive quarter of earnings growth for the S&P 500. Revenue sits at 7.8%, which if finalized would represent the 21st straight quarter of revenue expansion, which is good. But I think if you were to read this report, or you look at the bottom line here, having just skimmed through it while you were speaking, guidance from companies reporting so far shows a mix of expectations for Q1, with more companies issuing negative EPS outlooks than positive ones. Although this pattern remains relatively in line with historical averages, the forward month 12 PE ratio for the S&P now sits at 22.1, which is above both the 5 and 10-year averages, which suggests that markets are pricing in continued earnings strength, but at obviously elevated valuations here. So when we go into next week's earnings, it's all of the big tech ones, so to speak, and it really is all about the second half of the week. Monday, Tuesday, you're not really seeing much of anything. Tuesday, United Health, RTX, Boeing, fine. But Wednesday, we get into Microsoft, we get into Meta, we get into Tesla. If we know that the Fed isn't going to be cutting rates next week, and we are relatively priced for no rate cuts, perhaps now through June.
Yeah.
Isn't there a strong argument to be made that the AI results, these earning results from the companies like the Meta, the Microsoft, the Tesla, these matter more on Wednesday next week than the Fed?
That hasn't been the story. The last time we got results for all of these names was in October, right around that Fed policy announcement that put in the top on the S&P 500 and the NASDAQ, and we've yet to recover those peaks, and the NASDAQ has been soggier than the S&P. So the story has been earnings were good in the third quarter. Tech earnings were especially good. There's no question. 13%-ish earnings growth for the S&P 500, 27% for tech. Did that give the NASDAQ any reason to outperform when clearly any kind of sort of classic CFA, if you will, sir, you have the designation, type of an analysis would say, oh, the fundamentals here are tremendous. Yeah, except the market doesn't care. What it cares about, seemingly, is rates. And and the reason it seems to care about rates isn't even growthy, because the growth picture is fine. It still wants the rate cuts. It still wants more of them than the Fed is able to justify, because the Fed has to live in a world of economic data and say, well, why in the world would we be cutting aggressively now? We have a train of rate cuts, 100 basis points worth from 2024, the end of that year, which takes between 12 to 18 months to work its way into the markets. They should be arriving right around now. We have another train of rate cuts that we just did, 75 more basis points. So there's almost 200 basis points of stimulus here that are going to start to trickle in between now and going forward. The economy is doing great. There's a fiscal stimulus afoot, so it'll be doing even better ostensibly because all of those tax cuts, basically 2 years of tax cuts in one go as a function of the big, beautiful bill. Interesting name. I don't know what else to call it. I haven't come up with a pithy enough name not to sound too venomous. But when you look at this thing and that thing together, there's a policy rocket ship behind markets here, and the economy is already doing well. How come we can't make higher highs since October? It's because the markets don't care about these things. They want their safety blanket because for the past 3-4 weeks, every week there's a crisis. There's Maduro. There's attacking the Fed. There's maybe attacking Iran. There's shaking down Europe over Greenland. This is why the markets want their rate cuts. It's not because they know what the problem is. It's because they don't.
So yeah, I don't think that the Fed meeting this coming Wednesday is going to be that big of a deal. I'm going to put my chips on the fact that the earnings results matter more than the Fed meeting. Production team, big deal. We should go to the big deal promo. I just said the magic words. Hey, did you know now through March 31st? It's a pretty big deal. 4% cash match up to $10,000. Yes, Ilya, if people are looking to transfer an account, they're looking to start trading with us. They've been listening, they've been watching, they've been waiting for a reason to make the jump. This is as good of a reason as ever. I'd encourage people to go look at our competitors and various other brokers out there and see what kind of offers they have here at the start of the year. So now through March 31st, tastytrade.com/big deal, 4% cash match up to $10,000. Tastytrade.com.
We can't have this deal, so let us live vicariously through you.
We are not allowed. I know that you tried through your friend Philia Divac, but they didn't.
He has since moved back to the city of San Francisco.
Okay, Ilya. Next week, one of the companies that we have up. We can go back to the charts, gentlemen. One of the companies that we have up for earnings is Tesla. Tesla to me is one of these fascinating stories where we probably know already that the earnings are going to be not so great, given the news flow around the company. They're laying off thousands of people at their gigafactory in Berlin. We know that the brand is in the tank. We've seen that the sales are blah, 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 blah. But the market just doesn't really care about those. It's thinking more about the AI future, it seems like. And the fact that it's completely funded in-house by Elon Musk, it's not really relying on a stream of outside capital the way that the open AI flywheel is necessarily. I'm still holding my short put spread here, Ilya. The 7.6 IVR isn't exactly fantastic, but I'm at 28 DTE. And if we're operating around that typical 45 in, 21 out, I do like the structure in this market where the uptrend off the lows that we have going back to last April when Tim Walsh was kind enough to tell us that it was a bad time to be long Tesla, which if you ignored him, you've doubled your money since then. But that trend line, the Walsh trend line from the lows in April that we have here in August, again here in November, that held up over the past several days here in January now. And that's a pretty significant trend line. So as this triangle continues to winnow in and consolidate in the spring coils, having short put spreads against this trend line effectively, saying that we're going to hold it, I'm okay with that. I'm comfortable with that because this is a market that feels like sentiment has already been so negative. I mean, if we get bad news, we know it's there. Mm-hmm. Anything better than bad news is gravy as far as I'm concerned. And I think a lot of people feel the same way.
Yeah. I mean, I think when you look at this chart, nothing in the world tells you that this shouldn't continue. It's a bit of a shorter term type of a setup for me because you have that level beckoning there, that sort of double top-ish kind of a reference point right below 500 that you have there as a horizontal line. And you're coming off a rising support line that increasingly squeezes price action. Now, that doesn't make this bad risk reward if you're just getting it. In fact, it doesn't look like bad risk reward at all. It looks like fairly decent risk reward, as a matter of fact. It's just a trade that you'd expect to work relatively quickly because there's not that much ground to cover between where we are here and that next level. So if you're going to be a buyer here, I'm not an individual stock names kind of a trader most of the time. I look at macro forces, and those can absolutely get ignored by individual names where there are smaller stories and you really have to be paying attention to what those are. I think the risk reward here looks solid. I think you just have to be nimble enough to think, okay, if we get to 500, I need to be watching this thing like a hawk, because either it breaks or it doesn't. And if it doesn't, I need to be out in a hurry.
And with the IVR of 7.8, right? Next week's move is about $26. So we're talking about 5%, a little bit more than 5% of that neighborhood. The short put spread that I'm working with at 28 DTE, theoretically, that does mean, at least for around the earnings report, we should stay above the above my strikes here, which is what I want. I just think this thing just needs to not go down any further. Whether or not it rallies off these levels is a different story. I prefer to be with the short put spread, because if we get the vol crush and the market doesn't go anywhere, better to have long delta in that regard than long out of the money calls where maybe the market moves up, but all of a sudden the vol crush happens and these things expire worthless or not nearly as much as I was setting aside in the required capital. Other than that, Ilya, I'm thinking about what's going to happen going into next week for me. Bonds are a mess, so I don't really even want to pay attention to that. The metals still look really good, of course. One of the questions that I've seen a lot the past 2 days is, how do you stay long? It's a good question. Let's be ticker agnostic here. What about this chart says get short is my first question. I think we need to work backwards from things like that. If you're going to be a momentum technical person, we say stay mechanical. Stay mechanical doesn't mean just staying within your 45 in, 21 out system. If you have a process and a way in which you operate in the market, if you adhere to a certain strategy, when those boxes are checked, you pull the lever, right? You execute. And so as long as the momentum remains here, there's really no reason, in my view, to just arbitrarily say 5K is going to be the end of it, 100 is going to be the end of it. There are legitimate economic reasons, Ilya, for silver, for example. You get up into the 120s, 130s, you destroy demand. A lot of companies become profitless. The industrial demand for silver itself collapses because copper becomes a much more viable substitute. And the actual forces of physics start to kick in a little bit more rather than whatever speculative flows are pushing us here and now. But fair value for these things, who can ascertain that? Again, just the exercise. I encourage people to do the research themselves here, but look up how much it costs to mine the gold, to get out of the ground, to transport it, to pay the people who are doing that work. It's closer to like $1,500 an ounce right now. So anything north of $1,500 is not based on its economic value. It's based on the imputed value of what we, society, humanity, think it is. So what's the material difference between 5,000 and 5,200 or 5,500 or 4,500? The recognition here, though, is that gold and silver don't move like the other typical assets like equities do. If you're trading an Apple or a Tesla or an NVIDIA and you're thinking about selling the vol, gold and silver for the last several years have had that contemporaneous relationship where the expansion in volatility has been a precursor and, well, it's been contemporaneous with rising prices. So going into the end of this week, Ilya, seeing gold vol jump as prices are settling into a new all-time high, seeing silver prices jump as vol is settling into highs again. The structure of these markets that has carried us here the past few weeks, as ridiculous as some of the prices we're seeing on the screen seem, the momentum's there. And so provided pullbacks, got to get long as far as I'm concerned.
Yeah, I mean, for me, it's just a matter of where I want to roll. I'm not in silver. I'm in gold. And this is a speculative instrument much more so than silver. There's really no industrial component to this story. It's really just about people's assessment of the uncertainty environment. And if we look at the way that gold has rallied, it hasn't really had a major sell-off. It rallies, then stalls for extended periods of time, then rallies again. In this version of it, of course, we've had gold sell-offs before. I'm certainly not speaking about the history of gold or its nature as an asset. It has absolutely had significant sell-offs, certainly a big one in 2011, meaningful one in 2022. In fact, gold was very pointedly on a downtrend from, let's call it August 2011 all the way to December 2015. So gold can absolutely trend down. But that has not been what this has looked like. Ever since gold found a bottom sometime around 2022, the end there, after the Fed's rate hike cycle ran its course, the story has been rally, then digestion, then rally, then digestion, then rally, then digestion. The most recent digestion was the 4-month stretch last year between April and August, not surprisingly. And then, of course, this aggressive rally. So in this environment, I'm not looking to fade anything. I'm looking for rolling my futures at the most advantageous rate that I can find. And so
can I point something out here about silver? Mm-hmm. Silver at this very minute is 22.39% above its 1-month moving average, that yellow line. The last time that silver was 22.39% above its 1-month moving average was on August 10th, August 6th, 2020. August 6th, 2020. I think we just got to go for a walk in the park here. Why I feel it's a little extended, why I think we're due for a little bit of a pullback. August 6th, 2020 is when the silver rally starts to die. It's going to be hard to believe. I'm going to go to a weekly time frame just to zip this up and make it a little bit quicker. But here we are, August 6th, 2020. That's this week. That's the last time that silver was this far removed from its 1-month moving average, 22.39%, and that's exactly where we are right now. I'm not saying that the rally's done. I'm just saying it feels a little long in the tooth. And it's long in the tooth by any historical stretch. If you go into the 2010s, silver gets to a peak of about 16.5% above its 1 month. If you go to 2006, it's about 19.5% above its 1 month. The last time you see overbought readings like this in the late 90s and 70s. So this is just really unusual territory. And maybe it's an economic regime change. Maybe it's a financial regime change. So we can't use any of these prior data points or, oh my gosh, just looking at this chart. These prior data points.
What? As you're talking here, I thought to myself, you know what? We've got just a couple minutes before the week closes. I'm just going to roll my futures right here. And so I just took off my G6 gold contracts. It was a tremendously successful idea.
They got to raise margins again, right? With this move today, this week,
they might
raise margins again.
They might, and so I already rolled out, and I rolled out half of the position. So I didn't put all of it back on. I put half of it back on into the J6 contract, and we'll see if it takes some sort of a crazy move here into the start of next week. Let's say they raise margins and we don't attack Iran. Might be a little bit of a washout, and then I can average in lower. But if something does happen, then we'll get a flyer, and then I'll average in higher.
And the last time they raised margins was when? Right after Christmas, when this was trading when silver was trading in the 70s. Yeah. Okay. The clearinghouses will raise margin when prices go up and volatility increases. It's not because there's a silver conspiracy. I hate seeing that. It's when people are blaming the conspiracies for why they're not making money in the market, they're never going to fix the problem for why they're not making money because they're assigning outside blame. I digress.
There's frankly no excuse, honestly, to be poorly informed in the year 2026. Not only do you have LLMs talking to you, but there's all the news in the world. Do your reading.
We got a closing bell here, 69.45 on ES. It's a flat day for the S&P 500. Literally no change right now. NASDAQ up 0.3%. The Russell is your loser to the downside, 1.9. Gold and silver, the big story is gold crossing through $5,000 an ounce in the J6 contract. Silver, March expiry, up near 103, 102.75 right now. Crude oil up 3%. In terms of your top winners and losers here today as we go out the door, yes, indeed. What is our top winner today in terms of high options volume? TMC, Metals Group. Other than that, silver near the top of the heap. Guys, light volume, volatility up a nickel. up a quarter, I should say. Let's see what happens this weekend. You and I are going to be back Sunday, though, Ilya, with
Yes,
our
sir.
new formatted first call. So be sure to tune in for that. 5:55 Eastern, 4:55 Central here on Tasty Live. So we'll call it a 48, 49, almost 50-hour break here on the network. So in those 50 hours, get ready for the storm. Stay safe. Don't go driving. If you're not in the Northeast, you're in the South. Just trust me on this as a Northerner. Don't go out in the snow. Stay warm. Stay safe. We'll see everyone on Sunday for the Futures Market Open.
Good weekend, everybody.